Good morning, everyone. So in the last session, we completed up to time of supply, and let's proceed to exemptions under GST, segment 5, page number 40. So in these exemptions, already some of the exemptions are there, which is covered under the RCM discussion. So these are the other exemptions that we have, and in that, even that discussion also will be coming. Agriculture related services is the first sector. In that, we have only 5 exemptions. Any service in relation to agriculture or agricultural produce is exempted. So I am providing some services that is in relation to agriculture or that is in relation to agricultural produce. Now whatever money that I receive will be exempted. What is the meaning of agriculture? Agriculture means the activity, cultivation of plants as well as rearing of life forms of animals other than horses. For what purpose? For food, fiber, fuel, raw material or any other similar produce. So therefore sericulture will come, and even fishing will come, but horses will not be coming. So because horses is no way connected to the agriculture, that's why except the rearing of horses. And for what purpose? Food. So food in the sense poultry, etc. Fiber, that is sericulture. Fuel, cattle farming. Raw material, honeybee farming or any other similar products. Agricultural produce means the primary produce out of agriculture on which no processing is done or some other processing as is usually done by a cultivator or producer, so which does not alter its essential characteristics but makes it marketable for the primary market. So which means that, so whatever we get out of the agricultural produce, so that is agricultural produce. Whereas if you process it, it will not become agricultural produce. What if the process does not alter the essential characteristics? Then still it is agricultural produce. Example, tender coconut is agricultural produce, and even coconut is also agricultural produce. Copra is also agricultural produce. These are the process which is usually done by the cultivator, which does not alter its essential characteristics. Due to that reason, it will be coming under agricultural produce. But using the coconut, if you extract the coconut oil or coconut milk, etc., that will not be coming under agricultural produce because that will be processed. Okay, so then paddy is an agricultural produce because paddy is the primary produce out of agriculture, whereas rice is processed, but this processing from paddy to rice is not usually done by the cultivator. So it will be done by the rice mills, and that will not be coming under agricultural produce. But as rice is not an agricultural produce, in relation to rice, few activities are exempted. What are they? Loading, unloading, packing, storage or warehousing is exempted. Only 5 activities: loading, unloading, packing, 4. So storage or warehousing, both are same. These 4 activities in relation to rice is only exempted. And why? This rice is not separately given because rice is not an agricultural produce. What about these activities in relation to agricultural produce? Anyhow, it is covered in the first point itself. Any service in relation to agricultural produce, there it will be covered. For example, storage and warehousing of fruits and vegetables, it's covered in the first point itself. Storage and warehousing of paddy, it's covered in the first point itself. So like that, all these activities in relation to agricultural produce is already covered in the first point. Then what is the importance of the second point? The second point is only for the rice, as rice is not an agricultural produce. And then artificial insemination of livestock is exempted. Artificial insemination means through an artificial process. So whenever we make the reproduction, for that some injections and all will be given to the cattle, etc. So that artificial insemination is not directly in relation to agriculture. Due to that reason, separately it has been given. Service by way of storage or warehousing of cereals and pulses. Sir, what about other goods? See, storage or warehousing of agricultural produce is already covered in the first point. That's what I said. Warehousing of fruits, vegetables and other agricultural produce is covered in one above, therefore it is exempted. So this cereals and pulses is not agricultural produce. Due to that reason, separately they have given exemption for this. But what if it is agricultural produce, like a whole grain like rajma, channa, etc. is an agricultural produce? It's already covered in the first point. What if it is dal, which is processed? So from the whole grain we remove the husk and we process it. So that dals is not agricultural produce, even though it is not agricultural produce, but its storage and warehousing is exempted. Then warehousing of minor forest produce. Warehousing of minor forest produce. Again, minor forest produce is not agricultural produce because it is available in the forest, and this like bamboo, honey or lax, there are some goods like shikakai. These are all some Ayurvedic herbs. So which will not be called as agricultural produce, but its storage is exempted. So therefore, there are three agricultural, like not an agricultural produce. Rice is not an agricultural produce. Cereals and pulses is not agricultural produce. Minor forest produce is not agricultural produce, but its storage or warehousing is exempted. So these are the only exemptions that we have in relation to agriculture sector. And is there anything that is taxable? Yes. Suppose if the activity is not in relation to agriculture, then it will be taxable. So what are the examples that will be coming in the first point? So farmer education and training. Farmer education and training is in relation to agriculture. Definitely it will be exempted. Seed testing, soil testing, renting of agro machinery, these are all in relation to agricultural produce. But processing of tomato ketchup. So tomatoes we take and we get the tomato ketchup. Won't it come under service in relation to agricultural produce? No. See the output. Output is what? Tomato ketchup. That is not an agricultural produce. Due to that reason, this processing of tomato ketchup will not come under agricultural activity. So it is taxable. Okay. Then next. Second sector is insurance services. In case of insurance services, we have few exemptions. Service of life insurance business provided by way of annuity under National Pension System. So remember NPS trust. If NPS trust is collecting any amount towards the insurance, that amount collected by them will be exempted. Then group life insurance funds. There are 5 group life insurance funds, that is Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces. So these 5 group insurance funds are only exempted. Basically the objective of group insurance fund is that, so there will be some group of people and they will be contributing every month some amount towards the insurance, and if there is anything that happens to the member of that group, to their family members, a monetary support will be made out of that group insurance fund. But not all group insurance funds are exempted. Only 5 group insurance funds are exempted, that is Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces. Then service of general insurance business provided under government schemes. So general insurance, there is a general insurance company which is providing general insurance services. So that can be any insurance company. It can be like, private company, or it can be a government enterprise. There is an insurance company. That insurance company is providing general insurance services, but that general insurance scheme is notified by government. Under that scheme notified by government, if they receive any premium, that premium collected will be exempted. So these general insurance which are notified schemes under government schemes. What are those government notified schemes? Basically these are related to agriculture and farmers, below poverty line, women. So then that will be exempted. Example, seed crop insurance, then coconut palm insurance, hut insurance. These are all some examples wherein the premium collected will be exempted. Apart from that, extra one more point you remember, Nirmaya health insurance. Nirmaya health insurance is also exempted. Then fourth point, there is an insurance company. That insurance company can be government owned or a private one. They are providing now life insurance services. That life insurance schemes are notified by government. Now whatever premium that is being collected, that will be exempted. So what is that government notified schemes? Usually it ends with the word Yojana. So Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Vayavandhan Yojana, Pradhan Mantri Jandan Yojana. These are some Yojana. So if you see the word Yojana, definitely it's a government scheme. So whatever premium that is being collected, that will be exempted. See, yes, there are some big list of schemes, but there is no point in remembering. So for the sake of this one, just one point, you don't have to remember that and all. So definitely it will be a notified scheme only that will be given in the question, don't worry. And then micro life insurance having the maximum sum assured as 2 lakh rupees. Suppose if the micro life insurance is given, but the sum assured is 2,50,000, whether the premium will be taxable or exempted, that premium will be taxable. So two conditions here. First, the insurance should be a micro life insurance. Micro life insurance means a small amount of premium will be involved, and the maximum sum assured should be 2 lakhs. Then the premium collected will be exempted. Then insurance services provided to government. So any insurance, let it be life insurance or general insurance services provided to government. So government will be taking insurance from the insurance companies with respect to its employees or its plant and machinery or buildings, etc. So in that case, government will pay the premium. So this is basically services provided to government, that is insurance service provided to government. Whatever premium that is collected from the government, the premium will be exempted. Then reinsurance of any exempted insurance is also exempted. For example, we are providing insurance to government for which we collect the premium from the government, that premium is exempted. Now our insurance company takes insurance with another insurance company and we pay the premium. This concept is known as reinsurance. So as the main insurance is exempted, its reinsurance is also exempted. Then services provided by business facilitator or business correspondent to insurance company in rural area. We discussed that in insurance agent services to insurance company. So whatever business facilitator or business correspondent for insurance company working in rural area, the commission earned by them will be exempted. So these are the 7 activities that we have in relation to insurance services. Then next, banking and other financial services. In case of banking and other financial services, we have various exemptions. In that the first exemption is there is a transaction involving money without consideration. We already know that it is neither goods nor services, because money is excluded from the definition of both goods and services. So but what if there is a transaction in money for a separate consideration? Transaction in money for a separate consideration is treated as service. Now we need to check whether the consideration is represented by way of interest or discount on loans or advances, then that will be exempted. If it is any other consideration, that will be taxable. Any other consideration means what? Interest involved on credit cards, commission, debit card charges, credit card charges, minimum balance, non-maintenance charges, annual maintenance charges, like that, all these charges will be taxable. So suppose if the transaction in money is without consideration, neither goods nor services. If it is for a consideration, such transaction is treated as service, and the consideration is interest or discount, then it is exempted. If the consideration is any other consideration including interest involved in credit cards, that will be taxable under FCM. Then next, second point, there is a banking company which is providing services to basic savings deposit account holders under Pradhan Mantri Jan Dhan Yojana. So under PMJDY scheme, some people will be allowed to open nil balance accounts. So these savings accounts holders may receive some services from the bank, for which bank will collect some charges from them. That charges collected from them will be exempted. Interest anyhow exempted. Even other charges collected from these savings account holders is exempted. What if it is a normal savings account holder? The charges collected from them will be taxable. Only if it is basic savings deposit account holders under PMJDY scheme, it is exempted. Then third point, forex transactions, that is money changing one currency to another currency. If the foreign exchange transaction takes place between banks or between forex dealers or between banks and forex dealers, whatever consideration that is involved will be exempted. Suppose if the transaction of money changing or foreign exchange is happening between bank or forex dealer and the customer, so whatever charges that is being collected will be taxable. And whatever FCM, RCM, we already learned what are the list of services which are covered under RCM. So here you don't focus on whether it will be FCM or RCM, because already you know what are the RCM. So therefore whatever we are seeing as taxable, if it is not covered under RCM, it will be by default FCM. Then next, fourth point, services by an acquiring bank. Basically this acquiring bank, what they will do is that acquiring bank will do the settlement of the transactions between the vendors and the purchasers. So purchaser, when they are using the credit card or debit card or any card, so money will be debited from their account and it will be given to the vendor account, and one bank will be doing this. That bank will be called as acquiring bank. That acquiring bank, as they do the settlement, they will be collecting some processing charges, processing fees. This processing fees is not exempted. Processing fee will be there, but GST on processing fees will be exempted if the transaction amount is up to 2000 rupees. Suppose if you are using the card up to 2000 rupees, the processing fee will be there, but on that processing fee there is no GST. What if it is a UPI transaction? If it is a UPI transaction, already we know that there is an incentive which is paid by the Ministry of Information and Electronics, so to the acquiring bank. Due to that reason, there won't be any processing charges, and these incentive, whatever they are collecting, there won't be any GST on that, because this incentive will be treated like subsidy from government. So there is no GST on that. But mainly this particular exemption is given in case of card payments only, not in case of online payments. So physically card when we are using, then only it will be called as a card payment. Online when you are using, it will not be called as card payment, it will be authentication. So authentication is through card, but does not mean we are making payment through card. So therefore this exemption is only in case of card, credit card, debit card, charge card or any other payment card service. What you need to remember is that GST on processing charges for a transaction up to 2000 rupees is exempted. Then fifth point, there is an intermediary. This intermediary is located in multi-service SCZ. This multi-service SCZ, we have only one multi-service SCZ, that is Gift City in Gujarat. So in that place, when there is a person who is providing services to their customers outside India, so intermediary is in India, they are providing services to their customers outside India in relation to foreign currency. Now it won't become export of services. Why it won't become export of service? Because in case of intermediary services, the place of supply as per section 13 will be location of supplier. In order to become export of service, 5 conditions should be satisfied. Supplier should be in India, recipient should be outside India, consideration should be in convertible foreign exchange, place of supply should be outside India. But here place of supply will become India. Therefore it won't become export of service. But here also there involves foreign exchange proceeds. Due to that reason they have given this as an exemption. So as it becomes export of services, anyhow the burden will become zero. But here it is not export of service, that's why they brought it under exemption. What you need to remember is that there is an intermediary who is located in multi-service SCZ with the IFSC status. They are providing services to their customers outside India, for which they are collecting some consideration. That consideration collected by them will be exempted. That is this. So then health services, in case of health services, we have only 2 exemptions at present. So number 1, health services provided by a clinical establishment, authorized medical practitioner or paramedics, including ambulance service, is exempted. This is the first exemption. Second exemption is healthcare service in relation to animals or birds. So previously we had some more exemptions like biomedical waste treatment operator, now it is taxable. And cord blood banks, one exemption was there, that is also now taxable. Only these 2 exemptions are there. One is related to human beings, another is related to animals or birds. In that first one, healthcare services means what? Healthcare services means pre-treatment, that is diagnosis. Diagnosis includes X-ray, scanning, etc. And treatment, so carrying out any treatment including surgery, operation. Post-treatment, that is keeping the patient in observation for the purpose of providing the care till the time the person is discharged, the patient is discharged for any disease, illness, injury, pregnancy in any recognized system of medicine. Any recognized system of medicine, there are various recognized system of medicines like allopathy, homeopathy, Siddha, Unani, Ayurvedic, like that, in any recognized system of medicine, including transportation of patient in ambulance. So patient in ambulance, whether it is part of healthcare or not part of healthcare, here separately also ambulance service is given, as a part of healthcare also ambulance service is given. So whether the transportation of patient is a part of healthcare, means for providing any treatment, or not as a part of healthcare, so normally also it will be exempted. But only transportation of patient in ambulance is exempted. Transportation of any other passenger in ambulance will become taxable. Then next, healthcare services does not include cosmetic surgery, plastic surgery and hair transplantation, because these 3 will not come under healthcare services. However, if these 3 are carried out to restore the anatomy of body parts affected due to congenital defects means by birth, or developmental abnormalities during the growth stage, or any injury or trauma, so then in that case, whatever cosmetic surgery, plastic surgery or hair transplantation that is being done will come under healthcare services, and that will be exempted. So this healthcare services should be by a clinical establishment. Clinical establishment means a place where healthcare service is provided. That can be nursing home or a clinic or a hospital or any other place. Or authorized medical practitioner. Medical practitioner here is a person who is having minimum qualification MBBS and is registered with the Indian Medical Council. Or paramedics. Paramedics means, so those who assist the doctors, like nurse or a lab technician, physiotherapist or compounders, they will be coming under paramedics. So these services provided by them will be exempted. All healthcare services are exempted. However, room charges, there is one exception. Generally, room charges is also part of healthcare service and it is exempted. However, if the room charges is ICU charges, we don't have any restriction, always it will be exempted. So ICU can be critical ICU or normal ICU or neonatal ICU, any ICU charges will be exempted, whatever may be the amount. But normal room charges will be there. That normal room charges will be exempted if per day it does not exceed 5,000 rupees. What if it exceeds 5,000 rupees per day? Entirely it will be taxable. So for room charges alone, we have one taxability. If it is normal room charges which exceeds 5,000 rupees per day, then it will be entirely taxable. Otherwise, all healthcare services will be exempted. Then healthcare service in relation to animals or birds is also exempted. Then we have few circulars in this regard. Renting of rooms to inpatients in hospital, subject to the point, that 5,000 rupees point. And food supplied to inpatients. Who are inpatients? Those who are admitted in the hospital is known as inpatients, is part of healthcare services and it is exempted. Not only this, even medicine sold, food supplied, everything given to the inpatients and charge it from them will be exempted. The next point is related to consulting doctors. So there is a consulting doctor who is not an employee of the hospital, he is getting some money from the hospital, that will be exempted. So money collected by the hospital from the patient is also exempted for consulting, that is outpatients. So even money collected by the doctors from the hospitals is also exempted. Then services provided by way of ART or IVF treatment for the purpose of curing the abnormality related to pregnancy. So this IVF or ART treatments will be done. Then whatever amount that is collected for that is mainly for curing an ailment or curing a deformity, so or abnormality. Due to that reason, it will also be treated as healthcare services, and the money collected for IVF treatment will be exempted. Then next, there is a rehab professional. This rehab professional is not a doctor. So basically they are psychology experts and they will be possessing the psychological degree, and they will be registered with the Rehabilitation Council of India. They will be providing rehab services by way of care or counseling. If they are working in medical establishments, let that medical establishment be government or private or a trust, it will be always exempted. Or an education institution, let it be government or private or a trust, it will be exempted. But what if they are working in rehab centers? If they are working in rehab centers, if that rehab centers is operated by government or trust, then only the money collected by them will be exempted. If there is a private rehab center, then the money collected by the rehab professional will be taxable. Okay, service provided by rehab professionals in private rehab center will be taxable. Only if they are working in government or trust owned rehab center, then it will be exempted. But when it comes to medical establishments and education institutions, let it be government or private or trust, there is no difference in that. The next one we have is entry tickets. Sir, does audio logistics come under authorized medical practitioner? I don't know here. So I don't know much about medicine, and if it is given in the question that he is an authorized medical practitioner, he will be coming. So I don't know what is that word also, audio logistics, etc. So logistics means I know only transportation. So therefore sorry for that. Maybe you mean to say some expert in something. So if they are really authorized medical practitioner, yes, they are covered under exemption. Then even recognized system of medicine, there are many recognized system of medicines, but some unrecognized system of medicines are also there, like pranic healing or Reiki healing, like that. So with respect to that, it will be always taxable. But again, it will be given. Suppose if they coin a new term and all, that will be clearly given as to whether it is a recognized system of medicine or not. Because even CA Institute know that we are not, studying for doctor degree. And yoga, remember, it is a recognized system of medicine. Yoga is covered. Then next. So feels that your lectures are fully packed. End of the day, feels that my head is bursting. So take class for 3 to 4 hours. You watch for 3 to 4 hours. Afternoon you take rest, and thereafter tomorrow you continue watching. No, it's anyhow in YouTube, correct? So you can watch. What's wrong in that? Then this and all you are asking us doubts here. Disturbance in audio? I don't think so here. Maybe my throat issue. Ask queries here. Don't disturb me in this. Following entry tickets. That's why I stopped for last 2 attempts taking online live. Rocket revision and all I stopped taking online live because they will be asking like this only questions. Anyhow, if I upload a lecture, students will say, sir, online live you are not doing, sir, etc. If I put online live, so students will not come. Hardly 50 students or 60 students will be there. But in the group, 200, 300 students will be asking me, online live like that. And again, if I put online live, so 6 hours I cannot study. Then what other work you have? Study here. Exams are coming. You have to put effort. So you should not be always in the comfort zone. You have to come out of the comfort zone. Only when you come out of the comfort zone, the magic will happen. So you cannot say, no, I will sit in the comfort zone only and everything should come into my place only. Then better create a clone and send them for exam, or use some artificial robot and send them for exam. You do at least that thing. So if you are writing, you have to put effort, no other go. Fine, say this. So entry tickets, following are the entry tickets which are exempted. So irrespective of the ticket price, some entry tickets are exempted. If the ticket price does not exceed 500, some entry tickets are exempted. So irrespective of the ticket price, so we have first related to animals, museum. So related to animals, we have zoo, tiger reserve, then we have wildlife sanctuary. These three are related to animals. Then three places, museum, national park, protected monuments. These six alone you remember, but these two are actually events which were already completed. So I don't think so questions will be asked on this, but these six you need to remember: tiger reserve, zoo and wildlife sanctuary. Whereas the remaining three are places, museum, national park and entry to protected monuments. Then ticket price does not exceed 500. So total 9 points you need to remember. First four are related to performance related. Performance related means dance and then theatrical performance, then concert and musical performance. This is related to performance. One person is performing. Whereas related to events we have four: circus, award function and page and beauty show and sporting event. Then one place, that is planetarium. These are the 9 entry tickets which are exempted if the ticket price does not exceed 500. What if the ticket price exceeds 500? Entirely it will be taxable. Then next, what about pharmacies? So one question they have asked, pharmacy related to the previous point. I told you already, medicine sold to inpatients is exempted. Anything which is sold to inpatients or anything which is given to the inpatients will be exempted. If it is to outpatients, then it will be taxable. Means pharmacy should maintain separately with respect to outpatients, inpatients, billing they need to maintain separately. With respect to the billing, they will divide as to whether it will be taxable or exempted. A medicine may be taxable, but the moment it is sold to inpatient, that medicine will become exempted. Suppose if the same medicine is sold to outpatient, it will become taxable. Means a hospital should maintain separate billing related to that. Then next one, pension services. So pension services is related to two pension services are exempted, that is Atal Pension Yojana and state government operated pension fund. Atal Pension Yojana is a central government operated pension scheme and state government operated pension fund is also exempted. Okay, so these two. Apart from that, if there is a private pension fund, whatever premium or whatever contribution that is being collected towards the pension fund will be taxable. Like there are Motilal Oswal, Religare and like SBI, like that lot of pension funds are there, but these are private pension funds. So monthly they will collect some contribution that will be taxable. Only Atal Pension Yojana or state government operated pension fund, the money collected is exempted. And then next one, number 7, services by some specified organizations. These are the specified organizations. If they collect any amount, that amount collected by them will be exempted. What are those specified organizations? ESIC, Employee State Insurance Corporation, who will be collecting money from the factories for the purpose of providing insurance to their workers. And EPFO, Employee Provident Fund Organization, will be collected from the employers, the PF contribution and from employees. So that EPFO collecting money is exempted. Like EPFO, for workers who are working in the coal mines, we have CMPFO, Coal Mine Provident Fund Organization. Even they collecting the Provident Fund is exempted. Then NCCCD refers to National Center for Cold Chain Development. Basically, they provide the required assistance for setting up the cold chain and for which whatever money that is being collected, so that is exempted. Then Foreign Diplomatic Mission in India. So what is a Foreign Diplomatic Mission? Basically, specified agencies of UN, embassy or consulate. So specified agencies of UN like UNESCO, UNICEF, WHO, etc. So whatever money that is being collected by them, including the embassies and consulates, which will be providing visa services or which will be providing any other kind of assistance to the people. So whatever money that is being collected will be exempted. Basically, this is Foreign Diplomatic Mission located in India. So these are the organizations. Previously we had SEBI, so but now it is not there. So any money collected by SEBI will be taxable or exempted? Taxable. We don't have any exemption. Then any money collected by IRDA, Insurance Regulatory Authority of India. So whether that money collected by them will be taxable or exempted? Taxable. That is not there in the list of these associations. Only these organizations collecting the money from anyone will be exempted. Then charitable and religious services. So there is an entity which is registered under section 12AA or 12AB of Income Tax Act, charitable trust. So these charitable trusts providing some charitable activities, only specified charitable activities, the money collected by them will be exempted. What are those specified charitable activities? Public health. So public health is like providing the healthcare services, but anyhow healthcare services is coming under exemption. So even public health which is done by the charitable trust is also exempted. Number 2, advancement of religion, spirituality and yoga. So all these Baba, Swamijis, ashrams, etc. and all will be coming into this category, and the money collected by them will be exempted. Then educational programs to orphans and physically or mentally traumatized persons, prisoners or persons over 65 years. Remember, persons over 65 years residing in rural area. Suppose if the persons over 65 years residing in urban area, if the educational service, educational program is provided to them by the trust, that will be taxable. So if it is orphans, anywhere, physically or mentally traumatized persons, anywhere, prisoners, anywhere. But for these persons over 65 years, that point alone residing in rural area. Then fourth activity is environmental preservation. These are the 4 charitable activities. Apart from this, any other activity may be in the nature of charitable, but we don't have any exemption. Only for these 4 activities exemption is given. Then next, number 2, services by a old age home. So there is a trust or a government which is running a old age home, and they will be providing lodging and boarding services to the people, old people. So who are considered as old people here? Aged 60 years or more are considered as old people. Now from them, money collected from them per month, if it does not exceed 25,000 rupees, then it will be exempted. So if it exceeds 25,000 rupees, entirely it will be taxable. Remember, everywhere in exemptions except Incubatee services, so if the amount exceeds that limit, entirely it will be taxable. There are many monetary limits that we have come across. So for example here, 25,000. If it exceeds 25,000, entirely it will be taxable. Same way, room charges 5,000. If it exceeds 5,000, entirely it will be taxable. Like that, everywhere, if the monetary limit is given, if you cross that monetary limit, entirely it will be taxable. The exception is Incubatee services. In case of Incubatee services, so whatever money that is collected from the incubator up to 50 lakhs is exempted. If it exceeds 50 lakhs, the excess only will be taxable. So then next one, services by a person by way of conduct of religious ceremony. So basically they will be providing like religious activities. So priest, purohit, etc. will come into this category, and the money collected by them is exempted. Services by specified organizations for religious pilgrimage. So what are considered as religious pilgrimage? Kailash Manas Sarovar Yatra and Hajj Yatra. These 2 are only considered as religious pilgrimage, but not everyone who is providing this religious pilgrimage is exempted. That should be a specified organization. So first, that organization should be specified organization by the government, and they are providing the religious pilgrimage for which they collect some money, that will be exempted. So these are the 4 points related to charitable and religious services. So this is the point I was referring to, incubator and incubatee services. So there is an incubator. So who is an incubator? One who owns a laboratory where the research and development will be carried out, and the laboratory is known as Incubate, and the one who is developing the research or developing any scientific product is known as Incubatee. Basically a scientist will be coming under Incubatee. So example, China is Incubator, and Wuhan laboratory where COVID is created is called as Incubate, and the scientists who developed that COVID will be coming under Incubatee. Okay, so now incubator, if they are approved by Government of India, so incubator is basically a owner of the laboratory. Incubator, if they are approved by government, whatever money that is earned by them will be exempted. Whereas Incubatee is providing services to the incubator. Now whatever money that is collected by the Incubatee, if it does not exceed 50 lakh rupees in a financial year, then it is exempted, and this exemption is for a period of 3 years, and the condition is that previous year the gross receipt should not exceed 50 lakhs. So which means, for example, year 1 it is 30 lakhs exempted, year 2 60 lakhs, 50 lakhs exempted, remaining 10 lakhs will be taxable. Year 3 we will not get exemption. Why year 3 will not get exemption? Because for year 2 the amount exceeds 50 lakhs. Due to that reason, year 3 exemption will not be there. And so suppose year 1, year 2, year 3, every year it is 40 lakhs, 40 lakhs, 40 lakhs. And year 4, whether we will get the exemption? No, because this exemption is only for a period of 3 years from the date of agreement, and therefore thereafter they will not be getting. For example, you see, gross receipts of the Incubatee 60 lakhs. So first year exemption will be there by default, because previous year it is 0. So therefore 50 lakhs, 10 lakhs will be taxable. Second year no exemption. Why second year no exemption? Because the previous year it exceeds 50 lakhs. So second year 40 lakhs, no exemption, as the previous year exceeds 50 lakhs. So 40 lakhs will be the taxable value. Third year 70 lakhs. And whether they will get the exemption for the third year? Yes, because for the previous year, that is second year, amount does not exceed 50 lakhs. So therefore third year they will get the exemption 50 lakhs, but 20 lakhs will be taxable. This is the only place where you cross the limit, so the remaining amount only will be taxable. Apart from this, any other place, if you cross the limit, entirely it will be taxable. Then next, education services. Services provided by an educational institution. To whom? To its students and faculty and staff. 3 people. Education institution providing services to students, faculty and staff. Any amount collected from them will be exempted. So basically, what is an educational institution? So there are 3 categories of educational institutions. So that we have category 1. So see the 4th point first. So services provided by an education institution to students, faculty and staff. Category 1 education institution is up to 12th standard. Category 2, education for obtaining a qualification recognized by law. Category 3, approved vocational education. So schools will come under category 1 education institution. Colleges and professional education will come under category 2. Whereas vocational education, that is skill based, will be coming under category 3 education institution. These 3 education institutions providing services to students, faculty and staff, any amount collected will be exempted. Sir, what about some fees collected from the student? So is exempted, that's fine. But if application fee or prospective fee is collected, he is not at all a student now. He will become student in future. Whether that application fee or prospectus fee is also exempted? Yes. And what if the student is now leaving the college or leaving the school? So we are collecting some money for issuance of transfer certificate or migration certificate. So now he is not a student. Even that fees is also exempted? Yes, because these were related to that particular student only. So therefore CBIC has clarified that this application fee for entrance or fee charged for issuing eligibility certificate or fee collected for issuing migration certificate to the ex-student is also exempted. So that is because of the clarification that is given. Then next one, what if entrance exam fee is collected from the students? They are not at all the students of the education institution. Only after writing the entrance exam, they qualify and then only they will become the student. So now they are prospective students. Whether the entrance exam fee collected from them is exempted? Yes. See the first point. Services provided by education institution by way of conduct of entrance examination against consideration in the form of entrance exam fee is exempted. Now, what if there is a body, examination body, National Board of Examination or National Testing Agency? Its role is only to conduct the examination and they will not do any other work. They conduct the exam, entrance exam, and they give the score. Based on that score, these people can join in any college based on counseling. So their job is only to conduct the examination. Will they come under education institution? So for which CBIC gave a clarification stating that yes, so these examination boards are conducting entrance exam. Without entrance exam, the student will not get the qualification. So it is coming under part of obtaining qualification. So these examination boards are also treated as education institution for the limited purpose of conducting the examination, and the fees collected by them is also exempted. So central and state education boards are treated as education institution for the limited purpose of providing service by way of conduct of examination to the students. Therefore, National Board of Examination or National Testing Agency is education institution in so far as it provides service by way of conduct of entrance exam to the students. Then next, services provided to education institution. So see 5th point. So far what we have seen is services provided by education institution. In the 5th point, we are seeing services provided to education institution. Only specified activities with respect to service provided to education institution is exempted. So what is that? First, you remember transportation, then catering and security and housekeeping within the premises. The security and housekeeping should be within the premises. It should not be outside the premises. So these 4, so transportation of students, faculty and staff, catering, security service within the premises, housekeeping service within the premises. To which category institution? To category 1 institution. Category 1 institution is up to 12th standard. Then this service will be exempted. Remember that this is not service provided by education institution, this service provided to education institution. By education institution always it will be exempted. So for two education institution only, for category 1 it will become exempted. Then next point is admission to or conduct of examination. So bringing any admissions to the education institution for a commission or conduct of examination of that education institution, any amount earned, for all three category institutions the fees collected will be exempted. So admission to or conduct of examination. Then online periodicals and journals, only for category 2 institution it will be exempted, not for category 1 and 3, because online educational journals and periodicals are not relevant for category 1 and category 3 institutions. So only for category 2 they have given this exemption. Then next we have one circular, CBSE circular in this regard. So there is a Anganwadi school, and that Anganwadi school procures the catering services. So Anganwadi school basically will come under daycare school, and this Anganwadi schools will be part of category 1 education institution. And when they procure the catering service provided to Anganwadi schools is coming under the exemption, because catering services provided to category 1 education institution will be exempted. Accordingly, exemption of GST provided to services provided to an education institution, including Anganwadi, by way of serving of food including midday meals under any midday meal scheme sponsored by government, irrespective of the funding of such supplies from government grants or corporate donations. So then next one here, suppose if the school is conducting a function, annual day function somewhere in an auditorium, and they receive the security and housekeeping services to that auditorium, whatever money that is paid by that school will be taxable or exempted? Taxable, because security and housekeeping service should be within the premises. Suppose if the school is conducting an annual day function in an auditorium and they receive the catering services, that catering service provided to the school is taxable or exempted? Exempted, because catering can be anywhere, only security and housekeeping should be within the premises. Then next point you see, second point. So first we have seen what are the services provided by education institution, next we have seen what are the services provided to education institution. Then amount paid to training providers under Deen Dayal Upadhyaya Grameen Kaushal Yojana. Basically this is like a government scheme wherein some volunteers will be going to the rural areas and they will be providing training to the rural youth, and for which they will be getting some money from government. So these government, whatever these volunteers get under Deen Dayal Upadhyaya Grameen Kaushal Yojana, that money collected by them will be exempted. Then any services provided by NSDC, National Skill Development Corporation. National Skill Development Corporation will set up lot of sector skill councils, and below that sector skill councils there will be assessment agent or a training partner. These four people will basically provide lot of skill courses. So for this, whatever money that is being collected will be exempted. So remember four bodies. What are they? National Skill Development Corporation, Sector Skill Council, assessment agent or training partner. Providing any skill course will be exempted. Then next point number 6, services by assessment bodies under skill development initiative scheme. So here there is a skill development initiative scheme wherein people from the industry will be invited by the government to review the curriculum. After reviewing the curriculum, so they will suggest the changes based on which the revised curriculum will be imparted to the students. So these assessment bodies will be collecting some money from the government, so that money collected by them will be exempted. So these are the various activities in relation to education that is exempted. Then, so is the limit for Incubatee in previous year is up to 50 lakhs or less than 50 lakhs? So it is up to 50 lakhs, does not exceed 50 lakhs. Actually it is less than or equals to 50 lakhs. Less than or equals to 50 lakhs. Okay. Previous year does not exceed 50 lakhs. That's how you need to remember. It's not less than 50 lakhs, does not exceed 50 lakhs. Does not exceed 50 lakhs. Then look into the next one, services provided by government. So here already we discussed about services provided by government to business entities. In detail we discussed in that segment 3 RCM, that is 14 specific exemptions we have, 2 general exemptions we have. Apart from that, basically services provided by government is divided into 2. So 4 specified activities which are covered under supply, and all other activities are excluded from supply. What are the 4 activities? Department of Post, transportation of goods or passengers, airport or port services, services to business entities. The services to business entities is already covered above. And Department of Post. In Department of Post, following are exempted, that is postcard, inland letter, and envelopes with less than 10 grams is exempted. All other service of Department of Post will be taxable. So what are exempted? Postcard, inland letter, and envelopes weighing less than 10 grams. Not by way of speed post and all. So like book post or registered post, that will only be exempted. But what are the service of Department of Post which will be taxable? Speed post, express parcel post, life insurance services, saving schemes, or other enrollment services. So like agency services, there are many things which the Department of Post will do that will be taxable. Then transportation of goods or passengers, we have a separate discussion, and airport or port services always will be taxable. Then services provided to government. So far what we have seen is services provided by government, service provided to government, only to government. So pure services will be exempted. Pure services means there won't be any goods element, it will be only service element. That too, it is in relation to function entrusted to government under Article 243G or 243W of the Constitution. As per Constitution, government is required to do certain activities, and for doing that activities, they may outsource that activities to one person. So that person is providing the pure service, labor service. So whatever money that is collected will be exempted. Example, solid waste management. In solid waste management, that is cleaning the garbages, etc. is the work of the government. So they will appoint one person to do this work. So this person will provide only pure services by way of solid waste management. So money collected will be exempted. Then next, what if it involves both goods and services? If the value of goods does not exceed 25% of the total value, then that activity is also exempted. Example, so construction of roads. In construction of roads, goods element is the material that is supplied and construction is the service element. Definitely in this, the goods element is more than 25%. So therefore this activity will be taxable. Whereas sanitization of streets. In sanitization of streets, so what will happen? The chemicals that is used is only goods element and sanitization is a service element. The value of goods does not exceed 25% of the total. Therefore it is exempted. But remember, all these activities should be the work which government should do as per Constitution, which they outsource it to some contractors. So services provided by any person to government, central government, state government, union territory or local authority. Previously government authority and government entity was also there, that is now omitted because for them a separate exemption is being given. Okay, so this is only to government, that is central government, state government, union territory or local authority with respect to functions entrusted under Article 243G or W of the Constitution, and pure service are exempted. Even composite supply of goods or services where value of goods does not exceed 25% of the total value is also exempted. And government includes public works department also. So public works department, basically PWD. So this PWD will be receiving some services of construction of roads or construction of buildings, etc. So then services provided to them is also exempted. Yes. So here when I say, central government, state government, union territory, local authority, it includes the department of the government also. Not necessarily government as such, all departments of the government is included in that. So that is this amendment. And there is one CBIC circular related to processing of paddy. So there's wheat into wheat flour. So there is like ration shops in north and all, they will be distributing wheat flour to the customers, like people over there. And for that reason, the PDS, public distribution system, ration shops will be procuring the wheat flour. So this wheat flour when they are procuring, so there are two elements. Goods element is wheat and converting it into wheat flour is the service element. Definitely the value of goods exceeds 25% of the total. So whatever money that is being collected from the government will be taxable. So composite supply of service by way of milling of wheat into wheat flour along with fortification by any person to state government for distribution of such wheat flour under PDS, public distribution system, means ration shops, is not eligible for exemption as the value of goods involved is greater than 25%. So this is the first exemption with respect to service provided to government. Then second exemption. So as this first exemption is removed for government authority and government entity, they have given a new exemption. So this is an amendment for May 24 exam. What is that? Any person who is providing certain services in relation to functions to government authority. Okay, government authority. Because here government authority, government entity, they removed na. That's why separately they have given. but not all activities. Only these 5 activities provided to government authority will be exempted. What are those 5 activities? Water supply. Example, Bengaluru. Right now Bengaluru is facing a water crisis. So people don't have water. And now here what happens? So this government officers or some other places, so here they will be having a corporation or a authority, water supply authority or water supply board. So this water supply board will be providing the water facility. So for that, this water supply board will procure the water. So when they procure the water, they need to pay some charges. That charges which are payable will be exempted. So that is this water supply. Then public health. Public health refers to, like providing any vaccination services or testing services, etc. Then sanitation and conservancy. So sanitation, like so spraying in the streets, then drainages and all, they will spray that chemicals and the gases and all for the mosquito prevention. So that. Then solid waste management is cleaning the garbage, and slum improvement and upgradation, like slum clearance boards, wherein they will be constructing in that slum area. They will make all the huts to be removed, and in one place they will construct one big building for them, and they will be shifting them to that place. That is known as slum improvement and upgradation. These activities provided by any person to government authorities exempted. Definitely this will be tested in the forthcoming exam. So what are the 5 activities which are provided to government authorities exempted? Water supply, public health, sanitation conservancy, solid waste management, and slum improvement and upgradation. Then next, any training program for which 75% of the total expenditure is borne by government is also exempted. This also services provided. So what happens here is that, so government will be asking some coaching centers to provide coaching or training to some below poverty line students or economically backward students or minority students, for which the fees will be borne by the government. So if government is bearing 75% or more of the fees, the entire training program is exempted. For example, NEET coaching to below poverty line students, 1 lakh is the fees, 80,000 rupees borne by government, 20,000 rupees borne by the student. The coaching center gets 1 lakh, 80,000 from government, 20,000 from student. How much is taxable? Entirely exempted, because the training program itself will be exempted. What if government is spending 70,000 and student is paying 30,000? Now what about this? This will be taxable, because government is bearing how much? So less than 75%. So due to that reason, it will be taxable. The training program will be taxable. Then 4th point, services provided by any institution or NGO under the central scheme of scholarship for students with disabilities. So the difference between 3rd point and 4th point is that the 4th point is basically scholarship for students with disabilities, where entire expenditure borne by the government, then the amount collected will be exempted. Whereas apart from this, any other training program greater than or equals to 75% of the expenditure should be borne by the government. Then next one, renting. In case of renting of movable property, only 4 exemptions we have. That already we have seen in renting of motor vehicles. Hiring a motor vehicle that can carry more than 12 passengers to a state road transport undertaking, and hiring of motor vehicle, electric motor vehicle that can carry 12 passengers to a local authority, hiring of motor vehicle that can carry goods to a GTA, and hiring of bus to a person who in turn provides transportation services to education institution up to 12th standard. So these are the 4 activities in relation to movable property. Renting is exempted. Whereas in case of immovable property, we have for land. So in case of land, here basically this is what renting, including leasing, licensing, etc. So in case of land, upfront charges and annual lease rentals with respect to lease of land by government to government authority or government entity. Remember who is the supplier and who is the recipient. Who is the supplier here? Government is the supplier. Who is the recipient? Government authority or government entity is the recipient. Now they are giving land on lease. What type of land? Is it an agricultural land or industrial land? Any land on lease. What type of lease? Short term lease or long term lease? Any type of lease. They did not tell long term lease, they said lease. And what is exempted? Whether upfront charges is exempted or annual lease rental is exempted, everything is exempted. So you need to remember clearly, because it's a very important point that can be tested in forthcoming exams. So what is that? There is a government which is giving the land on lease to whom? Government authority or government entity, for which they will be collecting some upfront amount as well as annual lease rentals. Both are exempted, and the type of lease can be short-term lease or long-term lease, and the type of land can be industrial land or agricultural land, any type of land. Whereas second point you see in case of land, what is the difference between this point and that point? In this case, upfront charges is only exempted, whereas here both upfront charges and annual lease rentals exempted, but here only upfront charges is exempted, including preferential location charges. Preferential location charges is sometimes whenever the land is given next to highways and all, they will be expecting extra charges, that is known as preferential location charges. So upfront charges including preferential location charges with respect to long-term lease. So long-term lease means what? Lease for a period greater than or equals to 30 years. Whereas here they did not tell long-term lease or short-term lease. They said lease. But here it should be long-term lease of what? Industrial plot or plot for development of infra for finance business. Means here they did not tell what type of land. Any land. But here they are telling it should be industrial land or land for development of infrastructure for finance business. So by whom? By SIDCO. State Industrial Development Corporation, SIDCO. So State Government Industrial Development Corporation to any person. So here recipient they did not tell to whom. So supplier will be SIDCO, State Industrial Development Corporation. Recipient can be any person. Whereas in the previous case, supplier should be government and recipient is government authority or government entity. Previous point, any type of lease, but here it should be long-term lease. Previous point, upfront charges and annual lease rentals. Here only upfront charges. Previous case, they did not tell what type of land, any land, but here industrial land or land for development of infra for finance business. These are the two exemptions that we have in relation to renting of land or leasing of land. Whereas look into the next point, building. In case of building, so renting of residential property in detail we have seen. So two exemptions we have in case of renting of residential property. What are the two exemptions? Residential property for residential purpose to an unregistered person, or residential property for residential purpose to a registered individual for his family stay. So that is exempted. Then next point, renting of precincts of a religious place meant for general public registered as a trust under income tax. So accommodation, halls and shops. So here with respect to accommodation, if it is per day, so basically it is the precincts of a religious place. Precincts of a religious place means what? The surroundings of a religious place which is given on rent. For what purpose it is given on rent? It can be given on rent for accommodation or hall or shop. But remember that religious place should be registered as a trust, either a charitable trust or a religious trust. So either a charitable trust under 12AA, 12AB or religious trust under 1023C or 1023D. So it can be any trust. So they own the premises. So the precincts means surroundings of the religious place. That religious place should be religious place for general public. Means it should be like a temple or a church or mosque or gurudwara, etc. Like that it should be a religious place meant for general public. For what purpose it is being given on rent? For accommodation or for conducting any functions, hall or for shops. If it is for accommodation, per day if it is less than 1000 rupees is exempted. What if it exceeds 1000 rupees or equal to 1000 rupees? Entirely it will be taxable. Remember, only less than 1000 is exempted, not less than or equals to 1000 is exempted. Only less than 1000 is exempted, that 2000 rupees, less than 1000 rupees per day. You can remember it like 999. You can remember it like 999 is exempted. 1000 rupees will become taxable. Okay. Then next, halls. For hall also it is exempted. So how much it should be per day? It should be less than 10,000, means 9,999. Up to this means it will be exempted. So equals to 10,000 rupees also will be taxable. And shops also 9,999, less than 10,000 rupees, but it is per month, not per day. So this is per day and this also per day, whereas this is per month. Then it will be exempted. If it exceeds these limits, entirely it will be taxable. Then sports related services we have, so two exemptions. One is sponsorship services to a recognized sports body is exempted. What is a recognized sports body? There are 6 sports bodies which are considered as recognized sports bodies. National Sports Federation. So BCCI, Indian Hockey Federation, etc. will come under National Sports Federation. Inter-University Sports Board, which will conduct the games between the universities. Then Paralympic Committee, for the physically challenged people, they will be conducting games and sports. Then Indian Olympic Association. So then Central Civil Services Cultural and Sports Board. So government, for government employees, they will be conducting sports. Then Panchayat Sports Board. So for people in the villages, some matches like kabaddi or volleyball or this boat racing, etc. they will be conducting. So these are the recognized sports bodies. That is National Sports Federation, Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services Cultural and Sports Board, and Panchayat Sports Board. Okay. And if they receive any sponsorship money, that money received by them will be exempted. Suppose if there is a sports body which is not a recognized sports body, the sponsorship money collected by them will be taxable. Then who will pay GST in that case? If the recipient is body corporate or firm, it will be coming under RCM. If the recipient is other than body corporate or firm, it will be coming under FCM. Correct? So see this. Recognized sports body example BCCI and unrecognized sports body example IPL. Now BCCI is getting some money from body corporate. So that is exempted. Even BCCI getting money from a sole proprietor. That is also exempted. Whereas if IPL is getting some money from a body corporate or firm, for example Tata, and that will be taxable. But who will pay GST in this case? RCM. That body corporate or firm only will be paying. Suppose if they get sponsorship money from an individual, sole proprietor, then also it will be taxable. But who will pay GST? FCM. So IPL board only will be paying GST. Then second exemption is services provided by individual as a player, referee, umpire, coach or team manager to a recognized sports body is exempted. Only 5 people: player, referee, umpire, coach and team manager to recognized sports body exempted. If it is others, to recognize sports body also it will be taxable. Who are others? Like curators, selectors, technical experts, commentators, etc. And all these people providing services to unrecognized sports body will be always taxable. We don't have any exemption. So the exemption is what? Services provided by individual as a player, referee, umpire, coach, team manager to recognized sports body is exempted. Then one more exemption is also there. Services provided by one recognized sports body to another recognized sports body. Say Inter-University Sports Board is conducting a cricket tournament for which they asked BCCI to support. Now BCCI is providing the service to Inter-University Sports Board, one recognized sports body to another recognized sports body. So the fees collected by them will be exempted. Then next one, services by an unincorporated body or a non-profit entity to its members. So following are exempted. So there is an unincorporated association or a body, they are providing services to their members and the money collected from them will become supply under 71AA. So any activity between a person other than individual and its members. So it will become supply under 71AA. But these activities are exempted. Suppose if the association is a trade union, so group of traders, they form an association and the members will be the traders for which they will be pay membership fees, whatever may be the membership fees, that is exempted. Suppose if the service itself is exempted, so there is an association which is providing vaccination to its members. Generally vaccination is exempted. Even if it is provided by association to its members also it will be exempted. Then resident welfare association, apartment owners association, they will be providing lot of maintenance services for which they collect the maintenance charges, that will be exempted, provided how much should be the maintenance charges? Does not exceed 7,500 rupees per month per member. If it exceeds 7,500 rupees per month per member, entirely it will be taxable. Suppose if it is as an industrial or agricultural labor association. So industrial or agricultural labor association will be providing services to their members who are nothing but the industrial labor or agricultural labor by way of collecting some membership fees from them. Whatever may be the membership fees, that is exempted. So then apart from this, it is any other entity for promotion of trade, commerce and industry. So any other industry. So like it's like some associations like CIA, Confederation of Indian Industry, or FICCI, like that. Say there are some associations which are mainly established for the purpose of promotion of trade, commerce and industry. If they are collecting some membership fees, how much should be that membership fees? If it is less than or equals to 1,000 rupees per annum, not per month, per annum, then it will be exempted. Otherwise it will be entirely taxable. Up to an amount of 1,000 rupees per month, sorry, not per month, per member per annum. Whereas the 7,500 rupees is 7,000 rupees per member per month. Then next, there is one amendment in this case. So very, very important amendment. So please concentrate. That is electricity charges. Usually electricity charges will be incurred by the association and it will be collected from the members. How it will be collected from the members? Whether the bill is in the name of the member, which is paid by the association and recovered from the member. If that be the case, then the association is acting as a pure agent. So that electricity charges collected by the association should not be included in the value for computing the monthly maintenance charges. Again I am repeating, please concentrate. There is an association which is incurring some electricity charges. This electricity charges bill they are paying and recovering it from the members. Now in this case, so whether the bill is in the name of the members, yes, bill is in the name of members, means their flat EB bill who pay, association pay and recovering it from the flat owner. Now in this case, they are acting as a pure agent. Liability of the recipient incurred by supplier as a pure agent of the recipient while computing the maintenance charges, monthly maintenance charges, whether these EB charges recovered will be included or not to be included, not to be included. So electricity supplied by malls, airport operators, real estate owner or real estate developer or resident welfare association pay the electricity charges on behalf of the members and claims reimbursement of actual electricity charges, then it will become pure agent, correct? That's the first point I discussed to you. So pays electricity charges on behalf of members and claims reimbursement of actual electricity charges. So it will not form part of value. So that's clear. Whereas second point you see, collects from members on actual basis for electricity as charged by the state electricity board. Sir, what is the difference between previous point, this point? In the previous point, the bill was in the name of the member and the association has paid it and recovered it from the member. But in this case, second point, the bill is in the name of the association for the common area and that they are recovering it from the members on actual basis. Actual basis means what? If the bill is 2,000, how much they should recover it from the members together? 2,000. Then in that case, they are deemed as pure agent. This is a deeming fiction created in the circular. Deemed as pure agent, so the 2,000 rupees need not be included. What it? Suppose if the bill is 2,000 and by way of apportionment, if they recover some 2,200 rupees extra. Why extra? Because they will have some, they have to go to EB office and pay bill, etc. So some extra amount they recovered. Now in this case, they are not acting as pure agent and therefore the entire amount recovered will be included in the value. If they collect charges from members on ad hoc basis, which sometimes exceeds the actual electricity charges of electricity board, so then it shall form part of the value entirely. So mainly this will be useful for computing the monthly maintenance charges. Okay. So for example, say this. Anyhow, the regular maintenance charges is 5,000 rupees per month. Okay, 5,000 rupees per month. Now, what happens is that there is some common EB charges. So common EB is somewhere like 65,000 rupees. Okay, that's a big complex. Okay, and this 65,000 on actual basis they recovered. So say there are around some 50 flats. 65,000 divided by 50. How much? 65,000 divided by 50. 1,300. Then specific EB for each and every flat. For this flat, this is common EB. Then specific EB, specific electricity board charges, specific electricity charges, that is 4,000 rupees per month. Now if you do the total exceeds 7,500. But you should not take 4,000. You should not take 1,300. So therefore, what is the maintenance charges? 5,000. It does not exceed 7,500. Therefore, it will be exempted. Okay. Now, what you are doing, rather than recovering it on actual basis, so instead of 1,300, they are recovering 1,500 per month. Okay, and this is say 7,000 per month and 1,500 per month. Now common EB, they did not recover on actual basis. So whether it will be included in the value? Yes, it will be included in the value. So 7,000 plus 1,500 will be 8,500 per month, which is more than 7,500. Therefore, it will be taxable. You got it? So therefore, this recovery of EB charges is going to impact the monthly maintenance charges. So if the monthly maintenance charges exceed 7,500, entirely it will be taxable. So that's why what EB charges should be included, what EB charges should not be included, they gave a clarification. You tell me which EB charges should be included? On ad hoc basis, if they are recovering an amount which is in excess of the actual EB charges, then in that case it should be included in the value. What if the actual EB charges is only recovered? It will not be included. What if the specific electricity charges of that flat which the association pays and recovers from the flat, that will also not be included. So definitely this point will be tested in the forthcoming exam because of the amendment. Then, so in case of resident welfare association, collection amount exceeding 7,500 per month per member, then entire amount will be taxable. But also remember, they should be crossing the threshold limit. Why they should be crossing the threshold limit? Let's take, there are only 10 flats. There are only 10 flats. And each flat, they will pay 10,000. So monthly it exceeds 7,500 rupees, like a gated community. So gated community wherein all facilities they are providing, so definitely it will be 10,000 rupees also. Into 12, if you see how much is the total turnover, so 10 flats into 10,000 into 12, that will be 12 lakhs. 12 lakhs does not exceed 20 lakhs. So therefore they are not required to register and pay any GST. So just because you see 10,000 taxable, don't conclude to computation of GST liability. Also check how many really number of flats and for how many months they are collecting the maintenance charges. The total should exceed 20 lakhs. Then only they will pay GST, because taxable or exempted is for determining liability. But thereafter you need to check as to whether they are liable to get registered or not. Then next area is transportation of passengers. So there is one query. Sir, this exemption of resident welfare association is 7,500 per month per flat per member, right? Because a member may have 3 to 4 flats also. Yes, here per member refers to per flat. Suppose if one person, not per person may have 3 flats, means he will be having 3 memberships. So per member here refers to per flat. Okay. Transportation of passengers following are exempted. That is in case of railways. First we are discussing transportation of passengers. In case of railways, we have 2 exemptions. That is, other than first class or AC, everything is exempted. What are other than first class or AC? Sleeper class or general tickets or second class sitting, that will be exempted. If it is first class, AC or non-AC, taxable. If it is any AC compartment, it will be taxable. Remaining cases, it will be exempted. Then metro, mono and tramway, whatever may be the case, it will be exempted. So definitely it will be AC only. Metro rail, monorail and tramway, that will be always exempted. Then when it comes to airways, in case of airways, so there are 2 exemptions. Number 1, if the starting point of the passenger or ending point of the passenger is in northeastern states or Bagdogra in West Bengal, so then it will be exempted. So what are considered as northeastern states? MMT and ASAM. So MMT and USAM, like that we discussed for composition scheme. So that U is Uttarakhand. Here it is not MMT and USAM, it is MMT and ASAM. A for Assam. So Manipur, Mizoram, Tripura, Nagaland, Assam, Sikkim, Arunachal Pradesh and Meghalaya. So if the starting point or ending point of the passenger is in these places or Bagdogra and West Bengal, that entire air ticket will be exempted. But remember, it should be in the economy class. Suppose if it is in business class, that will be taxable. The next one, consideration received from government towards viability gap funding for a period of 3 years. So in case of regional connectivity airport scheme, that is UDAN scheme, so government will be paying some amount to the airlines. So as a revenue gap, so some amount they will collect from the passenger, some amount they will collect it from the government. That amount which is collected from the government is exempted for a period of 3 years. After 3 years also government will pay money to the airlines. Yes, after 3 years also they will pay, but that amount will be taxable. Only for 3 years that too money received from government is exempted. Then next, when it comes to waterways, in case of waterways, we have 2 exemptions. First, inland waters is exempted. Transportation of passengers by inland waterways is exempted. Inland waterways means what? River. Then, suppose if it is coastal waters means seaways, but it should be within India. Other than for tourism purposes. Other than for tourism purpose means like public transportation. So say Chennai to Andaman. So in Andaman also India, Chennai also India, but the waters will be coastal waters. It is not for tourism purpose. Other than for tourism purpose, therefore it will be coming under exemption. Suppose if it is for tourism purpose, then it will be taxable. So whether it is a government operated or private operated vehicle. So that ferry can be government ferry or a private ferry. So if they are transporting general public, then it will be exempted. If it is predominantly for tourism purpose, then it will be taxable. Then when it comes to roadways, in case of roadways, we have 3 exemptions. First, non-AC stage carriage. Stage carriage refers to a vehicle which stops at every stage during its journey is known as a stage carriage. If it is a non-AC stage carriage, then it will be exempted. Suppose if it is non-AC contract carriage other than for tourism or hire, that is also exempted. So non-AC stage carriage exempted, no conditions. Non-AC contract carriage other than tourism or hire. What if it is a non-AC contract carriage for tourism or hire? Then it will be taxable. And then metered cab or auto rickshaws is also exempted. But there is one important point here. If these 3 are through e-commerce operator, entirely it will be taxable. Exemption not available if the services are provided through e-commerce operator. Okay. So basically auto is exempted. But if the auto is through Ola or Uber, then the money collected will be taxable. That is about this. Then next, transportation of goods following are exempted. Transportation of goods by railways, specified goods will be exempted. So transportation of goods by railways, what are those specified goods? Whatever specified goods that we have seen for GTA, the same list of specified goods. So what are they? That is agricultural produce, organic manure, food grains including flours, pulses, milk and salt, newspapers and magazines, relief material for natural and man-made disasters, and defense and military equipment. Same list of goods. And in case of airways, from outside India to India, transportation of goods by airways from outside India to India. What about India to outside India? That is not exempted, that will be taxable. Only outside India to India is exempted. Then when it comes to transportation of goods by waterways, inland waterways, transportation of goods exempted. So inland waters, both transportation of goods as well as transportation of passengers is exempted. Whereas in case of coastal waters within India, what is exempted? Specified goods. Again the same list of specified goods. So these 3 places, transportation of specified goods is exempted. What are the 3 places? Railways, then waterways, coastal waters. Coastal waters within India, and then GTA. These 3 places, and the list of specified goods will be same in all these 3 places. Then when it comes to roadways, other than GTA or courier agency, all other transportation of goods by roadways will be exempted. So GTA basically is goods transport agency, means any person engaged in transportation of goods by whatever name called, they give a document. So they should give a document. That document will be called as consignment note. Even sometimes the document will be called as BILLTY, B-I-L-L-T-Y, BILLTY, like that. You just Google it, you will be able to get it. So BILLTY, like that they will call. So which means it is like a consignment note. Okay. So then it will be called as a GTA. And next one, courier agency. So these two people are only taxable. So all other people like normal Tata A's or truck and all, they will be operating na, whatever charges that they collect will be exempted. Then previously transportation of goods by waterways from outside India to India like that and all, we had some exemption. Now everything will be taxable in case of international waterways. Transportation of goods by waterways from outside India to India is taxable. Even transportation of goods by airways and waterways from India to outside India is also taxable. Then GTA services, we already know that there are 3 exemptions in case of GTA. Specified goods, recipient is government, so registered only to deduct TDS, and recipient is individual HF or AJP, all are unregistered and not having factory. And basically GTA is a person engaged in transportation of goods by road and issues a consignment note by whatever name called. And what are these specified goods? Already we have seen. And in case of GTA, what are the rates that are applicable? So either FCM, so that is FCM again 12% or 5% without ITC, and or RCM 5%. They can select an option during a financial year. Such option when they need to select between 1st January to 31st March of the previous year, and option 1 selected remains till the subsequent selection is made. Then next, this is a very important circular. So there are 3 different circulars which are given related to what is renting of motor vehicles, what is contract carriage on hire, etc. So merging that, I have just given this chart. So please concentrate. There is a owner of a vehicle who is providing services to the person requiring the vehicle for transportation. But in which vehicle? Non-AC vehicle. Non-AC vehicle. Okay. Now, whether this vehicle is operated in a predetermined routes based on predetermined schedule. Yes. What does that mean? Like you are one company. You wanted me to pick your employees and drop in the office. Again evening, pick the employees from the office and drop in the respective places. Means the route is predetermined. The schedule is predetermined. Correct? Now monthly I will be collecting some amount. Now this will not be called as renting of motor vehicles. This will be called as contract carriage other than tourism or hire. Other than tourism or hire. So consequently it will be taxable or exempted? Exempted. What if it is AC? Because just now we saw non-AC contract carriage is exempted, correct? Non-AC contract carriage other than tourism or hire is exempted. So therefore, this is a non-AC contract carriage other than tourism or hire, therefore it is exempted. What if it is a AC contract carriage? AC contract carriage always taxable. Got it? Then, suppose if the vehicle is at the disposal of the recipient, means I am giving the vehicle to you. The vehicle is at your disposal. You are only having that vehicle. Okay. Now in this case, for the period, you are only having the vehicle. For a period of time or for a particular voyage or journey, that you check. Is it for a period of time, month or 6 months or 1 year, like that, or is it for a particular voyage? So you are taking, your employees or your people on a vacation. So now for the completion of the vacation, the vehicle will be with you only, correct? If it is for a particular voyage or a journey, then also it will be called as contract carriage, but this will be called as contract carriage for tourism or hire. Got it? Therefore, it will be coming under taxable. Why sir it will be taxable? Because non-AC for tourism or hire will be taxable. Other than tourism or hire is only exempted. Therefore, it will be taxable. And why FCM? Contract carriage, we don't have RCM. In the list of RCM, we don't have contract carriage. Suppose, if the vehicle is at the disposal of the recipient for a period of time, if it is at the disposal of the recipient, then what it will be treated as? It will be treated as renting of motor vehicles. So then, renting of motor vehicles will be taxable. Whatever exemption that we have for motor vehicles is not applicable here. What are the exemptions we have for motor vehicles? So a motor vehicle more than 12 passengers to state road transport undertaking, electric motor vehicle to local authority and GTA and education institution school, but it is not covered there. Therefore, it will be taxable. Wherever renting a motor vehicle is taxable, again we have three conditions. What are the three conditions? Supplier should be other than body corporate, recipient should be body corporate, rate of GST 5%, then it will be RCM. Other cases it will be FCM. So this circular mainly identifies the difference between contract carriage means what, renting a motor vehicle means what. Definitely this will be tested here. Very, very important. So there is a chance of asking questions on this. Then there is one query, sir, in case of electricity amount collected along with rent and such EB is on actual basis, then EB will be exempted by business entity registered. No, see, basically you should remember one thing. When my expenditure is exempted, when I recover that expenditure from you, not that the expenditure will also become exempted. Example, toll charges is exempted. Concentrate. This is the mistake what everyone will do this. Toll charges is exempted. I am a transporter. I incur the toll charges. Toll charges exempted. When I recover the toll charges from you, the name of this charges is not toll charges. The name of this charges is transportation service. So this expenditure will be part and parcel of my transportation charges. Are you getting this? I am not providing the toll to you. I am not collecting the toll charges from you. I already paid toll charges. When I recover these expenses, the character of these expenses is the character of the main activity. You understood? Same way, electricity charges I am paying as association. So electricity charges is exempted. There is no GST on electricity. But the moment that electricity charges is recovered from you, the nature of this, I am not providing electricity, boss, to you. I am not providing electricity. Electricity is provided by some other person. I paid for that. That is exempted. When I recover it from you, the name of it is not electricity charges. Then what is it? Maintenance charges. In that electricity charges will be added. You understood? So don't tell electricity charges as exempted because I am not giving electricity. I did not create a solar power plant and I am not supplying electricity to you. If I am doing that, then it is exempted. You got it? So here that is not the case. So when my expenditure is exempted, the moment I am recovering that expenditure from you, don't add the character of the exemption to the expenditure. This expenditure character will change now. Simple here, when a girl gets married, her house name will change or not? Yes or no? Correct. Surname will change na? Like that. So here the expenditure was called as electricity. But the moment we are recovering, the name will change. What is the name of it? Maintenance charges. You got it? Like that. Then, and don't take this example in wrong sense and all. So feminism, Jindabad, okay. Say this. So import of services. So the next aspect is import of services. Import of services is divided into two. OIDR service other than OIDR service. Already we made a discussion related to this. OIDR service always taxable. Who will pay GST in case of OIDR service? If it is imported by non-taxable online recipient, it will be taxable under FCM. If it is imported by other than non-taxable online recipient, it will be taxable under RCM. OIDR service always taxable. It's only the matter of who will pay GST, FCM or RCM. If imported by NTOR, it will be FCM. If imported by other than NTOR, it will be RCM. Whereas other than OIDR service, we have one exemption. If it is imported by NTR, then it will be exempted. If it is imported by other than NTR, then it will be taxable under RCM. So what is the meaning of OIDR service? Basically a service which is mediated through internet over information technology. It is called as OIDR services. So online information database or retrieval services means service whose delivery is mediated by information technology over internet, and the nature of which renders their supply impossible to ensure in the absence of information technology, and includes electronic services such as, so they are telling includes electronic services such as advertising over the internet. Example, Instagram, YouTube will come under OIDR services. providing cloud services like QuickBooks, SAP HANA, these are examples of cloud services. Then provision of e-books, movie, music, software and other intangibles, Kindle, Spotify, Apple Music, these are all examples. Then providing data or information retrieval or otherwise to any person in electronic form through a computer network. Udemy, so there will be some courses which you will enroll, and Canva, so Canva for designing purpose you can access. Again it is working on cloud, so it's a OIDR service. Online supplies of digital content, movies, television shows, etc. Example Netflix, Amazon Prime, OTT platforms. Digital data storage, example iCloud, Google Drive, etc. Then online gaming also, yes, Minecraft, it will work on server. So then GTA Vice City, same. Excluding online money gaming. So OIDR service excludes online money gaming. Why? Because online money gaming will come under specified actionable claims. Then non-taxable recipient means already we know. Who is non-taxable recipient? Any unregistered individual importing for personal purpose, or a charitable trust importing for charitable activities, or government importing for other than business or commerce. Who is non-taxable online recipient? Any unregistered person or a registered person who is registered only to deduct TDS. Then next one, construction services. So in construction services, first point, construction of an individual house. So you are constructing an individual house, whatever may be the floor area, whatever may be the consideration, the money received by me as a contractor will be exempted irrespective of the floor area. What is called as individual house? House occupied by an individual, single family is called as individual house. For example, Antilla, like that one big house is there in Mumbai. So Mukesh Ambani's house, and now that is called as an individual house, surprisingly. Why it is called as individual house? Because it is occupied by one family. So it will be called as an individual house. And whatever money that is being collected for construction of that house will be exempted. But it should be a pure labor contract. Means what? It should not be works contract. It should be a pure labor contract. We should not buy the material as a contractor. So all the material required for construction they should buy. We should only do the construction services. Then it will be exempted. Then construction, repair, alteration, renovation, etc. of following projects is exempted. Again it should be pure labor contract and not works contract. That is Housing for All Mission and Pradhan Mantri Awas Yojana. What is the difference between first point and second point? In the first point only construction is exempted, but in the second case both construction and repair is exempted. In the first case it should be construction of individual house. In the second case it will be construction or repair of government projects, that is Pradhan Mantri Awas Yojana and Housing for All Mission. Then third point, so that is 1/3 will be reduced towards UDS. Already I told you while discussing 7.5%, 1.5%, whenever we are selling the flat and that flat includes the undivided share of land, we will exclude the undivided share of land. How we will exclude? 1/3 of the gross amount is always treated towards the UDS. For example, if the flat is 75 lakhs and 25 lakhs will be excluded towards UDS and remaining 50 lakhs only will be taxable. Then, but this is applicable only in case of residential units only, and even for commercial units it will be yes, provided they are charging some amount towards the land. Wherever they are charging some amount towards the land, this will be constant. So for residential as well as commercial, but they should be charging some amount towards the undivided share of land. Then next one, transfer of development rights. So TDR, FSI and long-term lease, proportionate exemption we have seen. What is that proportionate exemption? Value of inward supply of TDR, FSI and long-term lease into 18% into carpet area of the residential units booked before completion certificate of first occupation, whichever is earlier, divided by total carpet area of the project. For example, you see this. Value of inward supply of TDR, FSI is 10 lakhs, excluding GST 18%. So therefore, GST payable on inward supply is 10 lakhs into 18%, 1,80,000. Floor area of the residential units booked before completion certificate is 28,000 square feet. And total floor area of the project is 50,000 square feet. So how much will be exempted? 1,80,000 into 28 divided by 50. So therefore, 1,800,000 will be exempted. So remaining will be taxable. What is it remaining? 1,80,000 minus 1,800,000, 79,200 will be taxable. Then next, advocate services already we have seen. So in case of advocate services, individual advocate and firm of advocates, we have total 4 exemptions. What is that? If they are providing services to a person other than business entity, that is exempted. If they are providing service to another individual advocate or form of advocate, it is exempted. If they are providing services to central government, state government, local authority or government authority, it is exempted. And if they are providing services to a business entity whose turnover during the previous year does not exceed threshold limit, it is exempted. But in these 4 points, which point? Service provided to individual advocate or form of advocate is not applicable to a senior advocate. In that case, who should be taken as the recipient? The ultimate litigant or applicant or petitioner should be taken as the recipient. So see the next page. For senior advocate and arbitrator service, we have only 3 exemptions. If they are providing services to a person other than business entity, it is exempted. If they are providing service to government, it is exempted. If they are providing services to a person, business entity whose turnover during previous year does not exceed threshold limit, is exempted. And service provided by senior advocate to individual advocate or firm of advocate is not exempted. In that case, who will be taken as the recipient? Ultimate litigant, applicant or petitioner shall be deemed to be recipient, and accordingly we need to interpret. And one more point is also there. Section 23 overrides section 24. So as advocates outward supply is fully covered under RCM, so they are exempted from registration. And if they have some inward supplies on which they need to pay GST under RCM, they are not required to pay GST because section 23 overrides section 24. These points already I have seen before, I am just giving it. Then next we have exemptions under IGST Act. So in these exemptions under IGST Act, 4 exemptions are there. Number 1, if both supplier of service and recipient of service located outside India, all services are exempted. Previously one service was there, transportation of goods by vessel from outside India to India. The importer of such goods is required to pay GST, like that one point was there. And because of the Supreme Court judgment in Mohit Minerals case, that particular exemption, that particular taxability got removed, which means now you remember, after amendment you remember what is that? Supplier of service outside India, recipient of service outside India. There is no GST on that. All services will be exempted. Then number 2, services provided by an Indian tour operator. So that Indian tour operator is providing tour operator service to whom? To a foreign tourist, where the tour is conducted fully outside India. Now whatever money that is collected will be exempted. So Indian tour operator to a foreign tourist in relation to tour conducted wholly outside India. Why won't it become export of service? Tour operator will be called as intermediary. In case of intermediary service, as the place of supply is location of supplier. As the place of supply is location of supplier, that is India, it will not become export of service. But basically these services are provided to foreign tourists, which means foreign exchange will be coming to India. Due to that reason, they have given exemption separately. So what is the exemption? Indian tour operator providing tour operator service to a foreign tourist in relation to the tour conducted wholly outside India. What if the tour is conducted in India? Then entirely it will be taxable. What if the tour is partly in India, partly outside India? That is the next point. Then proportionate to the number of days the tour conducted outside India, it will be exempted. Services provided by tour operator to a foreign tourist in relation to tour conducted partly in India, partly outside India. Exemption is with respect to that part of the tour which is conducted outside India. And how to compute that? Total consideration into number of days the tour is outside India divided by total number of days. For example, 1 lakh is the consideration. Number of days tour conducted outside India is 6 out of the total number of days of 10 days. Now 1 lakh into 6 by 10, that is 60,000, or 50% of the total consideration. Whichever is lower is only exempted. So the exemption, maximum exemption is only 50%. So therefore total consideration into 50%, whichever is lower will be taken. Suppose number of days the tour conducted outside India is 4 days. So 1 lakh into 4 by 10, 40,000. 40,000 or 50,000, whichever is lower, 40,000 is only exempted. Now suppose while calculating the number of days, suppose if the time spent outside India is more than or equals to 12 hours, you count it as full day. For example, 3 days, 9 hours will be counted as 3.5 days. If it is less than 12 hours, it will be considered as half day. So therefore 3 days, 8 hours considered as 3.5 days. 3 days, 16 hours will be considered as 4 days. Then fourth point, services provided by an intermediary where location of both supplier and recipient of goods is outside India. So what is this fourth point? There is a seller of goods outside India, buyer of goods outside India. You are an intermediary, a commission agent who is located in India, connecting the seller and buyer outside India. as you are acting as a commission agent, you will be receiving some commission. That commission will be exempted. Again, why we call it as exemption? Why won't it become export of service? Again, the same story, intermediary services. The place of supply will be location of supplier. Where the intermediary is located, India, then it will not become export of service. But as you provide the services to people outside India, so it will be bringing foreign exchange currency. Due to that reason, they have given this exemption. Okay. So what is this fourth point here? Intermediary located in India, connecting seller outside India, buyer outside India, for which you get a commission. That commission will be exempted. Now, what is the difference between first point and the last point? In the first point, supplier of service outside India, recipient of service outside India, the entire activity is exempted. Fourth point is seller of goods outside India, buyer of goods outside India. We are not talking about the goods here. We are talking about the intermediary service who is in India. That intermediary service is exempted. The next, miscellaneous exempted services, transfer of going concern as a whole or independent part thereof. Example, slump sale or entire sale of business as lock, stock, barrel, or transfer of business. No need to pay GST on the sale consideration. Then, supply of service associated with transit cargo to Nepal and Bhutan. So, Nepal and Bhutan are landlocked countries. Any goods which are to be imported to Nepal and Bhutan will be imported into India because of the MOU that India is having with Nepal and Bhutan, and thereafter the goods will be taken from India to Nepal and Bhutan. And for this movement of goods, if you provide any services, so transit cargo services like loading, unloading, transportation service to these goods, the money received will be exempted. So that is the supply of service associated with transit cargo to Nepal and Bhutan. Both to and from covered in the exemption as per CBIC circular. And if the cargo container returns empty, that is, you are collecting money not only for taking the vehicle, but also returning empty na, for that also you will collect some charges. Even that charges is also exempted. Suppose while returning, if you carry the goods and for that if you collect some charges, that charges will be taxable. That charges is not exempted. Only going from India to outside India, that Nepal and Bhutan is exempted, and return empty it will come. For that you will collect some charges, that is exempted. But while returning, when they load some goods and they are bringing it, for that you collect some charges, that charges will be taxable, that is not exempted. Then service by way of collecting or providing news by an independent journalist. Independent journalists will be working with any newspaper or news channel, so they will be getting money from the newspapers or news channel. They will not be associated permanently. They are not like employees, they are like freelancers. That money earned by independent journalists will be exempted. Same way, money earned by PTI and UNI. PTI and UNI are news broadcasting agencies. So these people will collect the news and they will be disseminating the news to the newspapers and news channels. So these people will collect money. So for example, you want to give some news and that should come in all the newspapers. Go to PTI or UNI, you pay some money to them. It is like a press club. So they will be releasing the news to all the newspapers and news channels. So the money collected by them will be exempted. Then service of public libraries by way of lending of books. So there are a lot of public libraries. So wherein public library means it is accessible to general public. Any person can go to that library, and if they are providing books on rental basis and for which they collect some lending charges, that lending charges is exempted. What if it is a private library? If it is a private library, then the money collected will be taxable. What if the private library is operated by an educational institution? Then in that case it will be coming under educational institution exemption. Services provided by educational institution to its students, faculty and stuff, there it will be coming. Then services by an organizer. There is an organizer who is organizing a business exhibition. Where the business exhibition is held outside India. I am organizing a business exhibition. You are my recipient. You are in India, I am also in India. But where the exhibition is held outside India, it will indirectly encourage exports. Due to that reason, this service, exhibition service, is exempted. What if the exhibition is held in India? We don't have any exemption with respect to that. Then number 6, services by way of public conveniences such as provision of facilities of bathroom, washroom, lavatories, urinal or toilet. So for this public toilets, 1 rupee, 2 rupees collected na, and now 5 rupees they are collecting. So that is also exempted, no GST on that. Service by way of accessing to road or bridge on payment of toll charges. This is what I told you. Toll charges are basically exempted. There is no GST on the toll charges other than by way of annuity. So toll charges is nothing but recovery of expenses. So they will invest in laying down the road and they will recover it from the people who are using that road. But there is toll charges by way of annuity. So when the government is using that road, so they will be paying annually some charges to this builder, So that annuity previously was exempted and now they have removed it. So therefore toll charges by way of annuity is taxable. Then overloading charges at toll plazas is also exempted. Sometimes what will happen, big vehicles and all will go in the toll gates, so for which there will be some extra charges collected, overloading charges, that overloading charges is also exempted. Then higher toll charges because of not having a functional FASTag. FASTag would have been expired or there is no balance in the FASTag. Then in that case what will happen? So we have to pay by cash. When we pay by cash, they will be collecting double charges. So the double charges is also toll charges only, that is also exempted. Then services by performance artist. There is a performance artist. Who is a performance artist? One who performs before the audience is known as performance artist. In folk or classical art form of music or dance or theatre, where the amount charged is up to 1,50,000. So in what genre they need to do? Either in folk or classical. And what is the art form? Either music, dance or theatre. Theatre means stage shows. Okay. And how much should be the consideration per performance? It should not exceed 1,50,000. However, if they are acting as a brand ambassador, even if the amount does not exceed 1,50,000 entirely, it will be taxable. Then services by way of training or coaching in recreational activities relating to arts. Arts or culture should be by an individual. So there is a arts training center or a culture training center like some martial arts or dance or kung fu etc. and all, or culture like imparting Vedas, Upanishads or any language, it should be by an individual, then only it will be exempted. If it is sports coaching centers, that sports coaching center should be registered as a trust. The sports academy should be registered as a charitable trust, then the money collected by them will be exempted. Then satellite launch services supplied by any person. Any person, previously they have given, so this is also an amendment. Previously they have given Antrix Corporation, ISRO and New Space India Limited like that, but now it can be any person, mainly because they wanted to attract this Elon Musk into India to bring his SpaceX business here, so that some revenue will be generated for Indian government. So that's why they are telling satellite launch service provided by any person. So it can be private or anyone, that will be exempted. Then these are the various exemptions that we have with respect to GST. And so we have completed this. Look into time of supply also we have completed. We'll take a break and then we will start with place of supply. Okay. Meanwhile, on exemptions, if you have any doubts, online students, just post it. I'll explain after break. Okay, I'll start. So related to exemptions, there are 3 queries. Any services provided to government entity will be taxable. No, it's not taxable. There are 5 activities we saw now that is exempted, and remaining activities will be taxable. That water supply, public health, sanitation, conservancy. So that is applicable for government authority. Government authority includes government entity also. So that is exempted, and remaining activities, anything will be taxable. And next one, in RTP for May 24, question number 6, rent paid to residential dwelling taken for running an office for providing DSA services. Okay, owner unregistered. In answer, they have considered this under RCM, but it is FCM, right, sir? That's what I said in the last class also. There is a confusion right now that renting of residential property for commercial purpose, whether it is FCM or RCM, there is a confusion. So yesterday I gave you one table. So in that I said that, so it is FCM because it should not be RCM. So maybe it is a mistake in the RTP, but I will check that once. Anyhow, I will post one video on RTP discussion in this YouTube channel that you can refer. Okay. Then, and some more students have requested me to do MCQ marathon as well. Yes, that is also I am planning. So, but that I am planning in April first week, like that. So reason being, I want to complete this revision MAY24 first, and then I will do that. Okay, I will let you know, I will inform you so that we can do it like online live itself, MCQ marathon. Some 100 MCQs we can see, top MCQs, and we can practice that. Okay. Then next, sir, if a body corporate avails passenger transportation service for specific journey and does not take vehicle on rent, is it exempted or is it covered under contract carriage? So actually for a specific journey they are telling. Specific journey means it will come under contract carriage. If it is on a predetermined schedule on a predetermined route means it will be coming under contract carriage other than hire. But if it coming under specific voyage or specific journey means it will be contract carriage on hire and it will be taxable. Let it be AC or non-AC, it will be taxable. Okay. Then kindly tell the name of this book. It's already there in the description. You please check, dear. It's there in the description of this video. Fine. So now we are moving on to place of supply. This is a very, very important chapter, as I told you in the beginning itself. So place of supply is divided into 2. So total 4 sections we have for place of supply. That is section 10 and 11 in case of goods, 12 and 13 in case of services. What is the purpose of place of supply? Mainly to determine whether a transaction is intrastate supply or interstate supply or import or export. That depends upon the place of supply. So here place of supply, 4 sections. Section 10 deals with place of supply in case of goods, domestic transaction. 11 deals with place of supply in case of goods, international transaction. International transaction means import and export. Then place of supply in case of services. So 12 and 13 we have. 12 is applicable if both supplier and recipient are located in India. 13 is applicable if any one in India and the other outside India. Now, what if both supplier and recipient are located outside India? Whether place of supply is applicable, not applicable. Because just now we have seen when both supplier and recipient are located outside India, all the services are exempted. So if both supplier and recipient located in India, place of supply cannot be determined and it is exempted. Now we are looking into section 10. In case of section 10, section 10 is applicable when in case of goods, domestic transactions. So you try to remember this along with the clause. So 10(1)(a), when which situation will be applicable? 10(1)(a), supply involves movement of goods. 10(1)(b), bill to ship to transactions. 10(1)(c), supply does not involve movement of goods. 10(1)(d), assembly or installation at site. 10(1)(e), supply of goods on board during the journey of a conveyance. Okay, on board in a conveyance. So that is 10(1)(e). Total 5 situations we have. 10(1)(a), supply involves movement of goods. What will be taken as the place of supply? Ending point of the goods will be taken as the place of supply. If it is B2B transaction, there is an amendment here. B2B transaction, ending point will be taken as place of supply. B2C transaction, location of recipient in the records of supplier, otherwise location of supplier. So this is an amendment. Please see this. Supply involves movement of goods. If it is B to B, we will take ending point. If it is B to C, then we will take location of recipient in the records of the supplier. Otherwise, we will be taking location of supplier. And 10(1)B, bill to ship to transactions. Bill to ship to transactions, it is like on the instructions of my third person, the goods are delivered to the recipient. So you are the recipient. You place the order and you are asking me to deliver the goods to a third person. Now in that case, I will raise invoice to you. You are my billing address. The third person will be the shipping address. So in case of bill to ship to transaction, what will be the place of supply? It's not the ending point of the goods, but the billing address will be taken as the place of supply. And let it be B to B or B to C, answer is same. There is no change in that. Whereas 10(1)C, supply does not involve movement of goods. Supply does not involve movement of goods. We need to take location of goods at the time of delivery. And suppose if it is B to B, suppose if it is B to C, same way, location of recipient in the records of supplier, otherwise it will be location of supplier that will be taken. Example, so there is a person who owns a ship and that ship is located in the Mumbai port. Now this person who is located in Tamil Nadu is selling the ship by way of transfer of documents to the title. Say this, Mr. A is located in Tamil Nadu, whereas Mr. B is located in Kerala and Mr. A is registered person, whereas Mr. B is unregistered person, and there is a ship which is located in Maharashtra. Okay. Now Mr. A transfers the document of title, transfer documents of ship to Mr. B, for which Mr. B pays the consideration, and where the ship is located? The ship is located in Maharashtra. Now in that case, whether it is 10(1)A or 10(1)C, 10(1)C, the place of supply will be determined under section 10(1)C. Why? Supply does not involve movement of goods. Where the goods are located? The goods are located in that place only. So when supply does not involve movement of goods, what will be taken as the place of supply in this case? Section 10(1)C. Before amendment, we used to take Maharashtra as the place of supply. Location of goods at the time of delivery. So location of goods is where? Maharashtra. But now the position has changed. As it is a B to C transaction, we need to take location of recipient in the records of the supplier. What is the location of recipient in the records of supplier? That is Kerala will be taken as the place of supply. Okay. Now, what if Mr. B is registered? What if Mr. B is registered? Then what will happen? Still the same section, but it will become B to B. 10(1)C, it will become B to B, and in case of B to B, location of goods at the time of delivery. What is the location of goods? Location of goods, that is Maharashtra, will be taken. Now, what if Mr. B is unregistered and his details not available with Mr. A? So what if Mr. B is unregistered, B to C transaction, and his details are not available with Mr. A? Then section 10(1)C. As per section 10(1)C, it is B to C, location of recipient not available in the records of supplier. So location of supplier will be taken. What is the location of supplier? Tamil Nadu will be taken. So like this, the position will change. Previously, it was only one answer. What is that answer? So location of goods, that is Maharashtra. But now because of change in the provision, so they can change this way. Then next one, 10(1)A. So 3 points we have seen. 10(1)A, supply involves movement of goods. Ending point will be taken for B to B, and for B to C, location of recipient in the records of supplier, otherwise location of supplier. And 10(1)B, remember B for bill to ship to transactions, billing address will be taken as the place of supply. 10(1)(c), supply does not involve movement of goods. So we need to take place of supply as the location of goods at the time of delivery in case of B2B. In case of B2C, location of recipient in the records of supplier, otherwise location of supplier. 10(1)(d), goods are assembled or installed at site. So in that case, we will take location where the goods are assembled or installed. And supply of goods on board in a conveyance. So starting point of the goods will be taken as place of supply. Then section 11, in case of import of goods, location of importer, not location where the goods are imported, but location of importer will be taken. In case of export of goods, location outside India will be taken as the place of supply. Now, in case of conflict between 10(1)(a) or B or C versus 10(1)(d) or E, which section will prevail? 10(1)(d) or E will only prevail. For example, you are asking me to install a machine in your branch in a different state. Now, I am taking the goods to the different state and I am doing the installation, and I raised invoice to you in this state. I am located in Tamil Nadu, you are also located in Tamil Nadu, you asked me to install it in Karnataka. Now in this case, I will take the goods to Karnataka, I will install it there and I will raise invoice to you. Logically, it's a bill to ship to transaction. Why bill to ship to transaction? You are my billing address, but I am delivering the goods in a different location. So it's a bill to ship to transaction. If you apply bill to ship to transaction, your billing address. So billing address will be taken as, your address will be taken as a place of supply. But actually 10(1)(b) should not be applied here. Why? This is a specific provision for installation or assembly at site. As it is installation or assembly at site, we need to take location where it is installed. Where is it installed? Karnataka it is installed. So Karnataka only will be taken as the place of supply. It's not an intra-state supply, it will become interstate supply. Remember, prefer specific provision over general provision. That's what I have given in the note. In case of conflict between 10(1)(a), B or C over 10(1)(d) or 10(1)(e), then 10(1)(d) or E shall prevail because specific provision prevails over general provisions. And then one more point you need to remember, if you are determining the place of supply under section 13. So place of supply under section 13, when we will determine services, when either supplier is in India or recipient in India and the other outside India, one in India and the other outside India, then in that case section 13 will come. Already we learned that wherever section 13 is applicable and if the place of supply is in India, it will be deemed interstate supply and it will be chargeable to IGST. Now we are moving on to section 12 and 13. So 10 and 11, this is what you need to remember. Then in case of 12 and 13, so easily try to remember this 12 and 13. First, general provisions. So situation wise you need to remember general provisions. So general provisions, when it is applicable in the absence of specific provisions, general provisions will be applicable. So nature of service, general provisions. So if it is section 12, B2B location of recipient, B2C location of recipient in the records of supplier, otherwise location of supplier. So that is the general provision. Whereas in case of 13, always it is location of recipient in the records of supplier because we don't have the category of B2B and B2C. So therefore it is location of recipient in the records of supplier. In the absence of that, location of supplier will be taken. So literally whatever is there as B2C here, that will be the provision in case of 13. So this is general provisions. So majority of the cases where there is no specific provisions, general provisions only will be applicable. Then second one is service in relation to immobile property, including accommodation services like renting or accommodation or construction service, architect services, real estate broker service. All these are service in relation to immobile property. In case of 12, check whether property is in India. Yes, then location of property is the place of supply. If property is outside India, what will be taken as place of supply? Location of recipient. Whereas in case of 13, always it is location of immobile property wherever the property is located. Then next, third, performance based service in relation to individuals. Examples of performance based service in relation to individuals is what? So for example, I am taking classes. This is an example of performance based service in relation to individual. Then personal grooming or training or performance evaluation or supply of food. So means recipient is individual. That is the meaning of performance based service in relation to individuals. If it is section 12, section 12 divided into 3. That is it related to food and beverages, outdoor catering, beauty treatment, etc. Then we need to take location where services are actually performed. Food and beauty related. In case of food and beauty related, performance location. Suppose if it is training and performance appraisal, in case of training and performance appraisal, we need to check whether it is B2B or B2C. If it is B2B, we need to take location of recipient. If it is B2C, location where services are actually performed. And in all other services, it will be general provisions. So 3 points you need to remember. For performance based service in relation to individual, related to food and beauty, it will be location where the service is performed. Relating to training and performance appraisal, B2B location of recipient, B2C location where services are actually performed, and all other services it will be general provisions. Whereas section 13 you see, so physical presence of the recipient required, location where services are actually performed, physical presence of the recipient not required, then we will be taking the general provisions. Then next one, performance based service in relation to goods. So for this, in case of section 12, we don't have any provision. So therefore, the general provisions will be applicable. Whereas in case of section 13, divide it into two. Physical presence of the goods required, physical presence of the goods not required. If physical presence of the goods required, location where it is actually performed, but we have 4 exceptions. In case of these 4 exceptions, it is not location where services are actually performed, but we will be going by the location of recipient. What are those 4 exceptions? If goods are temporarily imported for carrying out repairs or any other process, and it is exported after repairs or process without being put to use, then it is not location where service actually performed, but location of recipient will be taken as place of supply. Second exception, if we are doing some testing or process on the pharmaceutical products which are being imported, then also location of recipient will be taken. What is the difference between first exception and the second exception? In the first exception, after the process, the goods should have been exported without put to use. But in the second exception, that those goods, that medicines will get destroyed. The pharmaceutical medicines will get destroyed. So that will not be exported. Even then, location of recipient will be taken as place of supply. Then third exception, that is in case of repair, maintenance or overall in relation to aircraft or aircraft parts which are used for business purpose of the recipient. Then last point related to ships. In case of repairs, maintenance and overall in relation to ships or its parts which are used for the business purpose of the recipient. So these are the 4 exceptions. And in case of these 4 exceptions, we need to take location of recipient as place of supply. This is exception 2. So physical presence of the goods required, performance, location will be taken. Whereas if physical presence of the goods are not required, what will be taken as a place of supply? Location of goods will be taken as place of supply. Then event related services. In case of event related, there are 2 things: admission to an event, organizing an event. So look into section 12. For admission to an event, location where the event is held, no more discussion there. Location where the event is held. But for organizing an event, we need to check B2B or B2C. B2B, location of recipient. B2C, location where the event is held. What if the event is held outside India? Then location of recipient will be taken as place of supply. But for section 13, we don't have any confusion like this. Let it be admission to an event or organizing an event. Always location where the event is held will be taken as place of supply. Then transportation of goods services. In case of transportation of goods services, there is an amendment now which says that in case of 12, it will be B2B, location of recipient, B2C, starting point of the goods. Previously, we had different provisions, India to outside India, ending point, otherwise starting point, like that. Now, no confusion. Always it will be transportation of goods, B2B, location of recipient, B2C, starting point of the goods. Whereas in case of section 13, previously we had specific provision, now they have omitted it, and therefore general provisions will be applicable. Then transportation of passengers. Transportation of passengers, so literally same for 12 and 13. So if you, literally same for 12 and 13, and moreover for 12 goods point and passenger point also same. You observe here, transportation of goods, transportation of passengers, B2B location of recipient, B2B location of recipient, B2C starting point of goods, B2C starting point of passenger. Okay, and here in case of 13, we don't have B2B, B2C classification. So always it will be starting point of the passenger. Now if you observe, where and all you can see B2B, B2C classification, just quickly go through that table. You can see B2B, B2C classification only in few places, correct? That too in 12. In 13, we don't have B2B, B2C classification. 12 and 13 only we get confused. That's why I'm telling you. So in case of 13, we don't have B2B, B2C. So therefore in 12 only we have B2B, B2C. That too where and all we have, just check, training and performance appraisal, that is one place. Then organizing an event, that is another place. Then transportation of goods or passengers together. So you remember TOT, only in 3 places we will have B2B, B2C classification. What is a TOT? T for training and performance appraisal, O for organizing an event, T for transportation of goods or passengers. In that case only we have B2B, B2C, and B2B will be location of recipient, B2C will be respective provision. So what you need to do, you remember only B2C provision, because you know where and all B2B will come, and in that place location of recipient. So when you are remembering, don't remember B2B, B2C classification, you remember only B2C provision, and B2B will come in which place? Come on, respond. Only 3 places, training and performance appraisal, organizing an event, transportation of goods or passengers. B2B will be location of recipient. Okay. Then, so therefore what you need to remember, in case of training and performance appraisal, location where the service are actually performed. Organizing an event, location where the event is held. If the event is held outside India, location of recipient. Transportation of goods, starting point of goods. Transportation of passenger, starting point of passenger. Then next, services on board a conveyance. So in case of goods on board a conveyance, what we have taken? Starting point of goods. In case of service on boarding a conveyance, it is the starting point of the conveyance. Goods sold on board a conveyance, starting point of the goods. Services provided on board a conveyance, starting point of the service we don't know. So starting point of the conveyance, where the conveyance starts, that will be taken. Again it is common between both goods and both 12 and 13. Starting point of the conveyance, starting point of the conveyance. Then in case of OIDR services, so in case of 12 it will be general provisions, we don't have any specific provision. In case of 13 it will be location of recipient. Then banking and other financial services. See, if you look into this, OIDR, banking and other financial service, intermediary services, and hiring of a means of transport, in all these places, for 12 we don't have any specific provision, so general provisions is only applicable. Okay. So what are the cases where in 12 we don't have specific provisions? OIDR, banking, intermediary, and hiring of means of transport. Okay. Only 13 we have. So in all these places 12 will be general provisions, and OIDR, what is the specific provision for 13? Location of recipient. Then banking and other financial services, what is the specific provision? If the service is provided to account holders, location of supplier. Otherwise it will be general provisions. That is very, very important. If the service is provided to account holders, then only it will be location of supplier, otherwise general provisions will be applicable. Whereas for intermediary services, always it is location of supplier. And next we have hiring of a means of transport. For hiring of a means of transport, divide it into 2. Vessels or aircrafts, always general provisions. Any other vehicle up to 1 month will be location of supplier, and beyond 1 month will be general provisions. Okay. So here you need to know one point. 3 places location of supplier will be coming as the place of supply. What are the 3 places where location of supplier is place of supply? Remember RBI. Remember RBI. Or renting. Renting of what? Renting of what? Other than aircraft or vessel up to a period of 30 days. Okay. So here we will be taking what is the place of supply? Location of supplier. And then B for what? Banking and other financial service to account holders. I for what? Intermediary services. In these 3 places it will be location of supplier. I have given that below. You need to just write the short forms. So B2B, B2C, you remember it as TOT, training and performance appraisal, organizing an event, transportation of goods or passengers. So in these 3 cases only B2B, B2C classification will come. Then location of supplier will be taken as place of supply in 3 cases. That is that RBI. R for renting of other than aircraft or vessel up to a period of 30 days. B for banking services only to account holders. I for intermediary services. Then next, telecommunication service including broadband and DTH, and advertisement services to government. in these two places, for 13 we don't have any specific provision, it is general provision. For 12 only we have the specific provisions. Clear? So what are those two? Telecommunication, including broadband and DTH, advertisement service to government. In case of telecommunication services, including broadband and DTH, so check section 12. If it is a fixed line, location where the equipment is installed. If it is mobile, check whether it is postpaid or prepaid. If it is postpaid, we will be taking billing address. If it is prepaid, so prepaid, is it online recharge? Yes. Then location of recipient in the records of supplier. Otherwise, it is location of the dealer. So where he is located. So in case of prepaid, dealer address. If it is online recharge, general provisions. Advertisement service to government. So each state where the advertisement is provided, that will be taken as the place of supply. Now you need to remember this like this only, and the short forms, to some extent it will help you here. What is that? B2B, B2C classification only in 3 places, and location of supplier will be taken as place of supply in 3 places. That is banking, renting other than aircraft or vessel up to a period of 30 days, banking service to account holders, and intermediary service. Basically, what is an intermediary service? Intermediary services means there is a main activity and I am facilitating or arranging that main activity, then my service will be called as intermediary service, like commission agent or broker, etc. will be called as intermediary. Now BPOs will not come under intermediaries, because the moment it is outsourced, it's a continuing activity, that will not come under intermediary. Intermediary is like one time activity. I'm just connecting the seller and buyer, I'm just connecting the supplier and recipient, my job is done. So that is only called as intermediary services. That's what I have given below. You see, meaning of intermediary: an intermediary is someone who arranges or facilitates the transportation, the supply of goods or services or securities between 2 or more persons, wherein 2 of them transact in the supply of goods or services, the main supply, and the one in arranging or facilitating the said main supply. Therefore, outsourced activities do not fall under intermediary services. Okay. So this is about section 12 and section 13. Then there are few places between 12 and 13, there is no change in the provision. What are those? Search and tell me. In case of admission to an event, both cases it is same, location where the event is held, just check. And then in case of transportation of goods, not passengers, transportation of goods, transportation of passengers, it is starting point of the passenger, starting point of the passenger, correct? Of course, B2B, B2C difference is there, but the provision will be same. So admission to an event also, 12 or 13, the provision is same. What is that? Location where the event is held. Transportation of passengers also, it is starting point of the passenger, starting point of the passenger. Services on board a conveyance, there also we have starting point of the conveyance. Okay. Then we have IGST rules related to this place of supply. First, rule 3 we need to see. So we have these rules not tested in the old syllabus. So in old syllabus, not even one question they have asked on these rules. So I don't know whether it will be asked in future or not, but it's an untapped area. And if at all they want to make a question out of it, they can definitely make it. Is there in the syllabus. So first you need to know when which rule is applicable and what is this rules about. Basically these rules is about apportionment. Somewhere in intermediate overheads chapter you would have learned the apportionment on some basis, base of apportionment. Electricity means on the base of mission hours or lighting, etc. you will apportion like that. Some basis of apportionment we have. Why it will happen like this? Wherein the contract price will be a single price and we will be providing the place of supply in more than one state. Now the contract price needs to be apportioned between the states. For that, what is the base of apportionment? First, rule 3. When rule 3 is applicable, advertisement service to government. So in case of advertisement service to government, can you please refer and tell me what is the provision? So each state where the advertisement is provided. Now advertisement service to government, there is a single contract and the total contract amount, how we need to apportion. So for that they have given different basis of apportionment. If the advertisement is on the train, you take the length of the track and divide it between the states. For example, there is a train which is starting in one state and going into another state. through 2 other states. Now, as this train is going through 3-4 states, now see the length of the track in each state and you take that as a base of apportionment between each state. Suppose if it is on the train tickets, you see how many stations are there in each state and you take that as a ratio for apportionment. Suppose if it is television channel, TV channel, you take the entire amount and you divide it between the channels based on viewership data. So you take number of viewers published by BRC of each channel in each state or union territory, and thereafter again you divide it between the states based on population census. So in case of TV channel, there are 2 ways of apportionment. Primary apportionment is between the channels based on viewership data. From where we will get the viewership data? BRC, Broadcast Audience Research Council. Last week of the last quarter, they would have published that data and you take that and you apportion it. Thereafter, if the channel is being telecasted in more than one state, then you divide it based on the population census. Then next, suppose if it is advertisement on internet, then the advertisement on internet deemed to be provided all over the country. So because advertisement, once it is in internet, so we cannot restrict it to any state. So deemed to be across the country, and based on the internet subscribers data, you need to apportion across the country in all states. Then next, if it is through SMS, so for SMS we need to take TRI telecom subscriber data. Again, last quarter, last week data should be taken for the purpose of apportionment. So 5 points you remember. In case of train, length of track. In case of train tickets, number of stations in each state. In case of TV, so based on channel viewership data and thereafter population data. And then we have internet across the country. And if it is SMS, so telecom subscriber data, so last quarter, last week, and thereafter population. Apart from this, any other mode of advertisement, it is the expenditure ratio. You just remember the ratio. In the question itself, all data will be given. You need to just remember the ratio and you apply that ratio and arrive at the answer. You will not find difficulty in doing it. But what you need to know is which case, which basis of apportionment will be taken is what you need to know. Apart from this, for any other case of advertisement service to government, it will be expenditure ratio. Then look into next one. That is in case of immovable property services. Any service in relation to immovable property, what will be taken as the place of supply? In case of 12 as well as 13, location of that immovable property, correct or not? What if the immovable property is in more than one state? That's where this rule 4 and rule 8 will be applicable. Rule 4 is in the context of section 12, rule 8 is in the context of section 13. 3 points only they have given. First, if it is accommodation services, you see number of nights stayed in each state as the base of apportionment. For example, a package tour. Under that package tour, 3 nights in Kerala, 2 nights in Tamil Nadu, 1 night in Andhra Pradesh. Then in that case, 3:2:1 ratio, you divide the total contract price. So that is a base of apportionment. So in case of accommodation, number of nights stayed in each state. Suppose if it is accommodation in a houseboat. So next, houseboat, what happens is that, so starting point one state, ending point another state, number of hours in each state should be taken as a base of apportionment. Apart from that, any other service in relation to immobile property, take the carpet area, floor area or carpet area and do the apportionment. For example, I got a maintenance contract in relation to 3 buildings belonging to one person. Now in this case, these 3 buildings are in 3 different states. Each building will have a square feet. So I will take the square feet ratio for the purpose of apportionment. So what are the 3 points? Number 1, accommodation services, number of nights stayed in each property. So each state, number of nights stayed in each state. Houseboat, number of hours in each state. Any other service in relation to immobile property, area of the immobile property in each state. Then rule 5 and 9 is applicable in the context of event services. In case of organizing an event, section 12, location of event will be taken as place of supply. Whereas section 13 also, location of event will be taken as place of supply. What if the event is in more than one state? Then this rule 5 and 9 will be applicable. What they are telling is one simple ratio, expenditure ratio. To conduct the event in different states, some expenditure will be incurred now. You take expenditure ratio. This is like a revenue recognition standard here. How we will recognize our revenue is based on our expenditure. Okay. So therefore, you take the revenue, recognize it based on your expenditure. See the expenditure of each state for the event and divide in that ratio. Then next, Rule 6. Rule 6 is applicable in case of telecommunication services, that too fixed line services. In case of telecommunication fixed line, just check the provision. What will be taken as a place of supply? Location where the equipment is installed or the circuit is installed. What if I am providing a lease line service connecting multiple circuit points, so multiple states? Then in that case, what should be taken? Number of circuit points in each state should be taken as the base of apportionment. Next, Rule 7 is applicable in case of performance based service in relation to individual and performance based service in relation to goods. But this is applicable in the context of section 13. Again, check the provision. In case of performance based service in relation to individual, what will be taken as a place of supply? Section 13. Section 13, performance based service in relation to individual. If physical presence of the individual required, location where services are actually performed, correct? Now, what if the service is performed in more than one state? Now, you say simple expenditure ratio. Now, I am providing services of fitness training to an actor and I am located outside India. The actor is located in India. Now, I need to go to each and every shooting spot and need to provide the fitness services. Now, in that case, I need to take my expenditure ratio and recognize my revenue. Simple. You understood? So, that is with respect to performance based service in relation to individual. Again, you check the provision. In case of performance based service in relation to goods, section 13, what will be taken as a place of supply? Location where services are actually performed. Correct. Now, what if, that is in more than one state? Location where service actually performed is more than one state. Then if it is same goods, you divide it equally. Example, I got a AMC contract in relation to AMC to computers located in different states. Now, I need to take equal ratio because it is all states computers only na. So, I will divide equally between the states and I will recognize my contract revenue. Suppose if it is different goods, in Andhra Pradesh it is computers, in Tamil Nadu it is air conditioners, in Karnataka it will be some other goods. Now, these are different goods, means different value will be there. So, take the invoice value of these goods and you apportion your contract revenue. That is this. So, therefore, if it is supplies, services supplied on the same goods, equal ratio. If it is services supplied on different goods, invoice value ratio. Suppose if it is services supplied to individuals, then you will be taking GAAP ratio, that is expenditure ratio. So, that is about this rules related information. Again, I am repeating, we need to remember only the basis of apportionment, that will be sufficient. And then we have some circulars related to place of supply, and the first circular is related to what should be taken as the meaning of export of services. So, it so happens that I enter into contract with a person located outside India to provide these services. So, there is ABC Private Limited. Where is that ABC Private Limited located? In India. And X PLC is located in Germany. X PLC is located in Germany. Now, ABC Private Limited entered into contract with X PLC to provide some services. Contract to provide services against a consideration of $5,000. Against a consideration of $5,000. But what happens here is that ABC Private Limited could not provide all the services to XPLC Germany. So, therefore, what ABC Private Limited is doing, they approached Mr. Z, who is in Germany, to provide some services to XPLC. So, there is another contract which is entered by ABC Private Limited in India, contract, okay, to receive services, contract to receive services against a consideration of $2,000, and ABC Private Limited is asking Z to provide the services to X PLC. and ABC Private Limited also provided some services to XPLC. Now, XPLC is making the payment. What they are doing is that they are making a payment of $3,000 to ABC Private Limited, and they are paying an amount of $2,000 to Mr. Z. Why $2,000 to Mr. Z? ABC Private Limited is only asking XPLC to do that. So $2,000 anyhow they need to pay to Mr. Z. ABC Private Limited should pay $2,000 to Mr. Z. So ABC Private Limited is asking their recipient to pay $2,000 directly to Mr. Z and remit remaining $3,000 to them. Now the question is, what will be taken as the value of export of service? What will be taken as value of export of service? So the value of export of service will be $5,000 or $3,000. Logically speaking, they got only $3,000, but the contract is for $5,000, for which the circular says value of export of service will be $5,000, and then value of import of service. So as ABC Private Limited is receiving services from Mr. Z, there is value of import of service. That import of service is $2,000. On this $2,000, they need to pay IGST under RCM. So whenever there is import of service, GST is payable under RCM na. So you take export of service as $5,000, but there is an import of service to the extent of $2,000. On the $2,000, you pay GST under RCM. So that is this circular about. In case of export of services, exporter of services outsources a portion of service contract to another person located outside India. So ABC Private Limited outsources the contract to Mr. Z, who is located outside India. What would be the tax treatment of the said portion of contract in the hands of the exporter? There may be instances where full consideration is not received. $5,000 not received. Only $3,000 is received by the exporter in India, for which it is clarified that supplier of service located in India, that is ABC Private Limited, would be liable to pay IGST on reverse charge basis on the import of services on that portion of the service which has been provided by supplier located outside India to recipient in India. Who is supplier located outside India? Mr. Z. To ABC Private Limited, some services were provided now $2,000. On the $2,000, they need to pay GST under RCM. So that GST, whatever they have paid under RCM, they can take as ITC. And what will be taken as a value of export of service? Full value will be taken as a value of export of service. Then next one, in case of cargo handling services, basically cargo handling services means once the goods are imported, that imported goods will be kept in one place. So that is called as custodian's place. So this custodian will be responsible for the imported goods. So for which custodian will be collecting some custodian charges. So these charges are for cargo handling services. So here the confusion came as to whether it is renting of immobile property service or professional services, for which CBIS is giving a clarification. It's not renting of immobile property, because the basic objective here is not storage or warehousing. The objective here is handling the cargo. Therefore, it will come under general provisions, and location of recipient will be taken as the place of supply. So in case of cargo handling service, place of supply should be determined based on general provisions and not in terms of immobile property services. Then another case, we are importing a prototype. So that prototype is like a sample, and that sample is hardware, and the hardware will work on a software. Now we do the software testing. So to check whether this hardware functions in connection with the software or not, we are doing testing. Now whether it should be treated as performance based service in relation to goods, or it should be treated as software testing services. Because if it is performance based service in relation to goods, we have a specific provision. If it is software testing, general provision will be applicable. Even though a part is imported or a prototype is imported, the basic objective here is not doing anything on the prototype to do the testing on the software. So therefore it should be treated like software testing service only, and general provisions will be applied. So place of supply of software or designed by the supplier located in the taxable territory to service recipient located in non-taxable territory by using sample prototype hardware or test kits is a composite supply where testing is ancillary and general provisions will be applied. Then next, cutting and polishing of diamonds. So we are importing raw diamonds, and on that raw diamonds we are doing that some cutting and polishing work, and once the cutting and polishing is done, so thereafter these diamonds are being exported without put to use. Can we apply the exception number 1? Imported goods for carrying out repairs or process, and it is exported without being put to use. So can we get exception 1 where location of recipient is a place of supply? Yes. So that's what they are telling. In case of cutting and polishing activity on unpolished diamonds which are temporarily imported into India and not put to any use in India, the place of supply will be as per general provisions. Why it is as per general provisions? Because of exception 1. Exception 1. So goods imported into India for carrying out any repairs or process and exported without being put to use. Then there is one, like 2 circulars which they have added now. So this is an amendment. Place of supply for services with respect to advertising sector. Now listen, what happens is that usually we will be taking some hoardings on rental basis for the purpose of advertisement. Somewhere on the roadsides and all, if you see, big hoardings and all will be taken on rent for advertisement purpose. Whether it will be coming under renting of immobile property service or advertisement service. If it is advertisement service, we don't have any specific provision unless advertisement service to government. Advertisement service to government only we have specific provision, but normal advertisement service we don't have any specific provision, so general provision will come. Whereas if it is renting of immobile property, if you take hoarding as immobile property, then renting of hoarding will come under renting of immobile property, then we need to take service in relation to immobile property. So that's where the confusion came, and they are giving a clarification. If sale of space or sale of right to use the space on hoarding or structure of the vendor to client or advertising for display of the advertisement. So mainly the activity is sale of space for advertisement. Means already I have one hoarding. I am an advertising company. I have one hoarding. In that hoarding, plain sticker is there, white sticker, and in that I have mentioned contact, so and so number. If you want to advertise here, like that I have put one number. Now you called me and I am giving you that space for advertisement. Now it will come under renting of immobile property. So therefore we will take location of immobile property as the place of supply. Of course the property is in India, location of immobile property. If the property is outside India, we will be taking location of recipient. Suppose it is like already I have that, and you don't want me to just give it on rent. You want me to do the designing activity on that. So you are telling me what is that you wanted me to advertise. I will take care of that and I will put it as an advertisement. Means you don't want it on a rental basis. It is like for 1 day or 2 days. You tell the information that I need to do the designing and I will put it there. Means here it is not merely sale of space for advertisement. Mainly I am providing you the advertisement services. Vendor providing advertisement services on the hoarding or structure owned or taken on rent by him. Then in that case, so general provisions, because primarily here it is what? Designing the advertisement. Designing the advertisements will come under advertisement services. Okay. So advertisement service we don't have any specific provision. So therefore general provisions will be applicable. Another circular you see. This is in case of co-working spaces. In co-working spaces what will happen? Lot of co-working spaces are there in cities. Workafella and Regus, like that lot of places are there. And in these co-working spaces I am taking a room on rental basis and I pay some 5,000 or 10,000 rupees. So main objective here is renting of immobile property. So it will be treated as service in relation to immobile property. Location of immobile property is place of supply. But if you expect any other service also from that, like they wanted you to provide the server space, they want to provide you internet or networking, etc., like security, firewall, internet, server access, etc., means the predominant objective there is not just renting of the place, so even other activities are also involved, then in that case you need to determine as per general provisions. See there, place of supply for renting of space for its own servers and other computing hardwares with basic infrastructure. Additional services are provided by the supplier. What are those additional services? Relating to hosting and IT infrastructure service like networking connectivity, backup facility, firewall services, or surveillance, monitoring the surveillance service. Then it is not just renting of immobile property. So therefore we need to apply general provisions and location of recipient. If B2B, B2C, location of recipient in the records of supplier, otherwise location of supplier. Whereas no additional service provided, just a place is given, you keep your computer and you do the working. So then in that case, it will be like renting of immobile property, location of immobile property will be taken as place of supply. So these are two latest circulars which they have added, and as it is amendment, definitely it is important that can be tested. Then next one, section 13 subsection 6 and 13 subsection 7, like that one provision is there, which is overriding the other provisions of section 13. What is that? 4 activities. Please concentrate. Service in relation to immobile property. All these are in the context of 13. All these are in the context of 13. So in case of service in relation to immobile property, what will be taken as a place of supply? Location of immobile property will be taken as place of supply. Performance based service in relation to goods, location where service are actually performed. Performance based service in relation to individual, location where service are actually performed. Organizing an event, location where the event is held. Correct. Now what if this is fully in India? Then place of supply in India. What if it is fully outside India? Place of supply outside India. But the confusion comes when it is partly in India, partly outside India. Section 13 subsection 6 says, void a single contract if these 4 services, place of supply partly India, partly outside India, you deem it as entirely in India and tax it. Even that part which is provided outside India also, the place of supply deemed to be in India. Suppose if you make a separate contract when you make, accordingly you will take. Only when it is a single contract, the place of supply is deemed to be in India. Suppose if it is provided wholly in India, place of supply India. If it is provided wholly outside India, place of supply outside India. Provided partly in India, partly outside India, void a single contract, then the place of supply is deemed to be in India. Then next we have section 14. So section 10, place of supply, domestic transactions. Section goods, place of supply in case of goods, import and export is section 11. Place of supply in case of service where both supplier and recipient of service located in India, section 12. Place of supply in case of service when either supplier or recipient in India and the other outside India, section 13. Now one more section is there, 14 is there and 14A is there. So 14A is a newly added section. 14 and 14A. 14 is applicable in case of OIDR services. Now listen, OIDR services imported by NTOR, who will pay GST? Supplier outside India will pay GST, correct or not? But these suppliers outside India will be difficult to be identified by the Indian government, for which they are telling, if those suppliers outside India are connected through the intermediaries like hosting, so Play Store, App Store, or any Windows marketplace, etc., then these intermediaries located outside India are primarily liable to pay GST. Example, there is a game developer. The game developer is located outside India. Play Store is also located outside India. Now you are NTOR, you are downloading the online game and you are playing that game. You spend some money. Now in that case, who is liable to pay GST? It's a OIDR service. Online gaming is OIDR service, na? It's a OIDR service. Liability to pay GST is on the supplier. Where is the supplier located? Outside India. So but that supplier and you are connected through Play Store. So they are asking Play Store to pay the GST. And why? Because it is easy to zero in the intermediaries, because we have few intermediaries only, lot of suppliers. So intermediary is having the liability here in case of import of OIDR services. So please concentrate. In case of import of OIDR services by non-taxable online recipient, where is the supplier located? outside India. Where is the recipient located? India, and that is NTOR. And place of supply is what under section 13? For OIDR service, what is the place of supply? Location of recipient. What is the location of recipient? India. So it will become import of service? Yes. As the recipient is NTOR, it will be taxable under FCM. So who is liable to pay GST? Check here. Whether there involves an intermediary. No, there is no intermediary. Means directly you are downloading the game from the game developer, and like a APK file or EXE file you are downloading to your laptop or mobile, and you are installing it and using it. Because in Android mobiles and all, lot of APK files we can download and install. Some websites and all banned, you cannot access it. So they will create apps. These apps also not available in the Play Store. So you can download the APK file and you can install it. You guys will not be knowing it. So a lot of people will be knowing about it. You guys are like, you don't know anything other than studies. So therefore, you know, that APK file can be installed into the system. Okay. So therefore, like that, from the game developer himself, you are downloading the game. Now in that case, there is no intermediary involved. So logically, who will pay GST? The original supplier only shall pay GST. Suppose if there involves an intermediary, but that intermediary is outside India or in India, that intermediary is in India, then again original supplier only shall pay GST. Got it? Suppose if the intermediary is outside India, yes, then check whether intermediary satisfies any one of the following conditions. Then intermediary will pay. If intermediary is not satisfying all these conditions, then original supplier will pay. So primary liability is on intermediary. Primary liability is on intermediary. So for that, where the intermediary should be? India or outside India? Outside India. And any one condition should be satisfied. What is that one condition? Invoice is raised by the intermediary. So in case of Play Store, App Store, they will only raise invoice. They will only raise invoice. And payment collected by intermediary. Even if they are not raising invoice, they will collect, because in-app purchases. Suppose payment also they are not collecting, invoice also they are not raising, delivery is also not authorized by them, terms and conditions are also not fixed by them. Sir, when it will happen, sir? Netflix it will happen. I have seen this. Netflix app, when you download, if you want to activate by paying some money, you cannot do in-app purchases. You need to go to their website and create a username, password, and you need to make the payment in their website, and then you will get the access in the app. So in this case, payment is not collected by intermediary, invoice not collected, invoice not raised by intermediary, terms and conditions not fixed by intermediary, and delivery is not authorized by intermediary. Correct or not? So now in this case, who will pay GST? The supplier. Original supplier only will pay GST. So if any one condition is satisfied, also intermediary will pay. So what are the conditions? Invoice raised by intermediary, or payment collected by intermediary, or delivery authorized by intermediary, or terms and conditions fixed by intermediary. Any one condition satisfied, intermediary shall pay. All the conditions not satisfied, so original supplier shall pay GST. Now, wherever this intermediary or supplier is liable to pay GST, do they have a physical presence in India? If they have a physical presence in India, then they will register and pay GST. But the type of registration available to them is a simplified registration. What if they don't have physical presence in the taxable territory, that is in India? Then do they have a representative in India? Yes, then that representative will apply for registration and pay GST. What if they neither have a physical presence nor they have a representative in India? Then they have two options. Either they can appoint a representative, that representative will register and pay GST, or they can continue outside India itself and still they can register and pay GST. It is not mandatory that they need to appoint a representative in India. But in case of e-commerce operator, you write there, however, in case of e-commerce operator, however, in case of ECO, if neither having physical presence nor representative neither having physical presence nor representative in India. However, in case of ECO, if neither having physical presence nor representative in India, they shall, not may, they shall appoint a representative. Appoint a representative. So, for OIDR supplier or intermediary, not mandatory to appoint a representative. But in case of e-commerce operator, if they don't have a physical presence or not having a representative in India, they should appoint a representative in India. Then look into one more section, section 14A. In case of section 14A is applicable for online money gaming supplier. It's a very important because it's an amendment. Definitely this will be tested in exam. So, online money gaming. Is online money gaming coming under OIDR services? No. Online money gaming will not come under OIDR services. In case of online money gaming, it is import of goods, but customs duty not applicable, IGST only applicable, already we discussed. Now listen carefully. There is an online money gaming supplier located outside India, and if it is imported by any person in India, not NTOR, imported by any person in India, the liability to pay GST is on the online money gaming supplier outside India. Is it clear or not? Sir, in case of import of online money gaming by any person in India, the liability to pay GST is on the supplier outside India. Don't check NTOR or other than NTOR. This NTOR other than NTOR is only for OIDR services, not for online money gaming. Then who will pay GST? The supplier outside India will pay GST. Do they have physical presence in India? Yes. Then they will register and pay. If they don't have physical presence and have a representative, that representative will register and pay. If they neither have a physical presence nor a representative, they shall appoint, not may. For OIDR, there is an option, but here they shall appoint a representative. That representative shall register and pay GST. Liability to pay GST is on supplier located outside India on import of online money gaming by any person in India. Such supplier have a physical presence in India? Yes, they will apply for simplified registration and pay. No, they have a representative in India. Such representative can apply for simplified registration. No, then they should appoint a representative. That representative should register and pay. It is not optional for them, they should appoint. Now, what if they are not paying GST? Their website, app, etc. will be blocked in India. If such supplier is not complying with the above information, above provisions, their information, website or app shall be liable to be blocked for access. Then we need to go to US, UK or Korea, etc. and we will be able to access that. Okay. So we can travel that. Without visa, passport, we can travel. You understood? So night times and a lot of people will be traveling to many places like this. Visa, passport not required. VPN only required. Okay. Then that is about place of supply. Okay. And in place of supply here, I have completed this. So in the YouTube, my team will be putting the timestamp. So you go to the timestamp for place of supply as many number of times as you can listen, you listen. Okay. Because this is something, see, I did not see the book. I said it was in my fingertips. You know how I learnt? That many batches I took. Okay. So I learnt. And you will also will be learning. For that, you need a practice. So if you listen to this for 3-4 times, it will get registered in your brain. And you happily do that, and any number of times you want to do, you do that. One day before the exam, don't forget to revise these 2 chapters, exemptions and place of supply. These are the 2 chapters definitely you need to revise and go. That is whatever I have discussed today so far. Exemptions and place of supply, mandatorily you need to study and go. Because that's very important and you will forget it easily. That's why. Then value of supply we have completed, and input tax credit also completed. I think composition scheme also over. and we will take a break now, and we will see this invoice debit notes and credit notes after break. Yes. Mainly they gave it for 12. Mainly they gave it for 12, not in the context of 13. Okay. Okay, we'll resume. So in this place of, there is one query, place of supply, we discussed about hiring of a means of transport. I just gave 30 days. Actually in law they use the word 1 month. They did not use the word 30 days. They use the word 1 month. So therefore 1 month, 30 days, both are same. So don't find any difference in that. Okay. So actually the word used in the law is 1 month. Okay. Then next we will see refunds under GST. So which is a very, very important chapter. So have a look into page 145. Page 145. So look into this chapter, refunds under GST. So refunds, basically there will be lot of questions on refunds that will be possible. These are all the various cases where a person will be able to get refund. So these are the various instances. So this is just the illustrative list. So first, refund of IGST paid on exports. So whenever we are making exports or zero rated supplies, we have two options, pay IGST and get refund of that IGST paid. So this is the first one, refund of IGST paid on exports. And then number 2, refund of unutilized ITC, that is option 2. We can export or supply to SEZ without payment of GST and we can get the refund of unutilized ITC. Third, refund on account of deemed exports. There are certain transactions which are regarded as deemed exports and in that case we will be getting as refund. Then refund of balance in the electronic cash ledger. Whenever there is a balance, excess balance in the electronic cash ledger, after utilizing our liability, either we can carry forward it to the next month or we can get it as a refund, that is this. Then refund on account of issuance of refund voucher. So whenever we collect the advances, on the base of advance we will give a receipt voucher. Whenever the supply is cancelled, so we will be giving a refund voucher and based on refund voucher, whatever tax already paid on advance, we can get it as a refund, that is this. Then refund of tax on account of wrong classification, treating intrastate supply as interstate supply and vice versa. If we have paid any GST, so we can pay the correct tax and get the refund of wrong tax. Then refund on account of provisional assessment. So whenever a person is unable to determine GST payable or value, so then they can make an application to the officer for determining the tax, and first the officer will determine the tax on a provisional basis. Thereafter, upon final assessment, either the differential amount will be payable or if there is excess amount paid on provisional assessment, we will get it as a refund. So to claim that refund on account of finalization of provisional assessment, point 7 is applicable. Then point 8, refund on account of judgment or order. So we have paid some tax under protest and we made an appeal stating that we are not required to pay tax, and thereafter the court has ordered that we are not required to pay tax. So we will get a refund. That refund is known as refund on account of judgment or order. Then refund to UIN holder. UIN holder is that UN agencies, embassies or consulate. So they are basically called as UIN holder, unique identification number holder. Their outward supplies are exempted, but on their inward supplies, whatever GST they have paid, they can get it as a refund. To claim that refund, so that is option 9, refund to UN holder. Then refund of excess payment of tax. Refund of excess payment of tax is like, by mistake we have paid, instead of 1 lakh, 10 lakhs as tax, 9 lakhs paid in excess. So we can get it as a refund. Then last, refund to unregistered person, that is recipient, if the supplier has not issued a credit note. So what happens here is that supplier will be giving a credit note for the purpose of refunding the tax, but sometimes it so happens, so supplier is not refunding the full amount including the GST component. Example, you have booked a marriage hall and you paid 1 lakh plus GST 18%, 1,18,000 you paid as the booking advance. Now you cancel the booking. When you cancel the booking, actually they need to refund 1,18,000. but instead they have refunded only 1 lakh rupees to you. 18,000 rupees they have retained. When they have retained 18,000 rupees, actually they should not retain. They should have paid the government. So whether they paid it to the government or not paid it to the government, but you have borne the tax, so for which you can claim the refund as a recipient. So you can make an application for refund of that 18,000. So therefore, if the supplier has already given credit note, he would have refunded entire 1,18,000. That 18,000, if he has already paid also, his liability will be reduced. But this situation will arise when he has shifted the burden to you by way of collecting 18,000 from you, but he did not refund that 18,000. Now you can get that 18,000 as a refund. Whether your supplier has paid it to government or not paid it to government, you will get it as a refund. So government will recover that 18,000 from your supplier. So this is known as refund claimed by unregistered recipient if the supplier has not issued any credit note. So these are the various situations where a person will be getting refund. So total 11 situations are there. So in these 11 situations, there are certain things which are common and certain things we have separate provisions, so that we are seeing one by one. The first thing is refund in case of zero rated supplies. So what are considered as zero rated supplies? Export of goods or services, supply of goods or services to SEZ is known as zero rated supplies. In case of zero rated supplies, we have two options. What is option number one? Pay IGST and get refund of that IGST, and that IGST we can pay utilizing our ITC, and we will get the refund of gross IGST. Or option 2, so don't pay any IGST, export it under bond or LUT, or supply to SEZ under bond or LUT, don't pay any GST on outward supply, but on purchases, inputs, input services and capital goods, you will get refund only with respect to inputs and input services, but capital goods related credit you will not get it as a refund. Means the capital goods credit will be still in your credit ledger, that you can set off with your some other liability. Okay, so basically we are discussing the option 1 now. What is option number 1? So we export or supply to SEZ upon payment of IGST, and we will get the gross IGST as refund. Now you need to understand here few aspects. Whenever we are making zero rated supplies, we will get both the options, but in some scenarios we will get only one option, either option 1 or option 2. Sometimes we will not get the refund at all. Okay, so let's see this. What is it we are discussing? Zero rated supplies. What are considered as zero rated supplies? Zero rated supplies. What are considered as zero rated supplies? Export of goods or services, export of goods or services, and supply of goods or services to SEZ. So these two are called as zero rated supplies. In case of zero rated supplies, basically we have two options. So two options are available. Two options for claiming refund. Okay, what are those two options? Number 1, pay IGST on outward and get gross IGST as refund. This is one option. Whereas second option, so that is outward without payment of IGST under bond or LUT, and get refund of ITC with respect to what? Inputs and input services. Okay, so therefore these two options are available for the purpose of claiming the refund, but in some cases only one option is there. What is that? Say here, if you are exporting goods upon payment of customs duty, only option 1 is possible, option 2 is not possible. Is it clear? export of goods upon payment of customs duty. Sir, whether exports are subject to customs duty? Yes. Exports are subject to customs duty sometimes. There are some limited goods on export of which we need to pay customs duty. So, export of goods upon payment of customs duty. Now, in this case, we will get only option 1. Only option 1. So, option 2 we will not be getting. Option 2 is what? Refund of ITC we will not get. Then, 0 rated of exempted goods or services. Exempted goods or services. In case of exempted goods or services are becoming 0 rated, means what? Exempted goods or services are being exported or supplied to SEZ. In that case, there is no GST rate applicable to those goods and services. So, option 1 not possible. What is option 1? Pay IGST and get refund of that IGST. On exempted goods and services, wherefrom I can pay GST? So, I cannot pay GST. Due to that reason, 0 rated of exempted goods or services means what? Export of exempted goods or services or supply of exempted goods or services to SEZ. Only option 2. What is only option 2 means? That is refund of ITC option. And there are some notified goods or services. Notified goods or services. In case of these notified goods or services like pan masala, tobacco products or some essential oils, etc. Okay, notified goods and services, that is pan masala, then tobacco products, etc. They have notified some goods. In case of these notified goods, neither option 1 nor option 2. Neither option 1 nor option 2. Means literally we will not get any refund. So, option 1 or option 2, both options we will not be getting. Then one more case we have. That is, sir, I am exporting the goods upon payment of customs duty. Option 1 not possible. But basically they are exempted goods under GST. But they are dutiable goods under customs. In that case also, neither option 1 nor option 2. You will not get both the refunds. So, what is that? See this. Export of goods. Export of exempted goods under GST. Export of exempted goods under GST, but upon payment of customs duty. Then also neither option 1 nor option 2. Neither option 1 nor option 2. So, both the options are not possible in that case. Example, rice. Rice is actually exempted. Rice sold in wholesale packages is exempted under GST. But on export of that rice, we need to pay customs duty. So, in that case, as we pay customs duty on export, we will not get option 2. Why we will not get option 2? That's what we have seen here. We will not get option 2 when you are exporting goods upon payment of customs duty. So, option 2 not possible. Okay. Option 1 also not possible. Why option 1 also not possible? Because they are exempted goods. As it is exempted goods under GST, there is no rate of GST. So, option 1 also not possible, which means export of exempted goods under GST, but upon payment of customs duty, neither option 1 nor option 2. Same way, there are some notified goods or services like pan masala, tobacco products, essential oils, etc. There also we will get neither option 1 nor option 2. But in other cases, that is export of goods upon payment of customs duty only goods, then it will be only option 1. 0 rated supply of exempted goods or services, only option 2. These are some intricate points which you need to keep in mind as to when which option will be applicable. Then, so we are discussing first refund in case of 0 rated supplies. First, exports. Exporter may supply goods or service or both subject to such conditions and safeguards on payment of IGST and claim refund of such tax paid. In that, suppose if it is goods exported, so we will be filing a shipping bill. That shipping bill itself will be taken as a refund application. There is no separate refund application in that case. Whereas in all other cases, we need to file a separate refund application, RFD1. RFD1 is the refund application. So remember, export of goods upon payment of IGST. What will be taken as the refund application? The shipping bill filed itself will be taken as the refund application. In all other cases means export of goods under bond or LUT, or export of service on payment of GST or under bond or LUT. So it will be a refund application RFD1. Whereas this RFD1, when we are filing, refund processed by GST officer. Refund by GST officer. Whereas when we file the shipping bill, that refund is by customs officer. That refund is processed by customs officer. Then government notifies certain goods with respect to which refund cannot be claimed on export. What are those goods? That's what I said. Neither option 1 nor option 2. There are some notified goods. So what are those notified goods? Like pan masala, tobacco products, essential oils other than those of citrus fruit. These are some examples of notified goods right now. So this is an amendment. Please remember that in case of some notified goods or services, right now they have given only notified goods, but service also they can notify in future. Right now only notified goods are there. With respect to these goods, neither option 1 nor option 2. This amendment has been made in section 16 itself, Wide Finance Act 2021, but that was made applicable with effect from 2023. So therefore this can be tested. Then next, in case when we pay IGST on export of goods, who will process the refund application? Shipping bill is the refund application. So who will process the refund application? Customs officer. So customs officer will verify whether these goods are really exported based on the document filed by the person in charge. So person in charge of the conveyance will be filing export manifest in case of vessel and export report in case of vehicle and departure manifest in case of aircraft. In that they will mention what are the goods which are present in the vehicle or vessel or aircraft. Based on that, customs officer will come to know whether the goods are really exported, and based on our 3B, customs officer will come to know whether we have paid IGST. So then the customs officer will process the refund. So such application shall be deemed to have been filed only when the person in charge of the conveyance so duly files a export manifest in case of vessel, departure manifest in case of aircraft, export report in case of vehicle. Also, the applicant should have filed the return, because when he will pay tax, only in 3B he will pay tax. So he should have filed 3B and the IGST should have been paid in full. Then, in case of supplies to SEZ, who will process the refund application? GST officer only will process the refund application. But in that case, we need to get a certificate from the SEZ officer that these goods are supplied for the authorized operations of the SEZ. Then only we will be able to get the refund. So therefore, there is a special economic zone authorized officer or specified officer. This specified officer or authorized officer will endorse on the invoice that these goods or services are supplied for SEZ operations only. Therefore, based on that authorization or endorsement only, we will be able to claim the refund. That is this. Thus, proof of receipt as evidenced by the officer is a prerequisite for filing refund claim. Then in case of export of exempted goods or services, how many options we have? Both the options or only one option? Only one option. Which option? Option 2. What is it? Option 2, refund of ITC. That's the point I have given. So whenever you are making exempted goods, export of exempted goods or supply of exempted goods to SEZ, or export of exempted services or supply of exempted services to SEZ, you will have only one option. What is that one option? Refund of unutilized ITC. Refund of unutilized ITC. So whereas if the goods are taxable, if the services are taxable, you have both the options. And one more point you need to remember is that in case of export of exempted goods or supply of exempted goods to SEZ, generally option 2 is export or supply to SEZ without payment of IGST and get refund of unutilized ITC. But under bond or LUT we should have executed. But in case of exempted goods, bond or LUT not required. No bond or LUT. So there is a relaxation. So this can be tested in MCQ. In MCQ, they will be giving state which of the following statements are correct in the context of refund. So they will be giving multiple statements in that they will be testing. So bond or LUT not required in case of export of exempted goods for claiming refund. We will think that this statement is wrong. No, this statement is correct. So refund, to claim the refund in case of export of exempted goods, not necessary that we need to execute a bond or LUT. Then, but in case of exempted services, whether we need to execute bond or LUT? Yes. Taxable, definitely we need to execute bond or LUT. Then look into the next one. So first situation means what? The first situation is related to export or supply to SEZ on payment of IGST that we are getting as a refund. There, what are the nitty-gritties we have completed. Now we are moving on to the second case. What is the second case? Refund of unutilized ITC. When we will get this refund of unutilized ITC? In two cases we will get refund of unutilized ITC. Number one, zero rated supplies. Number two, inverted tax structure. What is inverted tax structure? The rate of GST on outward supplies is less than the rate of GST on inward supplies. Then also we will be getting the refund. How much is the refund in case of zero rated supplies? So case 1, maximum refund in case of export. Okay, export or supply to SEZ. And case 2, maximum refund in case of inverted tax structure. So two cases we will get the refund of ITC. What are the two cases? Export including supply to SEZ. Okay, including supply to SEZ. Export as well as supply to SEZ. In both these cases we will get the refund of unutilized ITC, whereas the second one is refund on account of inverted tax structure. In case of zero rated, what is the refund formula? So in case of zero rated, the refund formula is net ITC into zero rated turnover divided by adjusted total turnover. So let's see this with the help of some numbers. So I have some inputs and I have some input services and even I have some capital goods. Using these inputs, input services and capital goods, I am making some finished goods, and in these finished goods, so few finished goods are exported and few finished goods are sold in India. Now, what is the value of these inputs which is purchased? Say inputs is 1 lakh plus 12% GST, whereas input services is 50,000 plus 18% GST, whereas in case of capital goods it is 2 lakhs plus 12% GST. Now, in this case, what is the total ITC that we have? The total ITC that we have, is 1 lakh into 12%, 12,000 plus 50,000 into 18%, 9,000 plus 2 lakhs into 12%, that is 24,000. So the total ITC, if you see 12 plus 9 plus 24,000, that is 45,000 is the total ITC. Whereas I am exporting the goods and the value of these exported goods is 20 lakhs and the value of this domestically sold goods is 10 lakhs. And on this 10 lakhs, there will be definitely GST that is payable. On this 20 lakhs, I have two options. So I am going for under bond or LUT. Under bond or LUT, whereas this will be excluding GST at 12%. Now in this case, what is the maximum refund that we will be getting? The maximum refund will be net ITC. What will be taken as net ITC? The refund formula is net ITC into zero rated divided by total turnover, adjusted total turnover. What is the net ITC? Net ITC is not 45,000. Net ITC should be only with respect to inputs and input services. That is 12,000 plus 9,000. 12,000 plus 9,000 will be taken as, so 21,000 into zero rated turnover. What is zero rated turnover? 20 lakhs divided by adjusted total turnover. That is 20 plus 10, 30 lakhs will be taken as adjusted total turnover. 21,000 into 20 by 30. So what is that 21,000 into 20 by 30? 14,000 is the maximum refund, but we need to check the actual refund also. This is the last step which we usually miss in the exam. What is that last step? Check whether they have that much of balance in ITC to claim the refund. If you see 10 lakhs into 12%, what is 10 lakhs into 12%? 1,20,000. Okay, so even though they are eligible for a maximum refund of 14,000, but the actual refund will be 0. Why actual refund will be 0? Because they don't have balance in ITC. How they don't have balance in ITC? Simple. The total balance in ITC before claiming this refund was 45,000, and they have made some domestic sales. On domestic sales, the liability will be 10 lakhs into 12%, 1,20,000. For 1,20,000, this 45,000 would have been utilized. So it means they don't have any balance in ITC. So no balance in ITC. As there is no balance in ITC, refund will be 0. So but what we will do, we will write the answer as refund as 14,000 rupees, and we end up losing entire marks. So the last step you need to do. What is that last step? Check whether they have sufficient balance in the ITC. If they don't have sufficient balance in the ITC, they will not be able to get any refund. Suppose if they don't have that much of liability, suppose if their liability is hardly some 12,000 rupees, then 45,000 minus 12,000, they have enough amount in the ITC. So definitely they will be getting this refund of 14,000 rupees. So always remember, the refund formula is subject to the condition that there is sufficient balance in the ITC, otherwise we will not get the refund. So this is one point you need to keep in mind. Then another point, while taking the net ITC, we should not take the ITC on capital goods. We should take the ITC only on inputs and input services. So that is this formula, net ITC into zero rated turnover divided by adjusted total turnover. So net ITC means ITC availed, not total ITC. It is only eligible matched ITC, which means in this net ITC, whether blocked ITC will come? No. Whether ITC for non-business purpose will come? No. Whether ITC for exempted supplies will come? No. So only net eligible matched ITC should be taken, that too on inputs and input services during the relevant period. So during the relevant period means whatever is the purchases made during the month or the period for which we are claiming the refund. So opening balance of ITC should not be taken. So in the question they will be giving some opening balance of ITC. Don't take that opening balance of ITC. So see what are all purchase, inputs and input services during the relevant period, that only should be taken. Minus ITC refund under rule 89 4A 4B. What is this ITC refund under 89 4A 4B? That is on account of deemed exports. So in case of deemed exports, like how in zero rated supplies we have two options, in case of deemed exports also we have two options. So first we will try to understand what are considered as deemed exports. So this discussion is related to zero rated supplies. Now we will see deemed exports. What are considered as deemed exports? There are three transactions which are considered as deemed exports. Supply of goods, only goods. Supply of services we don't have in deemed exports. Only supply of goods we have under deemed exports. So deemed exports, 3 points. That is, number one, sale of goods to advance authorization holder. Who is an advance authorization holder? Advance authorization is a license which is given under foreign trade policy by Directorate General of Foreign Trade for the purpose of importing the goods without payment of customs duty or locally procuring the goods without payment of GST. In turn, that imported goods or locally procured goods should be used for exported goods. Mainly to encourage the exporters, they will be giving this license. Under that license, either they can import the goods without payment of customs duty or locally they can procure without payment of GST. So when you make sales to them, it will be called as deemed export for you. Okay, you are making sales to them. So for you it will be called as deemed export. Deemed export sale, for them deemed export purchase. Okay, next, number two, sale of goods. Sale of goods to EPCG holder. Export promotion capital goods scheme, EPCG scheme holder. So again, like how advance authorization is for procurement of raw material without payment of customs duty or without payment of GST, same way for procurement of capital goods without payment of customs duty or without payment of GST, there is another license that will be given under foreign trade policy by DGFT, that is called as EPCG license. Ditto same. Advance authorization is for raw material and EPCG is for capital goods. Either they can import without payment of duty or locally procure capital goods without payment of GST. So when you make sale of capital goods to them, for you it will be treated as deemed export sale, and for them it is treated as deemed export purchase. And the third transaction will be sale of goods to EOU. Sale of goods to export oriented unit is called as again deemed exports. So EOU is export oriented unit, so which has the option of either importing goods without payment of customs duty or locally procuring the goods without payment of GST. So this EOU, export oriented units, if they want to locally procure and they purchase from you, for you it will be treated as deemed export sale, for them it will be treated as deemed export purchase. So these are the three deemed exports. In case of these deemed exports, what are the various options available? So for a person who is making deemed exports, two options available. Two options available. So what is the first option? Under the first option, so supplier will not collect GST from the recipient, and supplier pays GST and they will be able to get the refund. Okay. So what happens here is that there is a supplier and the recipient is there. I am talking about option 1. In option 1, what happens? Supplier will make the deemed export to the recipient. Supplier will make deemed export to recipient, and the recipient will pay only the sale price. There won't be any GST. Only the sale price. Now to government, the supplier will pay the GST. How the GST will be paid? Either by utilizing his ITC as well as from the cash ledger. So pay GST. So this GST can be through electronic credit ledger and electronic cash ledger. So they will be making payment. Thereafter, so from government, they will be claiming the refund. Okay. Who will be claiming refund? Supplier will be claiming refund. But this refund will be given into their bank account. So what is the advantage of this option to them? So whatever ITC they have, using that ITC they can pay the liability and the entire amount will come into their bank account. So as a refund, so credit ledger balance will be converted into cash. That is the advantage. So in case of option 1, who is claiming refund? Supplier is claiming refund. Whereas option 2 is there. Option 2 is like there is a supplier who is making deemed export to the recipient, and in this case, so what happens? Supplier, when he makes deemed export to the recipient, the supplier recovers both sale price plus GST. Means from the supplier point of view, it will be like a normal sale. There won't be any difference. And the supplier will pay GST to government. And as supplier is paying the GST, definitely this GST can be paid through electronic credit ledger as well as electronic cash ledger. Now what happens is that the recipient will first avail ITC, and after availing ITC from the government, they will get the refund of ITC. Recipient will get refund of ITC into their bank account. Now what is the advantage of this to the recipient? Recipient will have ITC that will be converted into cash, means it is literally into their bank account. One more advantage is also there to the recipient. Even though it is blocked ITC, this is a CBIC circular, even though it is blocked ITC, they can avail ITC. That is the advantage to the recipient. And what is the difference between this refund of ITC versus refund of ITC that they have in case of zero rated supplies? Even in case of zero rated supplies, they will get the refund of ITC with respect to inputs and input services. What is the difference between this ITC refund versus this ITC refund? Because this is where generally we will be breaking our head and we will not understand. So please try to understand the differences here so that you will remember it forever. So in case of refund of ITC under zero rated supply, that refund is based on a formula. What is that formula? Net ITC into zero rated divided by adjusted total turnover. Even though those purchases are fully used in export also, you will get refund only as per formula. So I have made some purchases fully used in export. Full refund you will not be getting. You will get the refund as per formula into zero rated divided by adjusted total turnover only. Whereas if you want full refund, you made some raw material which is exclusively used in export. In that case, you should go for deemed export refund only. So therefore, here the advantage is no formula. How much ever you have made as purchase fully when you have exported, so therefore you will be getting full GST paid as ITC, and that ITC refund you will get. There won't be any formula. This is the first difference that you have. So in case of zero rated ITC refund, this refund is based on a formula. Here you will get entire amount of ITC as a refund. So there is no formula, etc. and all. Second difference, in case of zero rated, what happens is that if it is a blocked ITC or inward supply used for exempted supplies, etc. and all, you will not be able to get that as ITC. First of all, you cannot take the ITC. Mainly blocked ITC, you cannot take as ITC, where in the previous case, ITC on account of zero rated supplies. But in this case, even though it is a blocked ITC, you can take it as ITC and thereafter you can claim as a refund. So that is the advantage we have here. And then in the previous case, we will get ITC refund only with respect to inputs and input services. But in this case, we will get the ITC refund even with respect to capital goods, anything. But only condition is that all these things should be in turn used for the purpose of export. Okay. So here we will get the refund only with respect to inputs and capital goods, not input service. Because for deemed export, we don't have services. We have only goods. So means either inputs or capital goods. So in this case, it will be refund of ITC with respect to inputs and input services. Here we will get refund of ITC with respect to inputs and capital goods, because deemed export means only goods. So therefore, you need to decide either you need to go for this or that based on the comparison. Okay. So how to do that comparison? For that, I am just explaining you through an illustration. So what happens is that I have made some purchases. So there is a person ABC Private Limited. This ABC Private Limited is basically an exporter, and they are having even this AA, EPCG and all they have. Now they are making some procurement. That procurement is of raw material X. Using this raw material X, so this raw material X is fully used in FGX. Raw material X is fully used in FGX. And then they are making some procurement of raw material Y. And this raw material Y is used both in FGY and FGZ. So in that, partly it is exported and partly it is sold in India. So then what they are doing is that using this raw material Y, they have got FGY which is exported and FGZ which is sold in India, domestic sales. And FGX is fully exported. There is no change in that. Now, thereafter, they have got some raw material P, and using that raw material P, they made FGZ, and that FGZ is completely sold in domestic market. So used for domestic sales, FGZ. Now this is the story. Now in this case 1 lakh plus 12%, then 50,000 plus 18%, and 1,50,000 plus 12%. This is how they have. And if you see export value of this FGX is 5 lakhs and export value of this FGY is 10 lakhs and this FGZ domestic sales is 20 lakhs. So this is how they have got the data. Now here suppose if I am not going for deemed export refund, so fully I am going for refund of ITC. So there are two alternatives for me. Deemed export also I can claim or refund of ITC also I can claim. I want to go for refund of ITC option, fully refund of ITC. So I don't want to go for partly deemed export and partly refund of ITC. I want to go for fully refund of ITC on account of or with respect to zero rated supplies. Refund of ITC with respect to zero rated supplies. What is the formula for refund of ITC with respect to zero rated supplies? Net ITC into zero rated divided by adjusted total. Adjusted total. So net ITC, if you take ITC with respect to all three inputs. So the moment I will go for this refund of zero rate ITC on account of zero rated supplies, actually in a way I have an advantage. What is the advantage? You know, even though it is exclusively used for domestic, exclusively used for export or commonly used for export and domestic, full ITC I will be getting as a refund in the formula. So therefore net ITC will be 1 lakh into 12%. How much 1 lakh into 12%? Net ITC 12,000 plus 50,000 into 18%. What is 50,000 into 18%? 9,000 plus, so 1,50,000 into 12%. 1,50,000 into 12% is 18,000. So 12,000 plus 9,000 plus 18,000, that is 39,000. Net ITC 39,000. And what will be the maximum refund that we will be getting? For that we need to get zero rated. How much will be taken as zero rated? Here the zero rated is 10 plus 5. So export is zero rated na, and we are not claiming any deemed export refund. So therefore 10 plus 5, that will be 15 lakhs will be taken as zero rated. And what will be taken as the adjusted total? The adjusted total will be equals to, so total, that is 5 plus 10 plus 20, that is 35 lakhs will be taken as adjusted total. And if you see the formula, maximum refund, how much is the maximum refund that you will be getting? Net ITC. Net ITC is 39,000 into zero rated 15 divided by adjusted total 35. 39,000 into 15 by 35. See that. 16,714 will be taken as the refund. So this is the maximum refund that you will be getting if you go for only refund of ITC with respect to zero rated supplies. Now suppose if I go for refund of ITC with respect to zero rated plus deemed export, if I go for both, then what will happen? Refund on account of deemed export. Refund on account of deemed export. What is the refund on account of deemed export? So in this question, on which case we will get the refund on account of deemed export? Supplier collected the GST from us. So option 2. So when deemed export we call as purchased goods fully used in export. Purchased goods fully used in export is called as deemed export. Purchased goods fully used in export means only raw material X in FGX. That is the only case we call it as deemed export purchases. Why? Because a purchased goods fully used for export, then only we will call it as deemed export procurement. So here raw material X is only deemed export procurement. So therefore how much is the refund that you will be getting? So with respect to raw material X, how much is that? So 12,000 we will get as a refund, correct? Plus in addition to that, we can also go for refund of ITC with respect to zero rated. We can also go for refund of ITC with respect to zero rated. We can do this also, zero rated supplies. And refund of ITC with respect to zero rated supplies, what is the formula? Come on. I am only speaking here. Net ITC into zero rated divided by total, adjusted total, and what is the net ITC as per the previous? As per the previous, how much is the net ITC? 39,000. But in this 39,000, already you claimed a refund of 12,000. So take out the 12,000. 39,000 minus 12,000. How much? 39,000 minus 12,000? 27,000. And thereafter, zero rated. What is it? Zero rated. So how much is the total? Previously already we computed 15 lakhs. But in this 15 lakhs, already we have made a export on which we claimed a refund already. How much is the refund we claimed? And we claimed export refund. So 5 lakhs. So therefore it will be 10 lakhs. Again, adjusted total turnover. What was the previous adjusted total turnover? That is 35 lakhs. From the 35 lakhs, you take out 5 lakhs. Why you should take out 5 lakhs? Because this FGX related already we claimed as a refund. So 5 lakhs if you are excluding. So that will be coming to 30 lakhs. Then what will be the maximum refund? So the maximum refund will be equals to, so 27,000 into numerator 10, denominator 30, 27,000 into 10 by 30, that will be 9,000. So therefore, how much is the maximum refund you will be getting? So total refund, the total refund that you will get will be already 12,000 you got plus now 9,000, that will be 21,000. I jolly, we are getting more money. So 16,714 only you will get there, and here you are getting 21,000. So mainly to get more refund only they created a provision like this. You got it? So this net ITC, in 3 places we are reducing. So in 3 places we are reducing the effect. Minus 12,000. Why minus 12,000? Because already refund claimed. Why minus 5 lakhs? Already refund claimed. Why minus 5 lakhs? Already refund claimed. In 3 places we need to nullify the effect. Correct or not? Where and all we need to nullify the effect? One is net ITC. That's why you see there in net ITC minus ITC refund under 89-4A-4B. You got it? Again, numerator. Numerator is what? Zero rated. In zero rated also we need to take out this effect. So zero rated minus on which refund is already claimed under 89-4A-4B, supplies in respect of which refund is claimed under 4A-4B. Again in denominator also we should take out. What is the denominator? Adjusted total turnover. Here also minus supplies on which refund is claimed under 89-4A-4B. What is this supplies under 89-4A-4B? Deemed export only, on which already we have claimed ITC refund. So see there, what is refund under 89-4A-4B? When purchases of a registered person making zero rated supplies. Who is the registered person making zero rated supplies here? So this ABC Private Limited is making zero rated supplies. Their purchases is deemed export. Correct or not? Their purchases, purchase of a registered person making zero rated supplies are treated as deemed export. They can claim refund of GST paid, ITC availed, whatever ITC availed fully they can get it as a refund on such inward supply called as deemed export refund. And such refund of ITC should be excluded while computing refund of unutilized ITC on account of zero rated supply. That's why this 12,000 whatever we already got as a refund that we excluded from this place, even its effect of turnover is also excluded. Okay, that is about this adjustment. Don't forget this here. I took lot of pain in explaining this. Then next, so zero rated net ITC, you understood the formula. What should be taken as net ITC? Inputs and input services minus ITC refund already claimed under 89-4A-4B. Then zero rated turnover. What is zero rated turnover? Zero rated supply of goods plus zero rated supply of services. What will be taken as zero rated supply of goods? So in the numerator, whether export of goods upon payment of IGST will come or without payment of IGST will come. Without payment of IGST, because on payment of IGST already we are claiming refund. So therefore without payment of IGST. Now sir, I have one doubt sir. In these two options, Can I choose any option? Yes. With respect to each transaction, you can choose either option 1 or option 2. Not necessary that option 1 exercise in the beginning of the financial year will be applicable throughout the financial year. We don't have any such point in case of zero rated as well as deemed export. We saw 2 options for zero rated, 2 options for deemed export. With respect to each invoice, the supplier can choose any of the option that they can follow. Suppose if you are exporting on payment of IGST, that should not come in the numerator. So therefore, you should take only value of zero rated supplies made without payment of IGST minus supplies in respect of which refund is claimed under 89(4)(a), 4(b), or we need to compare with what? 1.5 times the value of such goods domestically supplied by same or similarly placed supplier, whichever is lower. So why they have created this comparison? Mainly because we are claiming some refund and we can inflate the export turnover mainly to get more refund. For example, refund of ITC on account of zero rated, So what is the formula? Net ITC into zero rated turnover divided by adjusted total turnover, correct? And in this, my original is say 25,000 into 10 divided by 30. 10 divided by 30. For example, I am telling you 25,000 into 10 by 30. How much I will get as refund? 25,000 into 10 by 30. 8,333 I will get as refund. Now what I am doing? I am inflating the export turnover. If zero rated inflated to so 25 lakhs, then what will happen? Refund equals to 25,000 into numerator is now 25. Accordingly, denominator also will increase. Numerator increase by 15 means denominator also will increase by 15. So 30 plus 15, 45. Sir, numerator denominator increased by same constant, sir. So therefore the result also will be same. No, that is stupid mathematics. So it is not multiplication, it is addition. So therefore 25,000 into 25 divided by 45. How much? 13,889. So generally government will loot us, but here we are looting the government by inflating this to 25 lakhs. So this is possible. That's why they are telling, darling, you can do this way. So you compare with 1.5 times the domestic value of these goods, whichever is lower only we will be giving you. So therefore this 10 lakhs is the original value of these goods, but this 10 lakhs is the export value. But what is its domestic sale value? This export goods, usually exports will be at a higher cost and the domestic value will be at a lower cost. What is its domestic value? Similar domestic value is 7 lakhs. Similar domestic value is 7 lakhs. Then in that case, what is it they are telling? So zero rated supply of goods. So zero rated equals to, so what is the value declared? 10 lakhs or 1.5 times similar value. 1.5 times similar value, whichever is lower. So what is the value declared here? The value declared here is 10 lakhs or 1.5 times similar value. 7 lakhs into 1.5. What is 7 lakhs into 1.5? 10.5 lakhs, whichever is lower. So that is 10 lakhs only should be taken as the value. What if its similar value is 6 lakhs? 6 lakhs into 1.5, 9 lakhs. So therefore 10 lakhs or 9 lakhs, whichever is lower, 9 lakhs only should be taken. That's why they have given. This is the meaning of zero rated goods. Now one more point also they are telling, that is either you take the value declared. What is the meaning of value declared? Again you take either FOB value or the transaction value, whichever is lower. So therefore the meaning of zero rated goods, So the meaning of zero rated goods will be three terms. Okay, value of zero rated goods equals to, so FOB value, where is this FOB value available? In shipping bill. Where is this FOB value available? It is available in shipping bill. Or transaction value, where is this transaction value available? Invoice, yeah, invoice. Transaction value in invoice. Sir, whatever is the transaction value in invoice itself is the FOB value, na sir. May or may not be. The transaction value can be X factory price, the price prevailing in your factory, or FOB price, price prevailing in your port, or CIF price, price prevailing in his port. So therefore anything can be transaction value. So the transaction value can be either X factory price, or it can be FOB price, or it can be CIF price. What is FOB price? The price prevailing at the exporter's port is known as FOB price. CIF price is the price prevailing at the importer's port. Means FOB price plus insurance plus freight will be taken as the CIF price. So anything can be taken as transaction value in the invoice. Domestic value, out of these three, whichever is lower will be taken. Lower of. So either you will take FOB value in the shipping bill, or transaction value in the invoice, or 1.5 times the similar domestic value. Lower of these three will be taken as the zero rated goods. It's already there. Here you can see. So first you need to take value of zero rated supplies made without payment of IGST minus supply in respect of which refund is already claimed, or 1.5 times the value of such goods domestically supplied by same or similar supplier, whichever is lower. Again next line you see FOB value in the shipping bill or bill of export, or the invoice value, whichever is lower. So three terms, whichever is lower. Then in case of services, what will be taken as value of zero rated supply in case of services? I told you already, in case of services, only when you realize the foreign exchange proceeds, you will be able to claim the refund. So due to that reason, first we will take what are all the payments received during the period. During this period, what are all the payments received? But in this payments received, some payments may be pertaining to the supplies which will be made in future. So take out. Because you have not at all made supply, you may not make supply also. You may refund this advance also. That's why today it is doubtful. So minus advances for which the supplies are yet to be made in future. Add advances received in the past period for which supplies are made in the current period. At that time you reduce the advances, but you are making supplies now. So already payments are collected, you add that. So tell me what are the three things that we need to do for zero rated supply of services. First, payments received during the period minus advances during the period for which supplies are made in future. Add advances received in the past for which supplies are made in the current period. So once you make this adjustment, you will get zero rated supply of services. And thereafter, adjusted total turnover. What will be taken as the adjusted total turnover? So everything, non-zero rated, zero rated, everything will come. But why exempted supplies are excluded from the adjusted total turnover? Because this ITC will definitely not be pertaining to exempted turnover. When my outward supply is exempted, I cannot take ITC on inward supply. Due to that reason, this net ITC is not for exempted turnover. That's why in denominator, adjusted total turnover, we need to exclude exempted supplies minus supplies on which refund is claimed under 89.4A.4B. So all the adjustments we have seen. So this points and all are important for the purpose of solving the questions. Next, case 2. The another case where we will get the refund of unutilized ITC is on account of inverted tax structure. What will be taken as the refund in that case? They have given one formula, but you try to make it simple. So total 5 things you need to remember. So refund of ITC on account of inverted tax structure. What is inverted tax structure? The tax rate on outward supply is less than the tax rate on inward supply. Tax rate, not the tax payable, tax rate. So refund of ITC on account of inverted tax structure. Inverted tax structure. What we need to do? Total 5 things we need to get. First, we need to know net ITC. What is net ITC? In case of 0 rated, we took net ITC as what? Inputs and input services. But here only inputs. Input services should not be taken. Only inputs. That should be taken in net ITC. And thereafter, number 2, inverted turnover. What is inverted turnover means? Inverted turnover means only that turnover where the rate of GST is less than the rate of GST on inward supplies. That is inverted turnover. Then third, you need to take adjusted total turnover. Adjusted total turnover. The meaning of adjusted total turnover is same. Already whatever we have seen in the above formula, net ITC into 0 rated by adjusted total, the same meaning, no change in that. Then number 4, tax on inverted turnover. Tax on inverted turnover. And thereafter, so ITC with respect to inputs and input services. Inputs and input services. These 5 numbers we need to get from the question. Net ITC, inverted turnover, adjusted total turnover, tax on inverted turnover, and ITC with respect to inputs and input services. These 5 numbers once we get from the question, so the refund is very simple. Refund equals to 1 into 2 by 3 minus 1 into 4 by 5. Logic and all, go to hell. So don't remember now. Not possible also, don't break your head. So maybe if it is regular batch, I would have explained you the logic. So you remember this way, it is easy for you. 5 numbers you need to know. What are the 5 numbers? Net ITC. Number 2, inverted turnover. Number 3, adjusted total turnover. Number 4, ITC, that is tax on inverted turnover. Number 5, ITC on inputs and input services. Then 1 into 2 by 3 minus 1 into 4 by 5. If you are getting this, that will be the refund formula. Okay, that is what I have given. But net ITC is ITC availed only on inputs, but not on capital goods or input services, and meaning of adjusted total turnover is same as above. Then next, refund of ITC not available in the following cases. So what is the first case? You will know that export of goods upon payment of customs duty. That's what we have seen now. Option 2 is not applicable in some cases. What is the case where option 2 is not applicable? Option 2 not applicable, only option 1, export of goods upon payment of customs duty. Export of goods upon payment of customs duty, only option 1. That's what I have given. Export of goods upon payment of customs duty, you will not get refund of ITC. Then second case, even in case of some notified services, so no refund of unutilized ITC. In case of supply of construction of complex or building or part thereof, and the amount charged from recipient includes value of land or undivided share of land. So in that case, entire consideration has been received before the issuance of completion certificate. This will be chargeable to GST. And what will be the rate of GST? Basically the rate of GST is 1.5% or 7.5%. And on inward supplies, the rate of GST is 18%, 28%, etc. and all. So they are telling, so you will treat it as export like inverted. You will treat it like inverted and you will claim any refund and all. No boss, you will not get refund. That's what they are trying to convey. Okay. And then if entire consideration has been received after issuance of completion certificate or first occupation, whichever is earlier, so then it will be coming under which category? So excluded from supply. Excluded from supply, but for the purpose of ITC, it will be treated as exempted. But when you are exporting it, means you are undertaking a project outside India, so then it may become 0 rated and you may claim the refund of ITC in that case. So that's what they conveyed here. Then next, third refund is also there, merchant exports. Now another confusion here. Sir, what is deemed export? What is merchant export? Please try to understand, listen here. Sir, I am having advance authorization, sir. I am having EPCG license, sir. I am having EOU, sir. When you make sale to me, for you it is deemed export. Either you will claim refund or I will claim refund. Correct or not? Deemed export refund. Again, I am repeating. I am having AA, I am having EPCG, I am having EOU. When you sell to me, for you it is deemed export. Either as a supplier you will claim refund, or as a recipient I will claim refund. What if I don't have AA? What if I don't have EPCG? Or I am not a EOU, but I am an exporter. I procure the goods from you. Now, in this case, I am called as a merchant exporter. I am procuring goods from you and I am exporting it. But I will not get the deemed export refund. So then, is there any alternative available for me? Yes, they created an alternative for me. What is that? I will procure from you at 0.1% GST rate. Means you will sell to me at what rate? 0.1%. Means for you it will be inverted, correct or not? Your purchases will definitely be more than 0.1% only. So when your sales to me is at 0.1%, this transaction will be like an inverted tax structure for you. So you will claim the refund of ITC. Now how much I paid on purchases? 0.1%. This 0.1% I will take as ITC and I will export the goods without payment of GST under bond or LUT, and this 0.1% I will get as a refund. You understood? What is the time limit within which I need to export it? I need to export it within 90 days from the date of purchase. See this? Merchant export means export through third parties. Sale of goods to such third party by a supplier. So you are supplying it to me, so it will be taxable at 0.1%. CGST 0.05, SGST 0.05, IGST 0.1%. Such supplier making supply to such third party can claim refund of unutilized ITC under inverted tax structure. So you can claim refund under inverted tax structure. Such third party can avail ITC. I am the third party. I can avail ITC at the rate of 0.1%. GST paid on invert supply. And I should export the goods. What is the time limit within which I should export the goods? Within 90 days from the date of purchase invoice. Under which option I need to export the goods? Under bond or LUT without payment of IGST. Then deemed exports discussion, already we have seen what are the options available, etc. Then fourth one, refund on account of wrong classification. What is this? Treating intrastate supply as interstate supply, I have paid some GST, wrong GST. Now I need to pay the correct GST and thereafter I will get the refund of wrong GST whatever I have paid. For example, I should pay CGST, SGST, but I paid IGST. Now I have to pay CGST, SGST and get refund of that IGST. And in this case, whether I have to pay any interest or penalty, etc. No, because there is revenue neutral. There is no loss to the government. Nah. So it's a revenue neutral exercise. Wrong classification, intrastate supply subsequently held to be interstate supply and vice versa. Sir, subsequently held means how it will be known? Either you may identify that or department may identify. Meaning of subsequently held means either identified by the taxpayer or by the tax officer. Then refund of wrong tax upon payment of correct tax. So first you pay the IGST and then you will get the refund of CGST, SGST. Or you pay CGST, SGST and get refund of IGST. And refund application, same RFD1, within 2 years from the date of payment of wrong tax or correct tax. First you pay the correct tax, then only you will get refund. So within 2 years from the date of payment of correct tax. Then suppose if the supplier has rectified this mistake by giving a credit note. First I treated it as interstate supply. I gave a credit note cancelling this. Again I gave an invoice for intrastate supply. Now in this case, whether refund will be applicable? No, because I have rectified already. So refund of wrong tax paid not available if the taxpayer has made tax adjustments through issuance of credit note under section 34. Then next one, refund to UIN holder. Who is a UIN holder? Specified agencies of UN like UNESCO, UNICEF, etc. and embassy or consulate located in India. So basically these people are called as UIN holder and their outward supplies will be exempted. So they are not required to pay any GST on their outward supplies. But they are making some procurement, imports. They are making some import of goods. So because these people will be liking to drink water only, water they will not drink because they are foreigners. So when they are foreigners, definitely they will not like Indian brands and all. So foreign brands only they will be preferring. So therefore goods are being imported. And not only liquor, but also many goods, many things like bread, cheese, whatever, whatnot. They will not buy anything Indian. They will buy everything foreign only, because these people are foreigners. Foreigners only coming and working in embassies, consulates and all, because our people will be located in their embassy, their country. So whereas they will be here in our embassies or consulates. So therefore import of goods will be done. On import of goods, there will be sometimes customs duty along with IGST. That IGST, they can get it as a refund. Then second, local procurement sometimes they will be making. So these local procurements, whatever GST they paid, both goods and services, whatever GST they pay to the supplier will pay GST to government. From government, they will get the refund. But why import of service is not there? Import of goods is there. Local procurement of goods and service is there. But why not import of service? Because import of service chargeable to GST under RCM, they need to compulsorily register. But their outward supply is fully exempted, so they are exempted from registration. Section 23 overrides Section 24. Consequently, they will not pay GST on import of services. IGST not payable on import of services, as Section 23 overrides Section 24. Now these UIN holders is getting refund now. So that refund, what is the refund application? The regular refund application is RFD 1. But in case of export of goods upon payment of customs duty, refund application is shipping bill. And in case of refund of UIN holder, the refund application is RFD 10. Along with a statement of inward supplies in GSTR 11. And UIN of the recipient should be mentioned in the tax invoice, because in GSTR 1, when we create the invoice, so we have to put it under B2B, not B2C. So even though UIN holders are not registered persons, but whenever we are making sale to UIN holders in GSTR 1, it should be classified under B2B supplies, means UIN should be mentioned in the invoice. Then only they will be able to get the refund. Suppose if UIN is not mentioned in the invoice, then the refund will be available if the copy of invoice is attested by the authorized representative of the applicant. And once they make refund application in RFD 10, an acknowledgement will be given in RFD 2. And inward supply should have been received against a valid tax invoice, and the refund application shall be filed within 2 years from the last date of the quarter in which supply was received, which means they will go for refund not on a monthly basis but on a quarterly basis from the quarter end within 2 years. Refund not allowed with respect to single tax invoice where the value is less than 5,000. Suppose if they make a purchases which is of less than 5,000, like 4,999 like that, then in that case whatever GST paid they cannot take no refund. So instead what they should do, they should ask the supplier to accumulate and get an invoice more than 5,000, then only they will be getting refund. And the refund order will be passed in RFD 6 within 60 days from the date of application of refund. Now we have some procedural aspects. In these procedural aspects, first you need to remember few forms. RFD 1. What is the purpose of this RFD 1? Refund application. RFD 2 is known as acknowledgement. RFD 3 is known as deficiency memo. RFD 1 application, RFD 2 acknowledgement, RFD 3 deficiency memo. RFD 4 will be provisional refund, in which case whenever we are making zero rated supplies, so within 7 days 90% of our refund claim we will get it as a refund on provisional basis prima facie without processing the refund application. So because of encouraging the exporters, they are giving this provisional refund. How much will be the provisional refund? 90% of the refund claim. What is the time limit within which it will be given? Within 7 days it will be given. So that is known as provisional refund, which is in RFD 4. RFD 5 is known as payment order. Once the refund is sanctioned, then to your bank account they need to release. That is called as payment order RFD 5. Then RFD 6 is final refund order. So for payment of the difference 10% or for sanctioning the refund, so they will be using RFD 6, that is final refund order. Then one more form you need to remember, RFD 10. RFD 10 is application for refund by UIN holder. Now look into the procedural aspects. First point, in these procedural aspects everything is important for MCQ purpose. So all these procedural aspects will be tested for MCQ purpose only. Okay, see the first one, application for refund. What is the refund application? RFD 1. But in case of refund to UIN holder, it is RFD 10. and in case of refund of IGST paid on export of goods, it will be shipping bill. And whenever you are making application for refund, that application for refund, Aadhaar authentication is mandatory. Then once you make application, you will get an acknowledgement. What is the time limit within which you will get acknowledgement? Within 15 days. In that acknowledgement, you will have the date on which you made the application, and acknowledgement or deficiency memo you should get within 15 days. If the application is proper, you will get acknowledgement. If there are some deficiencies in the application, you will get a deficiency memo. So either within 15 days RFD2 or RFD3. Then time limit for filing refund claim. What is the time limit within which you need to make refund claim? 2 years from the relevant date. But see there, while computing the 2 years, the time period from the date of deficiency memo till the time you make a revised application, so that time limit will be excluded, so that your overall time limit of 2 years will be intact. Sir, what does it mean? It means that the relevant date for refund application is, say 10/8/2023 is the relevant date. What is the time limit within which we need to make refund application? 2 years. So RFD1 filed on say 5/8/2025. Is it within 2 years? Yes. Within 2 years we file RFD1. Thereafter so you got a deficiency memo, RFD3. Okay, RFD3 is the deficiency memo na? On RFD3 you got on 25/8/2025. Okay, sorry, 15 days, exactly 15 days, 28/2025 you got the deficiency memo. When you got the deficiency memo, again you have rectified the refund application and you need to file the new refund application, RFD1. So, but this is revised RFD1, file immediately the next day, say 22/8/2025 you filed. But if you see from 10/8/2023 to 22/8/2025, it is beyond 2 years. It is beyond 2 years. So whether this refund application is valid or invalid. Now we need to take the total time period. What is the total time period? 10/8/2023 to 28/8/2025. 2 years plus how many days extra? 12 days, correct. 2 years, 12 days, minus what is the period from original refund application to deficiency memo? What is the period? 15 days. You exclude this 15 days, minus 15 days. Now, what is the period here? 1 year, 11 months and 27 days, which is less than 2 years. Therefore, revised RFD1 is valid. So this is how you need to check. So first you need to take the overall time limit from the relevant date till the time you file the revised refund application and see the total time, minus you exclude the period from the date on which you filed the refund application, original refund application, till the date you got the deficiency memo. You take out that period. Once you take out that period, you will get the effective period. Is that effective period within 2 years or not? You check. If it is within 2 years, then the revised refund application you have filed will be valid. That is the meaning of that. So while computing 2-year period from the date of filing refund claim till the date of communication of deficiency shall be excluded. Then time limit of 2 years is not applicable. Only in one case this time limit is not applicable. Refund of balance in the cash ledger, because that is your money to give refund to you, why the time limit will be applicable? So in case of refund of balance in cash ledger, this 2 years time limit not applicable. Then provisional refund is possible. To what extent provisional refund is possible? 90% of the refund claim. In which case? Only in case of zero rated supply. Highlight that provisional refund is only in case of zero rated supplies. And the provisional refund order will be passed in RFD 4 within 7 days from the date of acknowledgement, and payment order shall be issued in RFD 5. Okay. So what is the time limit within which we will be getting refund here? Within 7 days from the date of acknowledgement, and one payment order will be passed. What is that payment order? In RFD 5. And final refund order is passed in RFD 6, and the payment order shall be issued in RFD 5. So therefore 3 forms: RFD 4 provisional refund order, RFD 5 payment order, RFD 6 final refund order. What is the time limit within which RFD 6 will be passed? Within 60 days. Okay. This RFD 6 will be passed within 60 days from application. Within 60 days from application. But provisional refund order is within 7 days from the date of acknowledgement. Then payment order issued in RFD 5 needs to be revalidated if refund not disbursed in the same financial year. So they need to revalidate that payment order. In case of unregistered person, date of issuance of letter of cancellation, so is the date of receipt of services by the applicant. So from that date 2 years will be counted. Then withholding of refund. What is this withholding of refund? Sometimes by mistake, not by mistake, sometimes there is an order which is pending against a person, and the person has to pay some amount, and the same way some refund is also due to him. Now whenever the recovery starts, whatever is the pending amount that he need to pay to the government, that will be adjusted from the refund that is to be paid to that person. So that's why whenever there is an outstanding demand order, the refund will not be released, it will be withheld. So if there is any outstanding demand against a person to whom refund is payable, then such proper officer can pass an order for withholding the refund. Where proper officer or commissioner is satisfied that refund is no longer liable to be withheld, he may pass an order for release of withheld refund in prescribed form. First, proper officer should release the withheld refund and then only pass the refund sanction order. And next one, this is a very important area, refund subject to unjust enrichment. Many times they have given short note questions on this. What is the meaning of refund subject to unjust enrichment? I need to prove that I have not transferred the burden of tax to the next person. So refund subject to unjust enrichment means one person should not be enriched at the cost of others. Means I will recover the GST also from the next person and I will claim the refund also. That's a double benefit. I should not enjoy this double benefit. Refund is subject to the condition that there is no unjust enrichment, which means refund shall not be granted if the registered person failed to prove that burden is not transferred to the recipient. How to prove that? So either if the refund amount does not exceed 2 lakhs, self-declaration. If the refund amount exceeds 2 lakhs, certificate from a CACMA. Already in ITC also we have come across this. ITC does not exceed 2 lakhs, self-declaration. ITC exceeds 2 lakhs, certificate from CACMA. Just like that. Suppose if declaration is not submitted or certificate is not submitted, then the refund amount will be transferred to consumer welfare fund. If declaration or certificate not submitted, refund application cannot be filed and such amount shall be credited to consumer welfare fund. But there are 6 cases where we don't have to file declaration or certificate, but we will get the refund. So what are those cases? Means these cases are exception to the doctrine of unjust enrichment. So what are the exceptions? Number 1, refund of IGST paid on export of goods or services. And number 2, refund of unutilized ITC on account of zero rated and inverted tax structure. So refund of ITC. First one is export of goods on payment of IGST. Number 2 is refund of unutilized ITC. Number 3, refund arising on account of refund voucher. Refund on account of wrong classification, intrastate as interstate, and refund of excess balance in the cash ledger. and finally refund claimed by the unregistered recipient, because he is the recipient, so you don't have to prove unjust enrichment. These are the 6 cases, no need to prove unjust enrichment, we will get the refund. Then consumer welfare fund, already we have seen, if neither declaration nor certificate is given to prove unjust enrichment, the money will be transferred to consumer welfare fund. Also any income from that fund, that is out of investment of that money, if you generate any income, that will also be credited to that fund, and a committee will be appointed for utilization of that fund, and the committee should not spend more than 50% of the amount credited for publicity or consumer awareness on GST, and also ensure that minimum 25 crores is available for the purpose of consumer welfare activities. So this is one provision. So maybe somewhere in MCQ they will be testing how much maximum can be spent for publicity and consumer awareness of GST, 50% of amount credited. What should be the minimum amount that should be maintained in the fund? 25 crores. So this is about refund under GST. Okay, fine. Yes. Zero rated supplies, wherever we are referring, that includes both exports as well as supplies to SCZ. Okay. Fine. One small break we will take here. Okay. Okay, we'll start. As we completed refunds, please look into the next segment, that is segment 13, payment process. So in this payment process, we have two sections, four sections mainly, in that the two sections are 49 and 50. 49 talks about what are the various ledgers which are maintained by GST network on behalf of every registered person. Section 50 talks about interest computation. Then two more sections which previously was there in levy that has been brought here, payment process, that is TDS and TCS. These are the four sections, section 51 and 52. So 49, 50, 51, 52. 49 talks about various electronic credit ledgers. At the end of this book, I have given this section index. So please make use of the section index. What section, what is that talking about, and what is the page number of that particular section, where and all it is there. At the end of the book you can find. So that will be definitely be helpful for you, so that in case any section number you are not able to recollect, you refresh that. So reason being, in exams sometimes the provisions are directly asked on section, so they will not tell what it is, so they will tell. So what are the conditions or what are the situations leading to consequences under section 29, like that they will give. What is the 29? Cancellation of registration. So sometimes we don't know what is that section, so that's why it is better to make note of what are all the sections that already I have done at the end of the book. You please make use of it. Okay, then see this section 49 which talks about various electronic credit ledgers, 50 interest, 51 TDS and 52 TCS. First 49, subsection 5 already we have seen in input tax credit, manner of utilization of credit, that four principles we have seen, IGST credit, no restriction, etc. So now the remaining provisions of 49 is discussed here. There are three ledgers which will be maintained by GST network on behalf of every registered person. Those three ledgers are electronic liability ledger, electronic credit ledger and electronic cash ledger. Electronic liability ledger contains the details of liability, from where information will go into electronic credit ledger whenever we file our returns. GSTR1 and GSTR3B, electronic liability ledger will have the information about liability. Electronic credit ledger, how there will be inflow into electronic credit ledger the moment we take the ITC. How we will take ITC? Either through GSTR3B or ITC1 or ITC2 or ITC2A. ITC1 is availment of ITC on closing stock. ITC2 is transfer of ITC on account of transfer of business. ITC2A, transfer of ITC on account of single registration is getting split into multiple registrations, or refunds. So sometimes we will pay excess tax, so that excess tax will come as refund into the respective ledger. So suppose in a particular month we have paid tax in excess 1 lakh. For that month 60% we paid through electronic credit ledger and 40% we paid through electronic cash ledger, that month liability. Now 1 lakh we paid in excess now in that month. In that month lot of liability is there, but excess paid is 1 lakh. And we need to see the ratio in which the liability is discharged in that month. 60% using credit ledger, 40% using cash ledger. So in the same ratio, that 1 lakh will be given back to us into our respective ledger. So that money also will come into the electronic credit ledger, which can be used only for payment of tax dues. The liability of a registered person is divided into 5. T, I, P, F, O. T for tax dues, I for interest, P for penalty, F for fees and O for others. These are the 5 dues of a registered person. Now in this, the electronic credit ledger balance can be used only for payment of tax dues. It cannot be used for payment of other dues. Then the balance in electronic cash ledger. How money will come into cash ledger? Whenever we make a deposit through payment challan, PMT 6 challan, any TDS or TCS deducted or any refunds, it will come into cash ledger. But the balance in cash ledger can be used for payment of tax dues as well as other dues. But the balance in credit ledger can be used only for payment of tax dues. So whatever is the outflow from the credit ledger, that will be inflow into the liability ledger. Whatever is the outflow from cash ledger, that will be inflow into liability ledger. And this liability ledger will be having a prescribed form, that is PMT1 is the format of liability ledger, PMT2 credit ledger, and PMT5 is the cash ledger. And the balance in electronic credit ledger or electronic cash ledger, after payment of interest, penalty or fee or any other amount, we can claim as a refund. Now, special points with respect to cash ledger. So first is that what are the various modes of deposit. So far we have seen, so 4 forms: PMT1 liability ledger, PMT2 credit ledger, PMT5 cash ledger, PMT6 deposit challan. Okay, now we need to make a deposit. What are the various modes of deposit? Total 6 modes of deposit we have. Number 1, so debit card, credit card, internet banking, NEFT, RTGS, cash deposit over the counter. But over the counter cash deposit up to how much is allowed? Up to 10,000 rupees in a tax period. Tax period here is monthly. And in case of composition scheme, the tax period will be quarterly. And even 2 more modes is also there, UPI and IMPS. Then when the payment is debited in the bank account but not credited in the electronic cash ledger, we need to raise a complaint to the payment gateway through the portal, and the form for that is PMT7. Then for transfer of balances between major heads and minor heads, sometimes it so happens that between major heads and minor heads there will be some shifting of balance that is required. For example, what are the major heads and minor heads? We have 4 major heads: CGST, SGST or UTGST, depends, either one will be there, SGST or UTGST, IGST and CES. These are the 4 major heads, and for every major head we will have 5 minor heads, T, I, P, F, O. So there will be a 20 cell matrix. Now by mistake we deposited in CGST, SGST, and we know that we have to pay IGST. We can shift the balances from CGST, SGST tax to IGST tax. Suppose if we have made the payment, thereafter we should go only for refund. Before filing 3B itself, you know that intra is treated as inter, inter is treated as intra. We can rectify in this place itself by shifting the balances. For that we need to file one form, that is PMT9. Suppose after making the payment of tax, means after filing 3B, if we come to know intra is inter or inter is intra, we should go only for refund. So that is the advantage of PMT9. Not only between taxes, from any cell to any cell we can shift the balance. From CGST penalty to IGST interest also we can shift. There is no restriction. Not from tax to tax only. Penalty head to interest or penalty head to late fee. Tax to late fee. Any cell to any cell we can shift the balances. For transfer of balances between major heads and minor heads in electronic cash ledger, form GST PMT9 is notified. PMT9 has got one more purpose also, that is between distinct persons. Distinct persons means like 2 registrations of the same person. Say for example, I have a registration in Tamil Nadu, I have a registration in Karnataka. Now I want to shift the balance from Tamil Nadu to Karnataka, cash ledger Tamil Nadu to cash ledger, somewhere Karnataka. I want to shift the balance. Can I shift the balance? Yes. Credit ledger we cannot shift the balances. Only cash ledger we can shift the balance from one registration to another registration, but these 2 registrations should be belonging to the same person. Also one more condition they are telling, that there should not be any pending liability for the transferor. Means I have electronic cash ledger balance in Tamil Nadu, some excess balance. Now I need to get it as a refund, and again I need to deposit in the Karnataka registration. Instead, I can shift the balance. For shifting of the balance, so I have to file PMT9, but I need to ensure that in Tamil Nadu there is no pending liability. Balance available in cash ledger can be transferred between distinct person using PMT9. However, transferor should not have any liability in the liability ledger. These are the points with respect to electronic cash ledger. Then credit ledger, refund from electronic credit ledger is possible only in 2 cases, that is inverted tax structure and 0 rated supplies. Already we have seen refund of ITC possible only in these two cases. Other cases refund is not possible. And refund to original source ledger was the discussion I have been making. Whenever I pay some tax in excess by mistake, only by mistake on account of excess payment, on account of any account error, etc. So whenever there is excess payment of tax, when we claim the refund, that refund will come into the original source ledger in proportion to which it is paid. That's the example I was giving. 1 lakh I paid in that month. The liability what I have discharged for that month, 60% through credit ledger, 40% through cash ledger. Then from that excess amount also 60% will come into credit ledger, 40% will come into cash ledger. Then for giving refund into the credit ledger, they will be giving an order in PMT 3. So total we have lot of forms. In that PMT 1 is for liability ledger, PMT 2 is credit ledger, PMT 3 is for recredit into the electronic credit ledger. When there will be recredit into electronic credit ledger, first we claim the credit. Thereafter we use the credit for payment of taxes, but we paid the tax in excess. So to get the refund of the excess tax, we will be getting the money into the credit ledger. Okay. And PMT 4 is communication of discrepancies. Suppose if there is any mistake in the balances, so for that we need to make a complaint to the portal. That complaint to the portal is PMT 4, communication of discrepancies. Then PMT 5 is cash ledger, PMT 6 is deposit challan, PMT 7 complaint to the payment gateway through the portal in case money got debited from our bank account but not credited into cash ledger. PMT 8 we don't have, but PMT 9 we have. That PMT 9 is for the purpose of transfer of balance from one cell to another cell, or cash ledger of one distinct person to another distinct person. Then there is one more form, PMT 3A. What is the purpose of this PMT 3A? We claim the refund of ITC erroneously. Erroneously means wrongly we claim the refund. So now this refund wrongly claimed will be recovered from us. Again I am repeating, ITC refund we have wrongly claimed in excess. Now this amount will be recovered from us. So when it is recovered from us, then it should be given back in the credit ledger now, because we claimed as refund from which ledger? Credit ledger. Means the balance in the ledger would have come down. Now when it is recovered from us, then again the balance in the ledger should increase. So for recredit into the electronic credit ledger, they will be using PMT 3A. When the registered person claimed erroneous refund of ITC, upon payment of such refund along with interest and penalty, proper officer shall pass a order in form GST PMT 3A for recredit into electronic credit ledger. Then next, balance in electronic credit ledger can be used only for payment of tax but cannot be used for payment of interest, penalty, fee and others. Also, balance in credit ledger can be used only for payment of FCM liability, not RCM liability, because RCM liability always should be paid out of cash ledger. Okay. Balance in credit ledger can be used only for payment of GST under FCM, but not payment of GST under RCM. That's the reason why, remember this computation, first you need to take gross GST payable under FCM. First you need to take gross GST payable under FCM, and thereafter we need to reduce input tax credit. Okay, input tax credit, we need to reduce input tax credit utilized, and then you need to add GST under RCM. Add GST payable under RCM. Then you will be getting net GST payable through electronic cash ledger. This is called as net GST payable through electronic cash ledger. So this will be taken as the number. Okay. First we need to take gross GST payable under FCM minus input tax credit utilized, then add, because you cannot use ITC for payment of GST under RCM. It so happens that we will be having some gross GST payable 40,000, but we have 50,000 ITC. We have 50,000 ITC, okay, and we have RCM liability 15,000. So now when you put this 50,000 For RCM liability also, the net liability will become 5,000. So you should not do that. First 40, how much you can utilize? 40 you can utilize, and this 15,000. Even though you have sufficient balance for payment of this 15,000, but 15,000 you have to pay. And what is the excess balance in ITC carried forward? Excess balance in ITC carried forward is 10,000. So the 10,000 cannot be used for RCM liability. That's why you remember this template. First, gross GST payable under FCM minus input tax credit utilized, add GST payable under RCM, net GST payable through electronic cash ledger. Then balance available in electronic credit ledger may be restricted for utilization by proper officer. So for that purpose, we have two rules, rule 86A and 86B. Actually, one more point is also there, that is related to arrears of tax. I have some arrears of tax, and for that arrears of tax, now I am paying. So can I use credit ledger balance for payment of arrears of tax? That is, say this. So for the month of July 2022, July 2022, I have to pay some tax. Okay. So short payment of tax or non-payment of tax. Non-payment or short payment of tax. Short payment of tax. So that is somewhere like 1,50,000. At that time, my ITC balance was 0. I don't have. If I had ITC balance, I would have used that at the time itself. So balance in ITC at that time was 0. I did not have. Then somewhere in July 2024, I got a demand order asking me to pay that 1,50,000. You got it? Demand order under section 73 or 74, okay, for payment of 1,50,000. For payment of 1,50,000. In which month? July 2024. And here the balance in ITC that I have is 1 lakh. The balance in ITC I have 1 lakh. Then how this ITC got created? So from this July 2022 to July 2024, in this period, this ITC of 1 lakh got created. Okay. So this was not there at that time. Now the question is, can we use this 1 lakh for payment of 1,50,000? Yes. So CBIC gave a clarification. What is that? So net balance I have to pay how much? GST payable is as per order. GST payable as per order is how much? 1,50,000 minus electronic credit ledger balance in ITC. I can pay using ITC. How much? 1 lakh. Then what is the remaining amount? The remaining amount is payable through cash ledger. Payable through electronic cash ledger 50,000. Even though this ITC got accumulated at a later point of time, I can use this ITC for payment of demand order. So ITC can be utilized for arrears of tax. For arrears of tax. Sir, then everyone will do this now, sir. Yes, but the twist is in a different place. That different place where the twist they have kept is interest payable on gross amount 1,50,000. So here, boss, you use ITC, no problem. You use ITC 1 lakh, no problem, which you accumulated at a later point of time. Congratulations, all the best for you. But interest you have to pay on what? Not on 50,000, 1,50,000. However, interest payable on gross liability. How much I used ITC? 1 lakh. Usually when there is a delay in payment of tax, interest is computed on net liability. But in this case, interest payable on 1,50,000 at 18% from this month is July 2022. July 2022 means what is the due date of 3B? 20th October 2022. 20th August 2022. 20th August 2022 till 20th August 2024. So till that time I need to pay interest. So anyhow government is at gain. They are collecting the interest on 1,50,000. That's why they are allowing us to use the balance in ITC which is accumulated at a later point of time. So what is the important point that you need to learn here is that the balance in ITC can be utilized even for payment of arrears of tax arising out of any demand order. Then next, whatever ITC that we have availed in credit ledger may be restricted for utilization by a proper officer. In two cases it can be restricted. One is under Rule 86A, another is under Rule 86B. In 86A what they are telling, this is after taking the credit into the ledger or before taking credit into the ledger? After taking the credit into the ledger. Before taking into the ledger itself there is some restriction, that is section 38. Even though supplier filed GSTR1, but it will come into our 2B under ITC not available. When it comes into our 2B as ITC not available, we cannot take the ITC. I am not talking about that. It came in 2B as ITC available, but thereafter the ITC gets suspended for a period of 1 year. In what cases it will be suspended? Say this. ITC availed against an invoice issued by a supplier who is not in existence. Your supplier is missing. We don't know where he went. Supplier is missing. So supplier not in existence or not doing business from the place where he has obtained registration. Number 2, recipient is missing. Means they could not identify us. We are here only. They could not identify. Recipient is missing. So sometimes in Swiggy and all, when I order, he will be outside my house only. Sir, I am not able to find sir, like that he will tell. I will be telling my car is there, car number also I will tell. He say, no sir, there is no car sir. If he turn backside it will be there. One day I went backside to him and I said, turn backside, I am here only. So sometimes people will find it difficult to get the address. Like that, they are not able to identify. We are here only. So recipient not in existence or not doing business from the place where we have obtained registration, or ITC availed without receipt of goods, or ITC availed against an invoice for which supplier has not paid tax to government. Who did not pay? The TDS did not pay. For that, what is my problem? My ITC already taken is removed. Invoice or debit note against which ITC availed is not in existence. What has happened? Invoice is missing. Okay. So if you maintain physical copy of the invoices, this problem will happen. Then in that case, the ITC will be disallowed for a period of 1 year, suspended for a period of 1 year. And thereafter, after 1 year, what will happen? If it is genuine ITC, it will be given back to you. Otherwise, it will be permanently disallowed. Okay. Upon expiry of 1 year from the date of restriction, the registered person shall be able to debit input tax credit so disallowed, subject to any other action that may be taken against that person. This is about 86A. So what are the 5 cases where 86A will be coming into picture? Rule 86A, supplier is not in existence or not doing business from the place where they have obtained registration. Recipient is not in existence or not doing business from the place where they have obtained registration. Or invoice is missing, invoice or debit note is missing. Goods not received but we have taken ITC. Supplier has not made payment of GST to government. Then there are some cases wherein ITC will not come in 2B itself, that we have seen in section 38. What is that? Supplier is a newly registered business. Supplier has defaulted in payment of tax and the default continues. Supplier liability in GSTR1 greater than 3B. Supplier has not filed 3B, or supplier ITC in 2B is greater than his, ITC in 3B is greater than his 2B, and supplier has to pay 1% of liability through cash ledger but he did not pay. In those cases, First of all, ITC will not come into our electronic credit ledger. Okay, then, so I said I will connect all these points in one place, that is this place only. Say this. First, we made some purchases. First, we made some inward supplies. When we made some inward supplies, okay, it should come into our electronic credit ledger first. Credited, ITC credited to electronic credit ledger. ITC credited to electronic credit ledger. Thereafter, we will utilize it for payment of our liability. Okay, ITC utilized for payment of liability. Now, see what and all is happening. The moment inward supplies is there, it may come in 2B or it may not come in 2B. There is one more blockage here. What is that? Reflected in 2B, reflected in GSTR 2B. Now, any stage the ITC may miss. Okay, what is the stage? First stage where ITC will miss. Here. ITC may go. Why? Why it will not come in 2B? Why it will not come in 2B? Supplier not filed GSTR1 or supplier has reported incorrect details in GSTR1. Correct these two reasons. Supplier not filed GSTR1, not filed GSTR1, then it will not come in 2B. Then supplier not reported invoice in GSTR1. Correct. He filed GSTR1, but he did not report the invoice. Got it? Or supplier reported invoice in GSTR1 as B to C instead of B to B. Possible. Then also it will not come in 2B. Number 4, supplier reported invoice in GSTR1 but incorrect details. Okay, supplier reported incorrect details in GSTR1. Because of these reasons, ITC will be missed. Okay, now having suffered this many problems, at last it came in 2B. Again, when it comes in 2B, it will be coming under two places. What are the two places? ITC available, ITC not available. Why ITC not available? Because of the restriction in section 38. ITC available. Okay. Why ITC not available? Because of section 38. Section 38. What does section 38 says? There are some cases now that we have seen in section 38. That is what? Supplier is a newly registered business or supplier. Some situations we have seen. So because of that reasons. And so here, is it a temporary or permanent? Temporary. It's not permanently ITC not available. Right now ITC not available. In future we may get it under ITC available. So this is like a temporary exclusion. Temporary exclusion, again it may come in future. It is right now a temporary exclusion. What are the cases? Supplier is newly registered, then supplier not filed GSTR 3B, supplier liability in GSTR 1 greater than liability in GSTR 3B, supplier ITC in GSTR 3B greater than ITC in GSTR 2B. Next, so demand notice, okay, supplier defaulted in payment of taxes, and such default continues. Then number 6, supplier paid 1% of liability, supplier not paid 1% of liability through electronic cash ledger. So these 6 cases, ITC gone. Again, ITC is available, but it's temporary exclusion. Whenever it is available, it will come there. Means if my supplier has rectified its mistake, then it will come into my ITC. Okay, sir. Then wherever ITC is available, again, for taking into the electronic credit ledger, we have to do some things. What is that? For taking into electronic credit ledger, we have to do, what is that? Blocked ITC. Gone? Correct or not? Blocked ITC. Blocked ITC will be gone, and non-business purpose will be gone. So blocked ITC under section 17(5), then non-business purpose under section 17(1), then next minus exempted, correct, used for exempted supplies under section 17(2), that is gone, and thereafter we will be taking it into electronic credit ledger. Once we take into electronic credit ledger, by the time it gets utilized, why it will go? At this stage, why it will go here? No, that is after utilization. This is like reversal of ITC, rule 42, rule 43. After taking the credit, we do reversal, na? Minus reversal of ITC under rule 42 and 43. We need to reverse the ITC. Then suspension of ITC under rule 86A. 5 cases. 5 cases ITC will be suspended. What is that? Not in existence. Supplier not identifiable. Recipient not identifiable. invoice missing. And one more case, one second, I forgot this. Blocked ITC, non-business purpose, exempted supplies minus conditions not satisfied under section 16. Section 16, some conditions are there na. You have not received the goods, or the time limit, depreciation under Income Tax Act. So because of conditions not satisfied under section 16, after this someone take a screenshot of it and send it to Chechi. Supplier not identifiable, recipient not identifiable, then invoice missing, then goods not received, then one more case, what is that? Supplier not paid GST. Then one more thing, that because of that also it will be gone. That is rule 86B. You cannot use 1% of credit ledger, correct? So non-utilization of 1% of liability under rule 86B. So 1% of my liability I cannot use from the credit ledger. It is there in my ledger, but I cannot use it. Because of these cases, I cannot use the money for payment of my liability. Now, at last, I am utilizing it for payment of liability after this many filters. And even in Instagram also, this many filters we will not use for uploading photo here. And after it comes into the ITC utilized, then again one twist is there. What is that? Reversal of ITC if GSTR 3B not filed by supplier, so by September 30th of the succeeding financial year, correct? Reversal of ITC under section 41, read with rule 37A, for what? Supplier not filed GSTR 3B by September 30th, minus reversal of ITC under section 16, read with rule 37. What is this, sir? 180 days. 180 days. We took the ITC, utilized it, but we have not made payment to supplier within 180 days. So therefore, we need to reverse the ITC here. You got it? So because of this reason, even after utilizing it for payment of liability, the reversal may happen. Okay. So that is about this many things. Suddenly if you see that, you will not understand anything. Then look into the next one, restriction on utilization of amount available in the electronic credit ledger, rule 86B. To whom this rule 86B is applicable? If my turnover in a month exceeds 50 lakhs, then this rule 86B will be applicable. What is that they are telling? I have to pay 1% of my gross liability through electronic cash ledger, even though I have sufficient balance in the electronic credit ledger to pay. And while computing the turnover, we should take out exempted supplies, zero rated supplies, even non-taxable supplies. What we have is only 4: taxable, exempted, non-taxable, zero rated. Zero rated should not come, exempted should not come, non-taxable should not come. So what is left is taxable. So simply remember, taxable turnover exceed 50 lakhs, then only rule 86B will be applicable. This 50 lakhs is in a month or in a year? In a month. And to whom it is not applicable? To their family members. Government department, public sector undertaking, local authority and statutory body. Because what's the point in getting money from one pocket to another pocket? New money should come. So due to that reason, so to them it is not applicable. And 3 more cases also it will not be applicable. Such person or proprietor or karta or managing director or any of its two partners has paid income tax of more than 1 lakh in last 2 years, means already they created a cash flow to the government in the form of income tax. So due to that reason 86B is not applicable. So don't pay 1% of your liability through cash ledger. If you have sufficient balance in credit ledger, you use it, no issue. Then second case, so who here? That person or its managing director or its karta or proprietor or any of its two partners has deposited income tax of greater than 1 lakh. Here deposit means it should be before deducting TDS, TCS and advance tax, that line. Tax on total income including surcharge and cess is there na? That. Before deducting advance tax, TDS, TCS. So that if it is greater than 1 lakh, it's okay. Because when you deduct advance tax, already you paid na? Means already you paid income tax of that advance tax or TDS, TCS. So that is also your tax only na? TDS, TCS paid by other person. So before that line. So that is more than 1 lakh in 2 years, both years. Then current year rule 86B is not applicable. Received a refund of unutilized ITC greater than 1 lakh in the preceding financial year. Already you have got the refund, you have got lot of accumulated ITC, from that only you are getting as a refund. Who will get refund of ITC? Only two people, that is zero rated supplies and inverted tax structure. Already they got lot of ITC, so that they are getting as a cash refund. Again, no point in making them to pay 1% through like cash ledger. So that's why it is not applicable to them. Paid greater than 1% of the liability. So cumulatively calculated up to the month in the current year. So means already you have paid more than 1% so far. Therefore, current month you are not required to pay anything through the cash ledger. So how to calculate this? Simple here. First you need to take in the numerator what is the total amount paid up to this month in the cash ledger, that is up to the previous month in the cash ledger, okay, in the current financial year. So total amount paid through cash ledger, electronic cash ledger up to previous month in current year divided by what is your total gross liability up to current month in current year, multiply with 100. If this is greater than or equals to 1%, current month rule 86B not applicable. Rule 86B not applicable for current month. Suppose if this is less than 1%, then rule 86B applicable for current month. Let's put it into numbers to understand this. One student is messaging, you are getting ads only about Tamil Nadu government. Not only you, everyone will get from Tamil Nadu government only, because recently Tamil Nadu government has spent lot of money on YouTube advertisement. Even at my home also lot of ads. I am not using YouTube premium. I am also conjuice like you only. Okay. So ads and YouTube, Tamil Nadu government ads only is coming because they pumped in lot of money. Because this 2024 elections is so crucial. So DMK government won through YouTube ads only. Stalin, Davarare, like that. So through that ad only they won. And due to that reason they are spending. It's not my problem here. YouTube problem. Fine. So see this. Here from April 2024 to July 2024, from April 2024 to July 2024. Gross liability is 200 lakhs and payment through electronic cash ledger is 4.5 lakhs. 4.5 lakhs. Next, for August 2024, gross liability is 50 lakhs and balance in ITZ is 60 lakhs. Whether Rule 86B applicable for August 2024. This is how you will get a MCQ question. Now what you need to do is that first you need to check the percentage based on the formula. What is the total amount paid through cash ledger up to previous month in the current year? 4.5 lakhs. 4.5 lakhs divided by total amount. Total amount is what? Already 200 lakhs plus 50 lakhs. So what is that? 200 plus 50, 250 lakhs. So 4.5 lakhs divided by 250 lakhs into 100. How much that will come to? 1.8%, which is greater than 1%. Therefore, greater than or equals to 1%. Anything is okay. Therefore, Rule 86B not applicable for August 2024 and entire 50 lakhs can be paid through electronic credit ledger. Okay. So this is how you need to apply that point. So what are the cases where Rule 86B is not applicable? Number one, central government, state government department, then local authority, public sector undertaking and statutory body. If deposited income tax greater than 1 lakh by any person or its karta or managing director or any of its two partners more than 1 lakh in two preceding years, and if the unutilized ITC refund is greater than 1 lakh in the preceding year or current year, cumulatively up to the month we have already paid 1% through cash ledger. So that is about Rule 86B. So we are moving on to section 50. Of course. So when the taxable turnover in a month does not exceed 50 lakhs also it is not applicable. But in this case the GST liability itself is 50 lakhs. Then definitely the turnover will be some in crores. So turnover, it's not liability, turnover. So GST liability in all these places itself is in lakhs. Then definitely turnover will be in crores only. In whichever month the turnover is less than 50 lakhs, for that month it is not applicable. So next month again turnover goes beyond 50 lakhs, that month it will be applicable, simple. Then there is one query here, 1 second. Sir, instead of deficiency memo, if we get rejection order in GST RFD 6, later then we file the refund claim to rejection order, time will be excluded or not for 2 years? No, it will not be excluded. Once they reject the refund, so then again when we make the new application for refund, we don't have any provision like exclusion from deficiency memo to refund application, like that we don't have any provision. So because of which the time will be gone. So again when you are making a new application, for that new application you check the time limit. Is it within 2 years or not? If it is beyond 2 years, the new application cannot be made. Okay. Then coming back to this section 50, interest on account of delay in payment of tax. There are 3 situations where the interest will be applicable under section 50. First, there is a delay in filing 3B. Because of delay in filing 3B, there is a delay in payment of tax. So because of which interest will be applicable. Second, invoice not reported in GSTR 1 and GSTR 3B but paid in a different month. So this is non-payment or short payment of tax. We have to pay tax in that month, we did not pay, at a later point of time we paid. The difference between first situation and second situation is that first situation we have shown the liability but 3B filed late. In the second situation we did not show the liability, we skipped it, and in a later month we are showing that as a liability. Situation 3, wrong availment and utilization of ITC. You are not supposed to take the credit, you took the credit and you have utilized that ITC. So in these three situations, section 50 interest will be applicable. Let's see the first situation. Delay in filing 3B. Interest rate is 18%. From when it should be computed? From the due date till the actual date of payment. Don't count the due date, count the next date. For example, July month, due date is 20th August. While interest computation, don't count 20th August, you count from 21st August till the date you are making or filing the GST or 3B. So from the first date after due date till the actual date of payment. And it will be computed on what? Is it computed on the gross liability or net liability? It will be computed on the net liability. So on amount paid through electronic cash ledger, that is net liability, it will be taken. Then what will be considered as the date of payment? Date of payment is nothing but the actual date of filing, 3B. Then second, situation 2. Invoice not reported in GSTR1 and GSTR3B of a month but paid in the other month. So in this case, interest will be computed at same rate, 18%, again same date, from the first date after due date till the actual date of payment. But interest is not computed on net liability, interest is computed on gross liability. That's the example we saw, entire 1,50,000, arrears of tax 1,50,000, even though we paid 1 lakh using credit ledger and 50,000 using cash ledger, but interest is computed on entire 1,50,000, that is gross liability. And till when it will be computed? What will be considered as the date of payment? Either actual date of filing 3B, through 3B also we can pay, or through DRC3 also we can pay. So therefore, if payment is through DRC3, then the date of filing such form. Then situation 3. Situation 3 is ITC wrongly availed and utilized. Suppose if we have wrongly availed the ITC, but we have not utilized that ITC, then we are not required to pay any interest. So interest will be at the rate of 18% from the first date after utilization of ITC till the date of reversal. And this computed ITC on ITC utilized only, not on ITC availed. So interest same 18%, not 24% interest. In some places they are telling 24% as the interest. No. So as per Finance Act 2023, so clearly it is mentioned that the interest is at the rate of, not Finance Act 2023, 22 itself, correct. 22, clearly it is mentioned as 18%. So in the law they use the word not exceeding 24%. Not exceeding 24 does not mean 24%. Not exceeding 24, but the rate is 18%. So 18% is only correct. 18% from the first date after utilization till the date of reversal. Now we need to compute interest on what? Only on ITC utilized, not on ITC availed. How to know ITC utilized? That month in which the balance in ITC falls below the availed ITC. In that month we have utilized the ITC. The extent to which balance in ITC falls below availed ITC. And what will be considered as the date of utilization? Date of utilization is actual date of 3B or due date of 3B, whichever is earlier in the month in which the balance in ITC falls below wrongly availed ITC. Whichever is earlier with respect to the month in which balance in ITC falls below wrongly availed ITC. And the date of reversal will be taken as the actual date of 3B. So this is how interest will be computed under section 50. And here on ITC wrongly availed and utilized, so we may get a question like this, that is balance in, that is ITC wrongly availed, ITC wrongly availed in July 2023, 1,50,000. Compute interest based on following table. Based on following table. So here month, opening balance, ITC availed, then ITC utilized. So we need to prepare a table like this based on the data in the question. Then closing balance. Now month, say July 2023, So we have an opening balance of 1 lakh, ITC availed 3 lakhs. In this 3 lakhs, 1,50,000 wrongly availed. 1,50,000 wrongly availed. And ITC utilized this, so somewhere like 2 lakhs. So what is the closing balance? 3 plus 1. So 2 lakhs is the closing balance. So whether we utilized for ITC wrongly availed? No, we have not utilized. Again, August 2023, opening balance 2 lakhs and ITC availed is 3 lakhs. IT is utilized 4 lakhs and balance will be 1 lakh. Whether we have utilized the ITC? Yes. To what extent we have utilized? 50,000 we have utilized. Again, September 2023, opening balance 1 lakh and ITC avail is 4 lakhs and IT is utilized 2,50,000. So what is the balance that we have? 2,50,000. So again it has increased, which means whatever we have utilized, we reverse. No, not like that. Not like that. That is not the meaning. So when the balance comes down, we utilize. But again when the balance increases, it does not mean we reversed. Okay. Then actually we should have reversed. Actually we should have reversed means for reversal there is a separate place in GSTR 3B table 4 and there it should have been shown. So October 2023, 2,50,000, ITC wrongly availed 1 lakh and ITC has been utilized. So 2,50,000, sorry, 3 lakhs we have utilized. So when 3 lakhs we have utilized, so it came down to 50,000. Then again 50,000 we have utilized in the month of October, and in November 2023, 50,000 we availed 5 lakhs and we utilized. So 2,50,000 including 1,50,000 wrongly availed. So whatever we have wrongly availed, we reverse only in this stage. So 5,50,000 minus 2,50,000, 3 lakhs is the closing balance. Now in this case, if you see what has happened, so we have availed ITC wrongly 1,50,000 and that got utilized 50,000 utilized in August. Whichever month the balance in ITC falls below wrongly availed ITC, in that month we have utilized. Again, so total 1,50,000 we utilized 50 here because the balance came to 1 lakh. Again where the balance is coming down below 1 lakh. 1,50,000 wrongly availed, balance 1 lakh means 50 we utilized. So now wrongly availed ITC 1 lakh. Where it is going below 1 lakh, again in October it is going below 1 lakh. So here also we are utilizing 50,000. Now there are two interest computation. So first interest computation is on 50,000 at what rate? 18%. From which date to which date? This 50,000 we have utilized for which month? August 2023. For August 2023 we need to take due date of 3B or actual date of 3B, whichever is earlier. So let's take 20th of September 2023 to when are we reversing it? November. For November when we will file the GSTR 3B? 20th of December 2023 divided by 365 days. So that will be 50,000 into 18% into number of days. Can you calculate? 29 to 2012. So in September you take 10 days, October 31 days, November 30 days, December 20 days. So how many days interest will be computed? 91 divided by 365, that will be equals to 50,000 into 18% to 91 by 365, 2,244. Again there is another interest that will be possible here. That another interest is on again 50,000 into 18%. This will be computed for October month. For October month, when are we filing 3B? 20th of November to 20th of December 2023 divided by 365. So that will be 50,000 into 18% into number of days. 20th November to 20th December means how many number of days? 30 days. 30 divided by 365. So what is the amount? 740. These are the two interest amounts that we need to pay in this case. So this is how you may get a question. Then there is one more point which you should be knowing, that is Suppose if I have the balance in the respective head, that is in the respective head I don't have the balance, but total against all these three heads I have sufficient balance. Does it mean whether I have utilized the ITC? What is this situation? IGST wrongly availed. IGST wrongly availed 1,50,000. IGST wrongly availed 1,50,000. Okay. And if you see for Jan 2023 and reversed in April 2023. Now January, February, March, if you see CGST balance, CGST, SGST, IGST and total. So balance in CGST is 40,000, SGST 40,000 and IGST 60,000. So we have got 1 lakh. So we have got 1,80,000. Again February month, so 30,000, 30,000 and 90,000. So 1,50,000. And March month 50,000, 50,000 and 60,000. How much? 1,60,000. Now if you see IGST head alone, 1,50,000 wrongly availed. So 50,000 we utilized in January because the balance in ITC under IGST is 1 lakh, means 50,000 we utilized. Again it came down to 90, means 10,000 we utilized, correct? Again it came down to 60, means we have utilized 40,000, correct? As per IGST head alone, if you see only IGST head alone, if you don't see anything else, only IGST head alone, if you see 1,50,000 came down to 1 lakh, means 50,000 we utilized in Jan. Again it came down to 90, means we utilized 10,000 in Feb, and again it came down to 60, which means we utilized 30,000. Already it came to 90, so 90 to 60 will be 30,000. We utilized 30,000 in March. But if you see the total, so total if you see every month we are maintaining 1,50,000 we are maintaining if you see total wise. Now whether ITC is utilized or not utilized, ITC wrongly availed is utilized or not utilized? Not utilized. As per CBIC circular, ITC of IGST wrongly availed is not utilized, as there is balance in total ITC for each month till reversed. So means we don't have to check only the headwise. You see the total. If the total ITC you are maintaining, that is sufficient. Not necessary that headwise you need to see this point. Okay. Then suppose instead of CGST, SGST, IGST, I have got compensation cess. Then in that case, what will be the treatment? So assuming the same scenario. So whatever scenario that we see here, instead of calling it as CGST, SGST, okay, instead of calling it as CGST, SGST, cess, everything remains the same. So 80,000 and in February 60,000 and in March 1 lakh. Okay. Now in this case the total is maintained. So whether we have maintained the balance, no, cess don't see, compensation cess don't see, you see only IGST, because if the compensation cess is there, that should not be taken. You have to see only the IGST head here. So that is remaining other than compensation cess. What is remaining other than compensation cess? Only IGST. So therefore rupees 50,000 utilized in Jan, comma rupees 10,000 utilized in Feb, and rupees 30,000 utilized in March, and entire 1,50,000 reversed in April 2023. So accordingly we need to compute the interest. So therefore this particular amendment I have given at the end, you can see last clarification on charging of interest under section 53, that is wrong availment and utilization of ITC in case of wrong availment of IGST credit and reversal thereof. What is the first point they are telling? In the case where IGST credit has been wrongly availed and subsequently reversed on a certain date, but reversal should be IGST only, reversal should not be CGST, SGST, reversal should be IGST only. There will not be any interest liability under section 53 if during the time period starting from such availment and up to the date of reversal, the balance of ITC in cash ledger under the heads of IGST, CGST and SGST taken together. So what is that? The balance in ITC, under the heads of IGST, CGST taken together. The balance of ITC in the electronic credit ledger under the heads of IGST, CGST, SGST taken together has never fallen below the amount of such wrongly availed ITC, even if the available balance of IGST credit in electronic credit ledger individually falls below the amount of such wrongly availed IGST credit. So that is the example we have discussed. So refer notes. So I have discussed this one example, ditto, whatever I have given there, that circular is there, that is this example. So they can definitely test this in exam. It's very important point. So chances of asking is there. And then another point you see, credit of compensation cess available in the electronic credit cash ledger cannot be taken into account. Compensation cess cannot be taken into account. So if you have compensation cess while doing the total, don't take compensation cess. Considering the balance of cash ledger for the purpose of calculation of interest under rule 88B in respect of wrongly availed and utilized. So this also we have seen. Suppose if you have compensation cess, don't take that in the total. In the total you should take only IGST. Here we don't have CGST, SGST. Had we had CGST, SGST, that we would have taken. Sir, this circular is given in the context of IGST. Does it mean for CGST, SGST, this circular is applicable or not applicable? So they have not given any specific point for this. You know why for IGST they gave? Because IGST credit can be utilized for payment of CGST, SGST liability. That's why they gave. But CGST, SGST credit also can be utilized for payment of IGST. Na? Means logically the principle laid down in this circular can be applied even for CGST, SGST, IGST. So whenever you wrongly avail any credit, CGST credit, SGST credit or IGST credit, ensure that you are having the total column ITC which is balance maintained. If you maintain the balance, you don't have to pay the interest. That is with respect to this. Okay. Next. So this is related to the interest computation there under section 50 subsection 3. So come back, see the other aspects. Then look into TDS and TCS, page number 126. So query here. Sir, then in case of wrong availment of IGST, can we reverse CGST and SGST in the given example? No, IGST only we need to reverse. Then how we should find the utilization of ITC wrongly availed? on GST compensation cess. Is it to be checked with total balance or only ITC of compensation cess? Only on ITC balance of compensation cess we need to see. We should not see the total, because compensation cess cannot be utilized for payment of credit of compensation cess cannot be utilized for payment of any liability na. So we need to see only compensation cess head. Then TDS and TCS under GST section 51 and 52. So TDS is basically applicable whenever we are making supplies to notified recipients. Who are called as the notified recipients? Government, central government, state government, union territory and local authority, government agency, public sector undertaking, or government entity in which government has invested greater than or equal to 51%. So then they are called as notified recipients. If any supply of goods or services are made to these notified recipients, they will be remitting some amount. In that amount, they will be deducting TDS. Whereas when TCS will be applicable, whenever we are making supplies through e-commerce operator, where e-commerce operator is not liable to pay GST on the transaction, means other than 95, then in that case e-commerce operator, while remitting the money to the supplier, he will be deducting TCS. So supplier should be different from the e-commerce operator. Suppose if I am the supplier, I have my own e-commerce platform through which if I am making supplies, TCS will not be applicable, and therefore only when the supplier is different from the e-commerce operator, then only TCS will be applicable and e-commerce operator will deduct the TCS. Then next, who is liable to deduct at what rate? TDS, who is liable to deduct? Notified recipients. What is the rate at which they will be deducting TDS? 2%. And TCS, e-commerce operator. And what is the rate of TCS? 1%. And non-applicability. So TDS, these are the cases where TDS is not applicable. Already November 23 exam they have asked a question, 4 marks question on this. What are the cases where TDS is not applicable like that? Supplier is an unregistered person. Logically, because whatever TDS that is being deducted, it will be made available to the supplier in their electronic cash ledger and they can utilize for payment of their liability. Basically, when he is unregistered, why he will be having an electronic cash ledger and liability? So due to that reason, TDS is not applicable. Supplies are exempted or non-taxable. Again, supplier don't have any liability, so there is no question of TDS that is applicable. Then contract value does not exceed 50,000. Contract value, not invoice value. So total value of supplies under the contract does not exceed 2,50,000. TDS concept not applicable. If the total value of supplies under the contract exceed 2,50,000, TDS applicable, but TDS is not computed on the contract value. TDS will be computed on the remitted amount, whatever money that is being remitted by the recipient to the supplier on that. Then supplies between notified recipients. Who are the notified recipients? Central government, state government, local authority, government agency, PSU or government body. Between them, if there is any transaction, PSU to government body or government body to central government, like that, if there is any transaction, on that TDS is not applicable. So supplies between notified recipients, TDS not applicable. And recipient liable to pay GST under RCM. So then also TDS not applicable, because the liability to pay GST itself is on the recipient na. Then what is the point in making the GST like TDS applicable to the supplier? Then next, location of recipient and the place of supply not in the same state. It's an intra-state supply. Intra-state supply chargeable to CGST, SGST, but the recipient is in the other state. He cannot deduct TDS. For example, government of Andhra Pradesh is having a building in Telangana. They appointed an architect in Telangana to do the repair to this building. So supplier architect Telangana and place of supply location of immovable property Telangana. It's an intra-state supply chargeable to CGST and Telangana SGST. But government of Andhra Pradesh is in another state. They cannot deduct TDS 1% towards SGST. Due to that reason, TDS is not applicable. So what is that? It's an intra-state supply and the recipient is located in the another state. TDS not applicable. These are the 6 cases where TDS is not applicable. Whereas if you see here TCS, TCS is applicable in case of e-commerce operator. However, for TCS also there are some non-applicabilities. What is that first non-applicability that we know? If it is a notified service under 95, TCS is not applicable. Here also same point. If the supplier is unregistered, TCS not applicable, because whatever TCS that is deducted by the e-commerce operator will be made available to the supplier and the supplier can use it for payment of liability. When the supplier is unregistered, there is no cash ledger. Due to that reason, TCS not applicable. Supplies are exempted or non-taxable. Same. as the supply itself is exempted or non-taxable, there is no question of TCS. Then payment is not collected by e-commerce operator, means payment is directly collected by the supplier, so e-commerce operator cannot deduct TCS. Then TDS is computed on the amount remitted to the supplier by the recipient. Remember, it's not on the contract value. How much amount the remittance is made, on that only TDS is computed. TDS not applicable if it is an intra-state supply and the recipient is in the other state. Then there are some special procedures applicable here. So there is a supplier who is opting for composition scheme and he want to make supply of goods through e-commerce operator. Can he make supply of goods through e-commerce operator? Yes. So in that S9 RCM, supply of services through e-commerce operator is only the restriction. Supply of goods through e-commerce operator can be made. But that supplier has to ensure one thing. What is that? He should not make interstate supplies. Can opt for composition scheme but should not make interstate supplies. Also, e-commerce operator has some obligations. What is that obligation? They should ensure that the supplier is not making interstate supplies. So this point we discussed in composition scheme. Now this point is there in this chapter, like they have an obligation, like they should not allow the supplier to make interstate supplies. And whether TCS will be applicable or not. Yes, even the person opting for composition scheme is also a registered person. So therefore TCS will definitely be applicable. And this TCS will come in their credit ledger or cash ledger? Cash ledger. So they will not have credit ledger. Why a person opting for composition scheme will not have credit ledger? Because they cannot take ITC and their invert supplies. So it will anyhow go into their cash ledger and they can use it for payment of their composition tax liability. So 1% or 5% as the case may be. So should deduct TCS. And all these details should be declared in GSTR 8. GSTR 8 is a return to be filed by the TCS deductor, that is CMP 8. CMP 8 is to be filed by 18th of the month following every quarter by composition scheme. GSTR 8 is a return filed by a person who is deducting TCS, that is e-commerce operator. What is the time limit for GSTR 8? 10th of the month following every month. TDS deductor will file GSTR 7. Okay. Now, another point you see, there is a supplier who is unregistered and that person wanted to supply goods through e-commerce operator. Kindly change it to goods. So there is a supplier who want to supply goods through e-commerce operator. Before amendment, every supplier of goods through e-commerce operator was compulsorily required to get registered. But now there is a relaxation. If that supplier is making only intra-state supplies, then he is required to get registered only when his aggregate turnover exceeds threshold limit. So supplier is unregistered whose aggregate turnover not exceeded the threshold limit for registration. However, the supplier should obtain one unique enrollment number, correct or not? And obtaining unique enrollment number only, he can make supplies through e-commerce operator. Now, what are the obligations on this e-commerce operator? E-commerce operator should ensure that the supplier has obtained the UEN and then only they should allow these supplies through their platform. Number 2, e-commerce operator should not allow that supplier to make interstate supplies. TCS not applicable. Why TCS not applicable? Because that supplier is a unregistered person. So not required to deduct TCS. Not required to deduct TCS and they should declare these details in GSTR 8. Sir, when there is no TCS, why they need to show no non-TCS supplies, like that one line is there, in that they need to show in order to know that what are the turnover of this unregistered supplier which is made through e-commerce platform for purpose of computing the aggregate turnover of the supplier. Okay, so this are with respect to this additional obligations on the e-commerce operators. Then look into the next page, computation and compliance. So TDS under section 51 is computed on value of supply excluding GST, and whatever TDS that is deducted shall be payable to government, and TDS deductor is required to file one return. What is that return? They need to file GSTR 7, and that GSTR 7 should be filed by 10th of the month following every month. In addition to this, this TDS deductor is also required to file a certificate, that is GSTR 7A, and there is no time limit for this TDS certificate. Whereas TCS, if you see, TCS deductor, while computing the TCS, they need to take whatever is the payment towards the contract value minus returns during the month. So sales returns should be excluded, because in e-commerce platform there will be lot of returns. So sales made during the month minus returns during the month, that should be taken for computing the TCS, and whatever TCS that is deducted will be payable to government, and they need to submit a statement in GSTR 8. TDS deductor GSTR 7, TCS deductor GSTR 8. What is the time limit? Same time limit, 10th of the month following every month. And TCS deductor is not required to give any certificate. Then, is there any late fee for delay in filing TDS and TCS return? Yes. In case of TDS return, see the late fee, 25 rupees per day subject to maximum 1000. Why? Government. Whereas in case of TCS, 100 rupees per day subject to maximum 5000. Why? Private. So government is filing this return, so lesser late fee, 25 rupees per day subject to maximum 1000. This is under each act, means under CGST Act we need to pay as well as SGST Act we need to pay. Whereas TCS, late fee for delay in filing return 100 rupees per day subject to maximum 5000 under each act. TDS operator, TDS deductor is not required to file any annual return, but TCS deductor is required to file annual return GSTR 9B by 31st December of the succeeding financial year. And in both the cases, if there is any delay in payment of TDS TCS, they need to pay interest at the rate of 18% for the delay. Here the due date will be counted from 10th, not 20th. And even a general penalty can also be levied, which is up to 25,000 under CGST and up to 25,000 under SGST for non-compliance. And there is a specific penalty for TDS TCS default, which is under 122 subsection 1, that is 100% of the TDS TCS involved or 10,000, whichever is higher under each act. Now whatever TDS TCS that is deducted by the notified recipient and the e-commerce operator will be made available to the supplier in their GSTR 2A. So TDS TCS deducted shall be reflected in 2A of the supplier, which is reflected in electronic cash ledger. As the money goes into cash ledger, they can use it for payment of any liability, tax, interest, penalty, etc. And TCS return, GSTR 8 alone can be rectified. GSTR 7 cannot be rectified, but GSTR 8 can be rectified. What is the time limit of rectification? 30th November of the succeeding financial year or date of filing and return, whichever is earlier, just like time limit for availment of ITC. Then this is an illustration on TCS as to how TCS will work. There is a supplier, MI Mobiles, e-commerce operator Flipkart, and there is a buyer. So now what happens is that first MI enters into contract with Flipkart to list their mobile in their platform and sell it for a commission of 1000 rupees plus GST 18%. Now buyer will place an order with e-commerce operator, and e-commerce operator will deliver the mobile, and the buyer will make payment of 12,800 rupees. So here invoice will be raised by MI to e-commerce operator. They will deliver the mobile along with GST 10,000, 28%, 12,800. So that 12,800 is collected from the buyer. Now e-commerce operator has got 12,800. Out of this 12,800, what is that they will be deducting? So first they will be remitting their TCS. What is the TCS? 1%. 1% of what? Including GST or excluding GST? Excluding GST. So 10,000 into 1%, they need to pay TCS 1% of 10,100. Plus they also get a commission. On that commission they need to pay GST. So 1000 into 18%, 180. So these two they will pay. Now how much will be the amount remitted? 12,800. From this 12,800 they need to get the commission. So minus 1000, minus GST on commission 180, minus TCS 100. So the remaining amount will be remitted to the supplier. That is this amount remitted. So that is 11,520. Now the supplier, this 180 can be taken as ITC and this 100 rupees can be taken as TCS credit. And the supplier has to pay a liability of 2,800 na. On the 2,800, this 180 and 100 can be reduced. So 2,520 will be the net liability. So this is how the TCS will be operated. Then one more important point you remember, TCS deductor is required to register in every state. So because if the supply is intra-state, the TCS deductor has to deduct 0.5 CGST, 0.5 SGST, which means supplier in Tamil Nadu, recipient also Tamil Nadu. But the e-commerce operator is in Karnataka. Now they need to remit 0.5 CGST and 0.5 SGST in Tamil Nadu. Means they need to register in Tamil Nadu. Means e-commerce operators will register in every state where they have suppliers. And in case when they are required to register, do they require to have a physical place of business? No. So in REG 1, that is registration application, part A, they will mention the state where they want to register. In part B, they will give their principal place of business address only. That is Karnataka address only they will give, but in Tamil Nadu they can get the registration. this facility is given for TDS and TCS deductor. So these are the points that we have with respect to payment process. Okay, so we completed this, and so there are 2 queries. No. Fine. And one communication to you, one small request, that is, actually no, both my kids are not feeling well and I have to be there, so I don't wanted to cancel this batch, that's why I took for 3 days. So I need 1.5 day and half a day for discussion of MAY24. So I will take a break and I will let you know which 2 days, and in those 2 days I will complete the remaining portion including customs and MAY24. Is it okay? Done? But that will not be some time long and all, mostly by 23rd, 24th, like that, just a gap of some 5-6 days. Thereafter I will do this. Okay, sorry for the inconvenience, even for YouTube also. And so remaining chapters, whatever we have, plus customs, we have some petty topics only in this, plus customs we have, and then MAY24 questions. That MAY24 questions I will give you as to what are those questions. A PDF I will make it available to you. You can take a print of it if you don't have the solved workbook. If you have the solved workbook, it will be from the solved workbook only. Otherwise, if you don't have, you can take a print of it. So that also we will be covering. Just 2 more days is required. I'll cover there. Okay, fine. So now we will proceed to the next area, that is returns under GST. Okay, say this. So returns under GST. So first we have what are the various returns and what is the due date of filing each and every return we need to know. Then the late fee computation we need to know, and then QRMP scheme. But QRMP scheme, interest computation, is a long time pending question that can be tested. So first we will see about QRMP. What is QRMP? Quarterly return, monthly payment. So to whom this QRMP will be applicable? To a person whose aggregate turnover in the previous year does not exceed 5 crores, to them QRMP scheme will be applicable. And as they are required to file the returns on a quarterly basis, so what is the due date of that quarterly return? GSTR1, usual time limit is what? 11th of the month following every month. Whereas in case of QRMP, it is 13th of the month following every quarter. Then GSTR3B, due date, usual due date is what? 20th of the month following every month. But under QRMP, GSTR3B due date is 24th of the month following every quarter. In case of states other than GMCA and states below that, for remaining states it will be 24th. But for GMCA, G for Gujarat, in India map you see the middle states, Gujarat, Madhya Pradesh, Chhattisgarh and Andhra Pradesh, and states below that. States below that is what? Maharashtra, Karnataka, Kerala, Tamil Nadu, Puducherry, Goa, etc. For these places, even Telangana also, it will be 22nd. For the states above GMCA, so northeastern states, north states, etc., it will be 24th. Okay, so GSTR1 will be filed on a quarterly basis by 13th of the month following every quarter, and GSTR3B on a quarterly basis by 22nd or 24th of the month following every quarter. And they have to pay tax on a monthly basis. Even though returns they file on a quarterly basis, but tax they have to pay on a monthly basis. They have 2 methods, fixed sum method and self-assessment method. This fixed sum method or self-assessment method they can choose for every month. Like in the quarter, first month FSM, second month SAM, they can choose, and all 2 months they can choose FSM, all 2 months they can choose SAM, so they can choose anything, but they have to pay tax. By when they have to pay? 25th of the month following every month for the first and second month of the quarter. Why not third month? Anyhow, for all these 3 months, they will be filing GSTR3B. In the GSTR3B, they will be paying the liability of the third month also. So first month and second month liability, they have to pay by when? 25th of the month following every month. monthly payment of tax through PMT6 using fixed sum method or self-assessment method by 25th of next month for 2 months in a quarter. And with respect to their B2B supplies, so with respect to B2B supplies, as they are filing returns on a quarterly basis, their recipients will take ITC also on a quarterly basis. To avoid that, they have been given a facility to file on a monthly basis the invoice details. So that invoice details they will be showing. Which invoice details? B2B or B2C? B2B invoice details they will be showing in one facility. What is the name of that facility? Invoice furnishing facility. By when they need to file that facility? For the first month and second month in the quarter, by 13th of the next month. What about third month? Anyhow, for all these 3 months, they will be filing a GSTR1. So in that GSTR1, they can show the details. Okay. B2B invoices may be furnished on a monthly basis through invoice furnishing facility, and these details will be reflected in 2A and 2B of the recipient. And QRMP scheme is basically GSTIN wise. It's not like in composition scheme, all in all out. All the registrations of a person should be under composition scheme, or all the registration should be under normal scheme, not like that. So QRMP is GSTIN wise, means each and every registration of a person, they can choose whether to go for QRMP or to continue in the normal monthly returns itself. QRMP is GSTIN wise, and distinct person have the option to avail the scheme for one or more GSTIN. Then some additional points related to this. What is the time frame for opting in QRMP? So remember, A for after, B for before. One is A is 1 is 1 month, 2 is 2 months. So 1 month before start of the quarter, 1 month after start of the quarter, and 2 months before start of the quarter. For example, April to June. What is the start of the quarter? April 1st. 1 month after April 1st means April 30th. 2 months before April 1st, that is 1st February. So that is the time limit by which they need to opt. So 1 month after commencement of the quarter, 2 months before commencement of the quarter, they should decide for opting into QRMP. What is the condition for opt-in? Last return must have been furnished on the date of exercising the option. Because if you have monthly returns pending, you cannot go for QRMP. All those monthly returns should have been filed, then only you can go for quarterly returns. Then GSTR1 or availing IFF facility. Is QRMP mandatory or optional? QRMP itself is optional, but in that QRMP, IFF is another option. You understood? QRMP itself is optional. In that, whether you want to file the invoice details, B2B invoice details or not, is again an option. So you can decide for either filing GSTR1 and showing all the invoice in GSTR1, or you can file for the first month and second month invoice furnishing facility for showing your B2B supplies. The scheme provides the IFF facility for first 2 months to furnish the details of outward supply till the 13th of the succeeding month, and this facility is optional. And whatever details which are furnished using IFF facility need not to be required to be refurnished in GSTR1, because already we showed these details. It will be carried forward in GSTR1. What is the disadvantage of not going for IFF? All these details again we need to enter in GSTR1. Then next there is a restriction here. Maximum 50 lakhs worth of invoices only can be shown. 50 lakhs value, not tax. 50 lakhs value of invoices can be shown in IFF, because the logic is 50 lakhs in 1 month. On an average they are doing. So we have 5 crores. If you cross 5 crores, you cannot go for QRMP na. 5 crores. 5 crores is for 1 year. So divided by 12 months, so 46.67, they rounded off to 50. But they are taking the assumption that the turnover will be evenly spread throughout the year. Why it will be evenly spread? It may change, but they gave this exception. The details of outward supplies shall not exceed the value of 50 lakhs in each month. On non-opting of this facility, details of outward supply to be reported in GSTR1. And payment method. What are the 2 payment methods that are there? Fixed sum method and self-assessment method. In fixed sum method, we will be taking, like last quarter GSTR 3B. In that last quarter GSTR 3B, we will be taking, so into 35%. Why? Last quarter 3B means that is for 3 months. 3 months divided by 3, 33.33, rounded off to 35, means this month first month in this quarter, you pay 35% of the liability of last quarter. And second month also pay 35%. What about third month? Anyhow, you pay the actual liability. So 35% of the previous quarter, gross liability or net liability? Net liability, not gross liability. Net liability, you need to discharge as your liability under fixed sum method for the first month and second month in the current quarter. Suppose if you go for self-assessment method, you calculate how much is your actual liability and you can make the payment. Sir, I am under fixed sum method. Previously, I was not under QRMP. I was under normal. Then monthly 3B liability is there. 100% of that 3B liability, monthly 3B liability I will pay for this month. Assumption is what? Whatever was your liability of previous month, that will be taken. Sir, what if my previous month liability is 0? Then 0. It is advantage to go for FSM. Really, it's an advantage to go for FSM because previous month into 100% or previous quarter into 35% is 0. So we don't have to pay anything under fixed sum method. Means beginning of the registration, when you go for QRMP, it's really advantageous. But this advantage we cannot enjoy for more quarters, first quarter only. Again, first quarter some actual liability will be there na, that will be taken as the precedence for the second quarter. So 35% of the tax liability in cash paid in the preceding quarter if it is quarterly filer of GSTR 3B, whereas monthly filing of GSTR 3B, 100% of tax liability in cash paid in the last month of the preceding quarter. Whereas in case of self-assessment method, so I told you normally we need to compute actual liability, how much is our gross liability, how much is our ITC, that much we need to pay. Then sir, we can go for self-assessment method, how much ever money we want we can put it now sir. The disadvantage is that if there is any difference in the liability because of self-assessment method you opted and you paid some 10,000 but your actual liability is 15,000. This difference 5,000 is there na, on that 5,000 you need to pay interest. Had it been fixed sum method, under fixed sum method it is 10,000, you paid 10,000, but your actual liability is 15,000, on that 5,000 we don't have to pay interest. That is the advantage of fixed sum method. If you follow what Chechi says, no interest. If you follow something on your own, interest you have to pay. You understood or not? What is that Chechi is telling? You take previous liability into 35% or into 100%, that only you take. So government is telling something, you follow that. If you follow that, no need to pay any interest on the difference amount. If you follow something on your own, you pay the interest, no other go. That is this. Any change in the manner of filing GSTR 3B? No. The manner of declaring the tax on outward and inward supplies are same, but the tax paid in the first 2 months would now be offset along with the third month liability. So that is the only change. Then compulsory opt-out. So when the aggregate turnover exceeds 5 crores in any quarter, because what is the limit for QRMP? 5 crores na? First quarter 3 crores, yeah? Second quarter 3 crores. So 3 plus 3 is what? 6 crores. Means you crossed 5 crores. So third quarter you cannot go for QRMP, you need to file on a monthly basis only. Levy of late fees. Yes, late fee will be applicable for delay in filing returns. So here also there is returns na, GSTR 1 and GSTR 3B. That is only considered as returns. IFF is not considered as return. For delay in filing IFF, there is no late fee. Only for this GSTR 1 and GSTR 3B, the late fee will be applicable. Now, look into this interest computation. Interest computation only very important, that can be tested. So, first we will see under fixed sum method. Under fixed sum method, we need to pay interest at the rate of 18% per annum from 26th of the month till the date of payment if there is a delay in payment of any tax pertaining to the first month and second month. For example, so July to September, we are under QRMP, and for the month of July, for the month of August, and for the month of September, we need to pay some taxes. And during April to June, we were under QRMP, and during this April to June, in our GSTR 3B, net liability came to 1 lakh. Net liability 1 lakh. So July month, how much is the FSM liability that I have to pay? 35,000 I have to pay, and again August month I have to pay FSM liability 35,000, and this 35,000 I have to pay by when? I have to pay by 25th of August, correct? If I pay it late, which one I pay late? July month, if I pay late, then I have to pay interest. From when I have to pay interest? 26th August I have to pay interest. At what rate? Usual rate of interest, 18% till the actual date of payment. Same way, August month 35,000, by when I should pay? I should pay by 25th of September. If there is any delay beyond the 25th September, then I have to pay the interest. So please check the first point. For the first 2 months, if there is any delay in payment, so we need to compute the interest at 18% from 26th of the next month till the actual date of payment. And this point is common whether it is fixed sum method or it is self-assessment method. With respect to first month or second month of the quarter, if the tax is not paid by 25th of next month, we need to compute interest at 18% from 26th of next month till the date of payment. This is common between FSM and SAM. Now, thereafter, we need to ascertain what is our actual liability. So, we need to check what is our actual liability. The actual liability of July month is 40,000 and 45,000 and 50,000. Now, this 40 plus 45 plus 50, so differential amount if any, for July to September, by when we need to pay? Suppose if you are in Tamil Nadu, what is the due date of GSTR 3B? GSTR 3B due date is 22nd of October, correct? So now, what is the difference amount that you need to pay? 40 plus 45 plus 50 minus 35 and 35 already which we paid. Sir, 35,000 already you paid. So now the differential amount only you need to pay. So what is the differential amount you need to pay by? So that is 50 plus here 10,000, 60 plus here 5,000 difference. So what is the difference amount? So the difference amount, if you see, 5,000 and here 10,000 and here entire 50,000, that should be paid. So 65,000 you need to pay by 22 October. Suppose if 3B file late, then on the 65,000 we need to pay interest. At what rate? 18% till the actual date of filing 3B. See the third point. So if 3B for the quarter is filed late, interest at 18% per annum from 23rd or 25th of the month following the quarter till the date of filing 3B on the net liability mentioned in 3B. So therefore, this is the net liability 65,000. So this 65,000 is the net liability, and that we need to pay interest because of filing 3B late. Now, there is a 5,000 rupees difference for the first month. This 5,000 rupees pertains to which month? July month. We should have paid it by when? 25th August. But this 5,000, when are we paying? 22nd October. Whether we need to pay any interest? No, because this is which method? Fixed sum method. Again, August month, difference amount 10,000 rupees. This 10,000 we should have paid by when? 25th of September. But when are we actually paying it? 22nd October. Are we required to pay any interest on the difference amount? No, because we are following fixed sum method. That's why in case of differential tax, that is actual tax minus tax already paid with respect to first month and second month of the quarter, we don't have to pay any interest under fixed sum method. But this is the place where in self-assessment method there is a difference. What is it they are telling? Suppose if the same situation is related to self-assessment method, then you tell me what will happen. So 35,000, first interest same, last interest also same. What is the first interest? 35,000 and 35,000. If you are not paying by 25th of next month, then you need to pay interest, correct? Then last interest, what is it? Last interest 65,000. If you are not paying by 22nd of October, then also you need to pay interest. But the middle interest is only different. What is that? Difference amount. On the difference amount also we need to pay interest. Which difference amount? 5,000 and 10,000. 5,000 pertains to which month? July month. By when we should have paid? 25th of August. But when are we paying? 22nd of October. Even though we paid it by due date of 3B, we need to pay the interest at what rate? 18%. From which date to which date? From 26th of August till the date of 22nd October, we are filing 3B. You got it? So on the difference amount we need to pay interest. Interest at 18% per annum from 26th of next month till the date of payment. Under which method this interest is applicable? Self-assessment method. Be careful in the question. They can definitely test it related to the interest computation. So this is about QRMP, quarterly return monthly payment. Then look into the next one, time limits for various returns. So first return is GSTR1. So GSTR1, what is the due date? Who will be filing GSTR1? Every registered person. What does it contain? Outward supply details. And what is the time limit? If it is monthly GSTR1, 11th of the next month. If it is quarterly GSTR1, 13th of the month following every quarter. Okay. Then IFF. What is the time limit for IFF? First 2 months of the quarter, we need to file this IFF by 13th of the next month. 13th of the month following every month. Then 1 series, okay. 2 series, GSTR2, we will not file. We will get it. So we don't have to bother about time limit. But 3 series, only one we have, 3B. 3B, when we are required to file 3B, so every registered person is required to file 3B that contains the details of output tax, input tax, net GST payable, interest, late fee, etc. And this GSTR 3B is a summary return that contains consolidated details of everything. But GSTR 1 contains invoice details. 3B, when we should file, time limit. So in case of monthly, 20th of the month following every month. In case of quarterly, 22nd or 24th of the month following every month. So what are the notified states for which 22nd will be applicable? Underline GMCA. GMCA and below. GMCA and below. That is Gujarat, Madhya Pradesh, Chhattisgarh, Andhra Pradesh and below states. So for them, notified states, it will be 22nd. For other states, it will be 24th. Then next series is GSTR4. GSTR4, who will file? A person opting for composition scheme, and it's an annual return. What is the time limit for filing this annual return by a person opting for composition scheme? 30th April of the succeeding financial year. Whereas CMP8 is also a return which is filed by a person opting for composition scheme, which is a quarterly return by 18th of the month following every quarter. Then next series is GSTR5. GSTR5, who will file? NRTP, non-resident taxable person, who is coming from outside India to India, who is not having any fixed place of business in India. And that GSTR5, what is the time limit? So basically NRTP will not get a permanent registration, temporary registration. So 13th of the month following every month, or 7 days from expiry of registration, whichever is earlier. That is the time limit by which they need to file. Then 5A. 5A will be by a OIDR supplier located outside India. They need to get registration in India. They need to file. GSTR 5A is like GSTR 3B, 20th of the month following every month. That's a regular time limit. So this is by OIDR supplier. Then GSTR 6. GSTR 6 we discussed in ISD, Input Service Distributor. What is the time limit for that? 13th of the month following every month. Monthly they need to distribute the credit. By 13th they need to file this GSTR 6. GSTR 7 and 8. 7 is what? TDS. GSTR 8 is TCS. What is the time limit? 10th of the month following every month. Then GSTR 9 and 9B. So who will be filing 9 annual return? And annual return 9B is by e-commerce operator. And what is the time limit for this annual return 9? 31st December of the succeeding financial year. Remember, GSTR 9 is required to be filed by a person whose aggregate turnover during the financial year exceeds 2 crores. GSTR 9 mandatory. GSTR 9 mandatory if aggregate turnover during a financial year exceeds 2 crores. If aggregate turnover in a financial year exceeds 2 crores, GSTR 9 is mandatory. Otherwise, it is optional. Whereas 9C, you see, 9C was previously an audit statement and now it's a self-certified reconciliation statement. To whom 9C is applicable? If their aggregate turnover in a financial year exceeds 5 crores, so then 9C will be applicable. And time limit is same. For all 9 series, the time limit is 31st December of the succeeding financial year. Then the next one is GSTR 10. GSTR 10, is a final return. Who will be filing this final return? person whose registration is to be cancelled. So what is the time limit of this final return? 3 months from the date of cancellation or order of cancellation, whichever is later, not earlier, whichever is later. So this later points alone, please highlight and remember here, because usually whichever is earlier is by default we will remember, we will know, but later is the place where we get confused. So somewhere while preparing, so you write somewhere in the book or some sticky note and paste it, which and all places we will take whichever is later. So that points you keep in mind, so that you will not get confused sitting in the exam hall, okay? Because sitting in the exam hall, all kind of doubts we will be getting. Sometimes direct tax and all we will learn in indirect tax exam. Yes, trust me, promise. Many students told me that, sir, I did not remember anything of DT in DT exam, sir, but in IDT exam, everything I learnt in DT I am able to recollect, sir. Too much pressure. It will happen like that, okay? So IDT will not remember. That's why. So many times you need to revise, and this kind of small points and all you need to write and keep, okay? Sometimes it will be like maximum 2 lakhs, minimum 2 lakhs. So this confusion and all will come, okay? Then, so it is whichever is later. Moreover here, 3 months from the date of cancellation, but order of cancellation don't add 3 months. Order of cancellation, A is date of cancellation plus 3 months. B is order of cancellation, whichever is later. Sir, what is the difference between this? Date of cancellation is the effective date of cancellation. Order of cancellation is the date on which we got the order to our hand. But in that order, they will mention the effective date, because they would have suspended our registration backwards. So that date will be given as the effective date of cancellation. From that date, effective date plus 3 months or order of cancellation, whichever is later is the time limit for filing final return, and final return will be filed by a person whose registration is cancelled. GSTR 11 is to be filed by UIN holder. UIN holder will claim refund. Refund of what? Their inward supplies. So all the inward supplies details they will be showing in GSTR 11 at the time of filing refund claim. How they will file the refund claim? On a quarterly basis. So quarterly basis, 2 years from the end of the quarter they will file. At the time of filing refund claim, they will be filing GSTR 11. Then look into the next one, sequential filing of returns. So these are some special points, okay? And one query here, sir, annual return for composition scheme is GSTR 9A or GSTR 4? Initially 9A. Initially 9A for few years. Thereafter 9A they have scrapped. In the place of 9A they have brought in GSTR 4. So don't worry, if you write GSTR 9A also, that won't be a wrong answer. So GSTR 9A or 4, but the apt one is at present GSTR 4. But anyway, if you are coming across GSTR 9A, that was the annual return for that particular financial year, and therefore that is now scrapped. At present, what is that you need to remember? GSTR 4 by 30th April of the succeeding financial year. Then special points on return, sequential filing of returns. So first we need to file GSTR 1 of this month, then only you can file 3B. Without filing GSTR 1, you cannot file 3B of that month. Same way, without filing 3B of the previous month, you cannot file the GSTR 1 of the second month. And then same way 3B, GSTR 1. Like this, there is a sequential filing of returns. 2 points you need to remember. Without filing GSTR 1 of the current month, we cannot file 3B of the current month. Then without filing GSTR 3B of the previous month, we cannot file the GSTR 1 of the current month. Then second point, government on the recommendations of the council may allow to file GSTR 1 even if GSTR 1 is not filed for prior periods. Yes, they have given, from time to time they will be coming out with this called as amnesty scheme. So wherein if you have not filed any returns and all, don't worry, we will give you one shutter, we will open the shutter and you can file all those returns and all now, so that you can escape from cancellation of registration. From time to time this amnesty scheme is given, so that provision is this. Then third, in the following cases, this already we discussed section 38, what are the cases where even though supplier files GSTR1, but it will come under ITC 2B as ITC not available. Then 88C and 88D also already we made a discussion related to this. Then look into the next one. Who are not required to file GSTR1 or GSTR3B? Remember tonic T square, T for TDS TCS deductor. Why? Because they will be filing GSTR7 and GSTR8, so 1 and 3B not applicable to them. OIDR supplier, because they will be filing GSTR5A, so that's why 1 or 3B not applicable. Then NRTP, they will be filing GSTR5, so due to that reason 1 or 3B not applicable. Input service distributor, because they will be filing GSTR6, that's why it will not be applicable. C, composition scheme, because they will be filing CMP 8, so that's why GSTR 1 or 3B not applicable. So remember tonic, in the tonic T square they are not required to file, so GSTR 1 or 3B. Who are not required to file annual return? Remember CAG tonic, okay, only one T, not two T's, only one T. CAG tonic, CAG, that is persons whose books of accounts are subject to audit by Comptroller and Auditor General, they are not required to file annual return. Then T, sir, TCS deductor is required to file annual return GSTR 9B, but TDS deductor not required to file, so TDS deductor. O, same, OIDR supplier. N, non-resident taxable person. I, same, input service distributor. But see, composition scheme they will file annual return, so it is casual taxable person. From this discussion, you tell me what is the return that will be filed by a casual taxable person? Who is a casual taxable person? Who come from another state to this state, who is not having any physical place of business in this state. What is the return that he will be filing? GSTR 1 and 3B. So somewhere you write down a casual taxable person is required to file GSTR 1 and GSTR 3B. Casual taxable person is required to file GSTR 1, and GSTR 3B. They are required to file this. Only NRTP not required. And casual taxable person, are they required to file annual return? No, they are not required to file annual return. Then we are moving on to late fee for delay in filing returns. Late fee purely for MCQ. Okay. Now for 1 mark, if at all a MCQ comes, it will be for 1 mark. But sir, should I remember this for 1 mark? No, why to leave that 1 mark also? Okay. So we'll make an effort. Maybe if the MCQ is easy, 1 mark we will get now. We will learn here. If it is not coming, okay. If it is coming, but it is so easy, then outside when you come out of the exam hall, your friend will be telling, hey, you know what, late fee came, this much only is the answer. And you will feel guilty. Yeah, I have not written this. So this guilt should not be there. That's the reason why you learn this. So late fee for delay in filing return. What is that? GSTR 1 and GSTR 3B. Mostly GSTR 1 and 3B only will be tested, or annual return will be tested. So these two you remember, try to remember. GSTR 1 and 3B. What is the late fee? If it is nil return, 10 rupees per day. If it is other than nil return, 25 rupees per day. All these late fees under one act, CGST Act. The same amount is payable under SGST Act, but we don't have any late fee under IGST Act. So 10 rupees per day and 25 rupees per day. Which case 10 rupees per day nil return. Other than nil return, 25 rupees per day. Subject to maximum. If it is nil return, maximum 250 rupees. Suppose if the delay is 30 days. 30 days into 10, 300. But the maximum is only 250. Whereas, in case of other than nil return, there is a maximum late fee. How much is that maximum? If your turnover during previous year exceeds 5 crores, 5,000. If your turnover during previous year exceeds 1.5 but does not exceed 5 crores, 2,500. If your turnover during previous year exceeds does not exceed 1.5 crores, 1,000. So slab you remember, 5,000, 2,500, 1,000. When 5,000, if your aggregate turnover during previous year exceeds 5 crores. If it exceeds 1.5 but does not exceed 5, 2,500. If it does not exceed 1.5 crores, 1,000. Then next GSTR 5, GSTR 5A and 6. For all these three, it is same. Nil return, 10 rupees per day. Other than nil return, 25 rupees per day. Maximum, same, 5,000. No change in that. So nil return 10 rupees per day, other than nil return 25 rupees per day, subject to maximum 5,000. GSTR 7 and 8 already we learnt. For 7 it is what? 25 rupees per day, subject to maximum 1,000. For GSTR 8, 100 rupees per day, subject to maximum 5,000. Then GSTR 4. To whom GSTR 4 is applicable? Concentrate. To whom it is applicable? Person opting for composition scheme. Person opting for composition scheme, what should be the maximum turnover during previous year? 1 point. Does not exceed 1.5 crores. If does not exceed 1.5 crores, what is the maximum late fee for GSTR 1, GSTR 3B? 1,000. Correct. Copy paste. So if it is nil return, 10 rupees per day, subject to maximum 250. If it is other than nil return, 25 rupees per day, subject to maximum 1,000. Why sir maximum 1,000? Because their turnover during previous year does not exceed 1.5 crores. Then GSTR 9, 9B, 9C for annual return. So there is a late fee. What is a late fee? See, 3 slabs are there. First you see per day late fee. If your turnover exceeds 20 crores, if your turnover exceeds 20 crores, 100 rupees per day. If it exceeds 5 but does not exceed 20, half, 50 rupees per day. If your turnover does not exceed 5 crores, then it will be half of that, 25 rupees per day. Okay, so per day late fee you try to remember. More than 20 crores previous year, how much? 100. More than 5 but does not exceed 20, half, 50. Does not exceed 5 crores, 25. This is per day late fee. Maximum late fee. First case 0.25%. 0.25% of what? Turnover. Next 2 cases 0.02% of turnover. Okay. This is the late fee, and all these late fees is under CGST Act and respective late fee payable under SGST Act also. But the late fee under IGST Act is not applicable if the late fee under CGST, SGST is paid. Then there are some returns which can be filed through SMS. What are they? Nil return. It should be a nil return. What is a nil return? All the fields in the return should be nil. Then only it will be called as a nil return. And GSTR 1, GSTR 3B and CMP 8. These 3 returns we can file through SMS, but all the entries in the return should be nil. Then first return. Who will be filing this first return? So immediately after our registration, so the first return that we file, we should mention not only the details of the month for which we are filing the returns, even for the period before the date of registration. For example, you say take liable to register is 20th of March 2023, and we applied for registration and we got the registration certificate. That registration certificate we got on 14th of April 2023. Now what is the first return that we will be filing? We will be filing first return for April 2023, correct? First return we will file for April 2023. Because 14th April only we got registration. First return for April 2023. This first return for April 2023 should not only contain the details of April 2023 but also March details. From the date you are liable to get registered till the date you got registration certificate, even those transactions also it should be included, because you need to pay GST on those transactions also. So every registered person who has made outward supplies in the period between the date he is liable to register, 20th March, till the date registration has been granted, 14th April, these details should be included in the first return, which is furnished by him after grant of registration. Then if you are required to file returns but you have not filed any returns, then what will happen? You will get a notice that is in GSTR 3A. So that notice in GSTR 3A, once you get, within 15 days of notice you need to file return. Sir, what will happen if you are not filing returns within this 15 days? That will lead to best judgment assessment. under section 62. Got it? So right there, if returns not filed, if returns not filed within 15 days after notice, within 15 days after notice, comma, best judgment assessment shall be initiated under section 62. So this is the consequence of not filing the return within 15 days of notice. First, you miss the due date, you will get a notice in GSTR 3A, and after 3A within 15 days you should file the return, otherwise they will pass a best judgment assessment order. Then see the next page, rectification of returns. So there is no concept of revision in returns in GST, there is only rectification of returns. What are the returns that can be rectified? GSTR 1, GSTR 3B and GSTR 8. But rectification should not be on account of scrutiny, audit, investigation or enforcement activities. And what is the time limit for rectification? 30th November of next financial year or date of filing annual return, whichever is earlier. In 5 places, the time limit is same. What are those 5 places? Time limit for availment of ITC, time limit for issuance of credit note, and time limit for rectification of GSTR 1, time limit for rectification of GSTR 3B, and time limit for rectification of GSTR 8. In these 5 cases, the time limit is common, 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. And then, how the details should be reported in GSTR 1. Outward supply details in GSTR 1, whether we need to show invoice wise or we need to show consolidated details. Say this. First we need to check, is it B2B or B2C? B2B, always invoice wise details we need to upload, correct? Whereas if it is B2C, B2C, interstate, intrastate. You see intrastate, always consolidated. So remember the first point, B2B, always invoice wise. B2C, intrastate, always consolidated. B2C, interstate. B2C, interstate, if the invoice value exceed 2,50,000 per invoice, invoice wise. If the invoice value does not exceed 2,50,000 per invoice, then state-wise consolidation needs to be done. Got it? Then, next one, section 48. So, role of GST practitioner. So, there is a concept of GST practitioner which was not much tested in the last attempts, any attempts, and therefore we may not get. If at all we get, this question we will get. What are the activities that can be performed by a GST practitioner? These are the only activities which can be done by them. So they can make application for registration, they can file the returns, and they can file the intimation for opting into composition scheme or withdrawal from composition scheme. They can make an application for refund and they can make payment of tax, and they can act as an authorized representative, and they can furnish information for generation of e-way bill, that is data entry they can do, and they can enter the details of ITZ4. What is ITZ4? Goods sent on job work and received from job work, and they can make application for amendment or cancellation of unique enrollment number. So usually transporter, warehouse keeper and supplier of goods through e-commerce operator, these 3 people will be obtaining unique enrollment number right there. So transporter, warehouse keeper and supplier of goods through e-commerce operator, who and all will get unique enrollment number? Transporter, even though not registered. Okay. Number 2, warehouse keeper, even though not registered. Warehouse keeper also, even though not registered. Number 3, supplier of goods through e-commerce operator. Supplier of goods through e-commerce operator. These 3 people, even though not registered, they will be making, like application for unique enrollment number. That application can be done by GST practitioner. So what are the 8 activities which can be done by GST practitioner? Come on. They can make application for registration, they can file returns, and they can make payment of tax or apply for refund, and they can file intimation for entry into composition scheme or exit from composition scheme. And thereafter they can act as an authorized representative, they can do data entry for e-way bill, and they can furnish the details of goods sent on job work, received from job work, they can make application for enrollment, unique enrollment number or amendment to unique enrollment number. Then what are the eligibility conditions? They should be citizen of India, because foreigners and all should not come and become GST practitioners, okay? So we create a exclusivity, Indian they should be, and person of sound mind and not adjudged as insolvent. Director disqualifications, all these are. So citizen of India, person of sound mind, not adjudged as insolvent, not convicted for an offense beyond 2 years. Means up to 2 years if he is imprisoned, okay, he can become GST practitioner. But he should not be convicted of an offense with imprisonment not less than 2 years. Not less than 2 years means what? Greater than 2 years. This is the eligibility condition, 4 conditions. Plus, he should also possess certain educational qualification here. Basically, they have given some list of educational qualifications, like they should be having degree, any degree, or they should be having this CA, CMA final or CS final they should have completed, like that. But previously any degree was there, but now an amendment they have made, so related degree they should have. Related degree means, so it should be like commerce, higher auditing, business administration, etc. So related to commerce. So then only they can become a GST practitioner. Previously, can an engineering graduate become GST practitioner? Yes. But now an engineering graduate cannot become a GST practitioner. So that's the amendment that they have made. Then, responsibility for correctness of particulars. So GST practitioner is filing returns. In this returns, there is a mistake. Now, who is held responsible? The registered person, not the GST practitioner. The responsibility for filing of returns or any incorrect particulars in the returns lies with the registered person. So GST practitioner should exercise due diligence while filing the returns, and he should make it available to the registered person. He should get an approval from the registered person through SMS or mail, and the registered person should check whether the details mentioned in the return is correct, and only after his approval the GST practitioner should file the return. And if there is no approval given by the registered person, deemed approval, that GST practitioner can file. The registered person, before confirming, should ensure the facts mentioned in the return are true and correct. However, failure to respond to the request for confirmation shall be treated as deemed confirmation. And GST practitioner shall prepare all statements with due diligence and affix their digital signature. If they are found guilty of misconduct, their enrollment will be cancelled. But there is no prosecution on them, imprisonment and all not applicable. Just their enrollment will be cancelled. So because these are the activities they can do, for this and all we cannot send them for imprisonment. So due to that reason, so there is no imprisonment on them. So this is about returns that we have completed. Okay. Now if you see, there are some miscellaneous concepts only, small concepts only which are left. So we have seen up to segment 10 everything. Then up to segment 10 are the important concepts, practical areas up to segment 10. So these questions, I told you important concepts in GST must complete. So that we have completed. Okay, all those concepts we completed. And up to segment 10, mostly practical questions, mostly. Thereafter, short note questions are MCQs, okay, and those short note questions are MCQs. So in that we have seen payment process, returns, etc. So and even refunds also we have seen. Thereafter, some miscellaneous topics we have that we will complete, and then even customs and FTP also we will see. Then we are left with MAY24 questions only. Sorry for the inconvenience. Just 2 more days I will let you know and we will complete that. Okay. Thank you. We'll meet in the next class.